this is a big win? Do you think? And I only ask that because when you talk to so many American CEOs who talk about all of the angst and hand-wringing that's happened over the last couple of days about this very topic.
Was it worth it to go through the angst? Or?
Was it worth it to go through the angst? And because I think there's some people who say that this outcome was possible with a different process, meaning that
I don't know if we know the.
We don't know.
We don't know
and that Denmark and NATO would have otherwise come to the table or were willing to make a deal.
It doesn't sound like there's ownership, from what I could tell. It kind of skirted that issue. I'm not sure that the framework is completely set, but I think what he talked about, not just Greenland, but the security of the Arctic and really the security of Western Europe, NATO, and that it all sort of plays into it.
And I have to imagine NATO's going to be part of it. NATO's going to be paying, perhaps now, for some of that,
We've seen this play out before, where the market is nervous about the possibility of things that we haven't seen very many times in the past.
Where the hell did that TV go?
Tariffs, whatever. You take it off for whatever reason. Now,
I think
we heard the biggest gain since November on some indices. And
it's the biggest gain for the S&P since November. I think maybe the key out of all of that is that he said that, the threat of a real war wasn't on the table. This was always
no, it never was, you stupid.
The journal talks about it, and I think answers your question, that there's a deal, but Europe had to hear these tough things about the way things have been operating in the past, where not only do we fund their security, but we fund their welfare state lifestyle through a strong economy. So the journal calls it climate piety and all these initiatives that they had. And they had to hear this. You can't just assume the United States is going to protect you and not give any money to NATO and then not give anything in return. And I think they needed to hear it, and I think that it's, the whole world is better off because of that speech.
Well, and I think that's the fundamental long-term question, because you look at what Mark Carney said just 2 days ago, and I know you have little time for Mark Carney in Canada.
And Canada, yeah.
But I do think you talk to a number of the largest Fortune 500 companies in the world who are here, at least privately, all of whom have a view, almost to a T, that from a process perspective, that there's long-term damage.
You didn't talk all 500, did you?
Not all.
It's amazing. It's amazing that you always seem to know exactly what they're thinking at any given time. So for a T,
I think I can speak with some authority that some of the most famed and respected CEOs that you respect.
So you actually
believe that even if
you're not
we got this deal,
you're not impressed with it. You somehow you are pointing out the downside of this. I didn't expect you to do that today. I really didn't. I came in and that was the last thing I really expected to hear.
I will tell you that I talked to a CEO this morning who everybody knows, who was watching this the Peace Board thing this morning, who said this is like being gaslit. We are being gaslit.
Is it a European CEO or
no? An American CEO who said this is like gaslighting.
What did David
This
Sachs?
is like the Board of Peace at the same time as every other country.
Can we bring David Sachs back? Did he learn nothing from what he told? I know he does, but he's also a Silicon Valley leader and talks to all of those other CEOs like Elon Musk. And what did he say to you? Did you?
I know what he said
to
me.
Democrats. Democrats are going to Democrats.
I'm not even talking to people I'm talking to people who have, by the way, voted for Republicans over the years. So this is not.
They voted for Mitt Romney. Okay.
I know you have you. If I remember, you wanted to vote for Mitt Romney too. So
I told you the last Democrat I voted for. I'll admit it. You remember?
Carter.
Yeah. So Carter. Still regret it.
I'm just suggesting that there's a short-term implication to the markets, clearly.
The last Republican
but I think the bigger question is what the long-term implications of what's just happened here. By the way, you talk to people in Denmark today, they're not like clapping in the streets. They're furious.
You were talking to people in Denmark too?
No, go read the papers. Go read.
Okay.
No, look. The Wall Street Journal editorial page is what it is. Go read a local paper in Denmark. But I have a very close friend who's from Denmark who sent me a whole bunch of stuff to look at. This is not a group of people who are thrilled.
Today, what day is it? Is it Thursday? We couldn't even wait till Monday morning quarterback. The deal's not even done. Can we just be happy for a second that we're not going to invade Greenland?
Well,
That is the relief.
We're
That's
moving
the
on to
relief
Iran.
that's shown.
I asked him later, we'll talk about
Look,
Iran.
I think what
There
happened
are
yesterday was the
carriers
best case scenario that anybody was hoping for, that something would happen that would take this off the table, this threat.
no question. By the way, but it was a self-inflicted, man-made.
It is hitting your head against the
potential
wall because it feels so good when you
problem. I'm just
But it
suggesting.
doesn't always have to be half empty. Our viewers sometimes might want to wake up and just.
I think they want to hear the truth. If you ask people,
According to Andrew.
no, we'll have a whole bunch of CEOs here, and some of whom will tell you the truth, and some probably won't even tell you what they really think.
Well, Kevin Hassett's coming up, so I don't know, you might want to leave the set. So, obviously, he's not going to have a shred of truth in anything he says.
We have much more to come this morning. Kevin Hassett will be joining us soon. Uber CEO Dara Khosrowshahi, plus National Economic Council Director Kevin Hassett. As we mentioned, when Squawk Box returns, we are live from the World Economic Forum in Davos, Switzerland.
thoughts. We're in Davos, Switzerland, and our next guest is going to help us get a pulse on the state of the consumer around the world, and maybe weigh in on some of the other big geopolitical issues, that and AI and labor. Uber CEO Derek Khosrowshahi is here. Good morning to you.
Good morning.
So I don't know if you heard us sort of debating what's
I missed
going on. You missed that piece? We were debating a little bit of some of the reaction to this NATO deal, Trump and Denmark. But we've been talking about just what CEOs are thinking about here in Davos and about the sort of reaction to the relationship between the U.S. and Europe and elsewhere. I mentioned Mark Carney. I'm curious, what are you hearing? What are you thinking?
Well, obviously, all the CEOs here want the relationship between the U.S. and Europe to be as it's been historically, which are trusted allies working together for one cause, headed in one direction. We've been through some issues, but I do think that, especially as of yesterday, the president's speech, there was a get-together with some CEOs, and now the direction of travel now, it really looks like things are aligning again. And I think the good news for us, Andrew, is that we're a business that's just hyper-local, right? It's about the New York City resident getting a New York Uber, all of the flows, the capital flows, et cetera, are local. So as long as global economies and local economies are strong, our business continues to be strong, and that's true right now. The consumer is feeling good. They're spending on travel. They're spending, moving places. They're going out, and also they're ordering food, which is terrific.
And part of the question, though, is there are a number of U.S. CEOs, by the way, who have business in Europe.
Yes.
That fear that the breakdown in that relationship could ultimately impact their businesses, either as a function of regulation, as by the way, in terms of tariffs on them, something coming back that way.
Yeah.
Do you have any fear at all that either European countries or others are thinking about you in any way differently than they were a week ago?
No, not specifically. And again, I think what's different about Uber is how local we are. We've got over 9 million drivers and couriers on our platform, and they are locals. You'll remember with Canada, for example, at some point Canadians were very upset with the U.S., and there were some U.S. companies. I called some of my friends, and U.S. companies, some brands were suffering, but we weren't, because the Uber driver is Canadian. And so while Uber is a global brand, we're a big global system, the business being done is a local business, and the monies not just stay in the country, but they even stay in the city in which you're operating.
Even when
Now we want everyone to get along, don't get me wrong, but it doesn't affect their businesses directly as maybe it affects others.
When Lutnick said globalism is dead, you got that called, and there's pushback. There's globalism and there's local globalism. Our companies are still going to operate around the globe. It's just supply chains are changing, and some of the relationships that I was making the point that we've been defending Europe and subsidizing their welfare state for years and years, and to have someone come along and finally say, look, this is unacceptable, and we're going to want to have our way on some of these other issues if we're going to continue to do this. I think eventually that the Europeans are going to be dragged kicking and screaming into what the world is going to look like at that point.
And listen, Europe has been responsive in terms of defense spending. It's not like Europe is sitting on its
in the
hands.
last few years.
No, right. So
Exactly.
I do think that it's Europe is being responsive.
But they need tough love.
I don't know if they need tough love, but these things take time, right? I'm constantly frustrated with how long things take at Uber, right? If something's not done in a month, I go nuts. And I think when you're talking about countries, when you're talking about society, big societal changes and changes in how you've run a global system for 40 years.
Yeah.
If you want to shift over, you can't do it overnight. I think the direction of travel is a constructive direction, even though it may be painful in some parts.
Denmark, they're apparently upset. I don't know if they're going to start hitchhiking. I don't know if they're going to take an American Uber at this point. Are you?
It's not an American Uber. It's a local driver, and that's the whole point.
Thank God.
State of the consumer, and we can maybe go around the world.
Yeah,
what are you
sure.
actually seeing right now? In terms of strength, weakness, challenges?
Strength. So right now things look great. In our last quarter, for example, we announced transaction growth 22%. For a company of our size, right, we're doing 38 million trips a day. For a company of our size and scale to grow 22% shows that the consumer remains strong. Now, employment is not as strong as I would have thought within kind of the consumer spend category, because everything we see in terms of consumer spend, whether it's on restaurants, whether it's on travel, whether it's on commute, etc., it looks really strong. The employment market is not as strong as we would like. To some extent, that's okay for us because it means we have a lot of drivers coming onto the platform. We have a lot of couriers coming onto the platform. That's the one area where I worry about is the strength of the employment market.
The employment market. And do you think that AI is having an impact on the employment market?
I think it's very early, and I have to believe that it does. You know, I think if you look at technology companies, for example, we all went through a period of, it's like grow at any cost, add, you know, the more employees you add, the better. Then the market forced discipline on some tech companies, and I think that was a good thing, you know, and we listened, and I think we acted appropriately. And we've seen two things. One is, well, productivity growth is a great way to grow. We don't need all these people. And now with the advent of AI, we are seeing productivity increases all across the board. And when we talk to our legal team and we have an AI that's doing markups of contracts, etc., you know, Tony West, my GC, ain't coming to me and saying, I need more lawyers in-house.
I just wonder, by the way, you talk about more people coming on board to either deliver or to drive.
Yes.
This is at the same time that autonomous vehicles are starting to come online. And when you think that sort of the rubber meets the road, if you will, on that issue?
I think it's for some time to come. You know, I'll go back to, we're growing 22% a year, right? So that's 6 million trips per day coming onto our platform. There aren't the number of new autonomous vehicles, and by the way, it's a great technology, consumers love it. We've got partners like Waymo, Austin, and Atlanta. We'll have 10 different launches in AV this year and many, many more next year. The number of AVs coming onto the platform is far, far less than the platform growth. That curve may change 5 to 10 years from now. And that could be a problem 5 to 10 years from now. And to some extent, I think as these AVs come onto the platform, as it's early, there are really important questions to ask, which is like, doesn't everyone in a city deserve transportation? One of the really important parts of our introducing our product in the city is, you know, not just in the center of towns where wealthy, lucky folks like us live, but in the outskirts of town, making sure service is available. Same should be true of AVs, etc. Safety, how much safer should AV be than people? These are conversations that we need to have now, while AVs aren't really disrupting the ecosystem, so that we are prepared, because 10 years from now, the disruption will happen.
And I have 2 more questions, but does the cost of the AV come down so that actually the person who typically could not afford to actually take an Uber today can take an Uber because it's half the cost?
Definitely. So I don't know about half the cost, because right now AVs, with all the tech and the compute and the hardware, they're much more expensive than humans. But you know, companies like ours will take that in and we'll amortize it and we'll invest ahead. Eventually, the cost of AVs, when you look at the hardware cost curves, you see it in data centers, you see it in AI, the hardware cost curves are going to come down. We need time. I think it'll be probably another 2 generations of cars for AVs to get to human prices, at least in more wealthy markets where the cost per mile is high, but it's absolutely going to get there. It's inevitable.
Dara, would you ever let me have my autonomous vehicle and use it as an Uber car?
Absolutely, absolutely. So that is, we think that
It's not just going to be you owning all of them.
we don't want to own the vehicles, right? We want to partner. We'll have fleets that own vehicles. We're going to have like financing companies owning giant fleets, just like these REITs own hotels. But then, especially I think in suburbs, in rural destinations where we do want our service, that's our fastest growth is coming there. I think you're going to have either individuals or people owning 10 cars, 20 cars, like many fleet owners.
But right now, for example, your service, also what Google's doing, you know, there are folks who, there's obviously cameras in the cars looking at the passengers. There's people who are cleaning the cars every, you know, bunch of rot. There's a whole sort of infrastructure.
There's a big ecosystem,
that is not just, you know, somebody throwing their car onto the system. And so if you throw your car into the system, you're going to have to have it cleaned perfectly beforehand. Like, do you see what I'm saying? How's that?
Well, that's why I think you're going to have many fleet owners. It's going to be a little bit like you've got these super hosts on Airbnb, and while it's not institutionalized, It's professionalized.
We got to go, but Joe did ask President Trump, and it's been a huge issue, Iran.
Yes.
Given your history, what do you think should happen now, given where we are?
I think that the regime is a regime that's failed its people and has been failing its people for 10 plus years. And
Only 10.
10 plus.
10 plus.
10 plus. But you know, they
Almost 50,
can't, the cost of living is terrible. Losing electricity. I mean, these are the basics, right? And the regime is, and they're funding terrorist organizations outside of the country versus taking care of their people. So I personally, you know, I was born in Iran. I'm very much of American. I'm so thankful for this country, for what America has offered me. But I am really hoping for regime change because the people of Iran, it's an incredibly talented, rich society, and they deserve to be a part of the ecosystem.
We have a carrier over there now. Should we do anything?
I don't know, Joe. You know,
There's like 5 different things on the table.
I'm hoping that the people can affect change, but the regime has brutally cracked down on the people.
Do you think people were counting on help after the president said help is on the way?
I think there were a certain percentage of people who really got their hopes up. I think that I think it's great that the president cares. What we do about that, and what the U.S. does and what Europe does, remains to be seen. The most effective regime change, I think, has to come from within.
But it's coming from within. But
It is coming from within.
If you kill everyone that's part of the...
That's right. That's right. It's really tragic right now, and I hope it changes. And you know, there's a group of Iranian American tech leaders. We're all talking about how we can help, and we're helping in our own ways. But I think regime change should come for the people of Iran.
I myself would not like to have to make the decision that Trump is faced with.
I agree. These are very difficult decisions to make.
Dara, thank you.
Thank you.
Great to see you. Appreciate it.
Appreciate it.
As always.
I don't think anyone would ever second guess any of this. Coming up, Goldman Sachs CEO David Solomon joins us on the latest bout of market volatility, plus what he expects from stocks this year. Next, though, National Economic Council Director Kevin Hassett is going to join us. Stay tuned, watching Squawk Box on CNBC. And joining us now, Kevin Hassett, White House National Economic Council Director. Good morning.
Joe, good to see you all.
You love your job.
I do.
You tell me that all the time when I see you.
Yeah, it's the most fun there
President
Except
loves
this job, right? I mean,
Yeah,
we
love this job. The President loves you in that position. He said that many times, even to the point where he said, I'd like him to be Fed chair, but I would miss him doing what he does now, going on TV and making the case for the Trump administration and the policy. So is it going to stay that way? I guess.
We'll see. I don't think anything's final until it's final
He
on the president's mind.
told me last night that it was 3, they're all 3 good, but then it got down to 2, but actually it's down to 1. But I can't tell you who the 1 is, but...
He's gone from 1 to 5 to 3 to 2 to 1 quite a few times.
Do you feel like you know what's going on now or no?
Yes, of course.
You
He'd have
tell
to
us.
kill us if he told us. When I was just sitting here thinking, I started thinking about how many times in the security framework the word tariff comes up. And I thought about it, that was going to be the recourse concerning Greenland. Now the recourse concerning Iran, to some extent, anyone who does business with Iran is going to get tariffed. And I thought about what Scott Besson said in the interview I did with him the other day, that tariffs and security and economics are all inextricably linked. And the president needs that tool, which makes me think about the Supreme Court, once again, not deciding, and just all the issues swirling around the use of tariffs and the way President Trump has used them. He needs to be able to use them.
Right. Well, I mean, they're very, very effective, and it's actually interesting to dive into the economics of why they're effective. That if you think that U.S. consumers are going to bear the tariffs, then they wouldn't care, the foreign governments. But if they think that, like, the Chinese have inelastic supply to the U.S., so they're going to just keep dumping their stuff no matter what, then they really, really care about the tariffs. And so the fact that countries move so much when the president threatens tariffs says something about, like, who's bearing the tariff, right? If they're really upset about making lots of moves because of the president's tariff threats, that means that their people who study it know that it's not the U.S. consumers that bear it. And if you look
It
at
may just
the
be that the
CPI,
US
though,
consumer's not
it's
going to
looking
buy
like that.
from them anymore.
Right.
And that's if you don't have a market to sell into because you've been priced out of that market.
Yeah, they might buy from the U.S. instead, and that's something that we've seen actually, right? That the president brags about the trade deficit going down so much. So it is true that it advantages U.S. producers some, but again, inflation. There were a lot of predictions about inflation going up to the 3s and the 4s because of the tariffs, and the 3-month moving average at annual rate right now is like 1.5.
But it hasn't gone away. And we had Orzag on yesterday, and I mean, he was in the Obama administration, so
He's a good guy.
take it for what it's worth. But he wants to bet me that it's going to be, that's coming. Tariffs are 4%.
Oh, you should take the bet. You should
I
take the-
did. 4% for
Inflation,
2026. 4% for 2026. Because it's embedded somewhere. We just, well, it's been a while, and a lot of people have, I don't know, maybe it's been premature, maybe victory, mission accomplished about inflation has been declared too quickly, but we haven't seen it yet. Not very much anyway.
Well, I mean, again, we've got data that have been very promising lately, but Peter Orzag, who's a great economist, is right that you need to see a lot more months of that before you really believe that you've killed the monster.
I was just going to on the tariff piece, though. You know, Christine Lagarde mentioned yesterday to me on a panel, and then also Ken Griffin also talked about how it was a regressive tax on the American consumer, and actually cited a new study. I don't know if you saw that study. You've seen the study.
96 cents paid for, right? Yeah.
96 cents paid for by the American consumer.
Right. And that companies didn't eat it, foreign countries didn't eat it, that it. So the same people that don't like it are the same people that want to raise taxes on
All I'm saying is that real wages are up. They were down under Biden. The real wage is the W divided by the P. The P includes the tariff. And so wages are going up more than the cost of buying stuff. And that's exactly President Trump's point. So it's in the data.
But what, I'm just curious, you saw that study?
I've seen 3 or 4 NBER studies. Is this the one you're talking about?
I think one of them was, it just literally just came out about the 96 cents. And whether you think that's...
But these are the guys who have been modeling that we're going to have runaway inflation, that we're going to have stagflation and so on. So the economic models don't account for things like what we're talking about, like the fact that for geopolitical reasons, countries decide that they want to capture a big chunk of the U.S. market, so they have leverage over us, like the rare earths. So where in that paper is the rare earth being modeled?
What I gleaned from it and talked to the Treasury Secretary about it was that the thrust was that the countries and the companies abroad that were exported here have gone to other places. They didn't eat the tariffs by continuing to sell to the United States. They went elsewhere. But if you think about what that means that the domestic supply chain,
we're
that
producing
it
on our own.
is changing behavior, which is what the end, what
But
we're
again,
trying
like,
to do in the first place.
in the end, the final score, right, is what's in the data. And I think one of the reasons why there's some, like, I don't know if you saw the interaction between Lutnick yesterday and Al Gore,
Yeah.
but the ideologues in this space are really, really upset that the tariff policies are working because the data, are, in the end, it depends on the final score. The final score really is what happens to the real wage of ordinary Americans. And it went up a lot under President Trump before, and he introduced tariffs, and it's going up a lot.
By the way, we were not at that event. Can you tell us exactly what happened? We've read different pieces of it, but since you were there, what did you see?
I was not there.
Oh, you weren't there.
I got to read out, but,
Okay.
but I just heard that someone was inappropriately booing.
But Al Gore
you
used to
guys
be
should
the
look
belle of the ball here now.
we saw the same.
Kevin, everybody here, all the former, climate hysterics, are the ones saying we need energy for the data centers. Bring it on. Bring on the coal. Bring on the fossil fuel. It's like the C word has not. I'm talking about climate. The C word has not been mentioned here.
This has been a radically different Davos than anything you've ever seen, and I think it's really good for Davos that a lot of people are coming in with differing views.
Al's lost. He's walking around like muttering to himself, like I'm irrelevant. I mean, it's sad.
Yeah, but read the transcript aloud from what Howard said. I heard it was pretty entertaining.
It must have been entertaining. I was gonna. What you didn't do was just check off what happened in the last year. Good things in the United States. We've heard it a few times. We've heard it from
the president's
heard it from the
speech.
Treasury Secretary. But we're talking.
Just give us your thought on Rick Reeder, though, because he's the guy. If it's not you, it sounds like it could be him. Well, you kept saying the Kevins, and now it sounds like maybe the Kevin or Rick.
I've been friends with Rick for a long time. He's the best spawn guy.
Do we need a guy who?
But the president's going to make
The
the
president
call.
did say guy, and he said, and it is a guy. So he said, I'm not this week. But do we need someone that lets the economy run hot and doesn't worry about rekindling
We
inflation?
need an independent person who respects the mandates.
But
That's what
like
we need.
Greenspan.
And I don't think we've had, like Greenspan, but I don't think we've had that now. And I think the running hot point is really, really important because I was with Greenspan as a young guy, as a staffer at the time, but he saw the computers coming. And he said, oh, well, that's like a supply shock, so you can have high growth and it's not going to cause Phillips curve type things that mean we need high rates. And so he let the economy run hot without causing inflation because he recognized why the economy was hot. And what I believe now, whoever's the Fed chair, is that the economy's really hot. I think we might end up with 2 quarters in a row above 5 now, right? We really might. And if that happens, then that's a hot economy, but inflation is not taking off. And so it's obvious because productivity is in the 4s right now because of AI and
think
the
AI
data
is
centers. And so it looks very, very much like the 90s to me right now. And so I think that the Greenspan judgment would be appropriate now. But then again, you got to watch the data. And if the data start, looking like Peter Orszag suggested to you they would, then you got to do something about it.
All right, Kevin has it. It's
Good to see you guys. Stay warm. Stay warm. Yeah.
You were taking a nap yesterday? I don't think Trump did. I don't know. I needed one.
We got in late, as you heard.
Thank you.
All right, when we come back, interviews with the heads of 2 of America's biggest banks. And at 8 a.m. Eastern Time, we're going to be speaking with Wells Fargo CEO Charlie Scharf. Up next, though, Goldman Sachs CEO David Solomon, live on set, right here in Davos. Squawk Box, we'll be right back.
Problem is, nothing works together.
That was not me.
Only the ServiceNow AI platform breaks down the walls. It integrates anything in your workflow.
Any data source, and with the AI Control Tower, we can finally manage all our AI.
The ServiceNow AI platform lets you connect and control everything to put AI to work for your people. Take a seat, Nick. On a chair.
Easiest if everybody just moves down one? No, okay.
The West is our canvas, the flag our guide. Golf belongs here. This game reminds us of who we are. Steadfast, grateful, free. Here's to the country we love and the game that brings us together. We are straight down. We are American.
What does it mean to be rich? Maybe rich is less about what you're pulling in and more about what you're putting out there. Rich is being there for their first step.
What do you think of that?
And sometimes letting them have the last word. Rich is living life your way and having someone who can help you get there. The key to being rich is knowing what counts. Edward Jones.
I'm Cassandra, and I started Kitsch by making handmade hair accessories out of my apartment with one goal: rethinking how we care for our hair. 15 years later, millions of people around the world trust us with their hair care routines. One of my favorites is our rice water shampoo and conditioner bars. They're carefully handmade and packed with proteins, vitamins, and amino acids to support healthy hair growth. They lather just like traditional shampoo and conditioner and deliver salon-quality results at home. Find out more at mykitsch.com.
Reality check. Tough skin doesn't make you tougher. Men's self-care starts with your skin.
Omnilix Men is clinically proven and FDA cleared to help rejuvenate and hydrate the skin.
And my favorite, correct age spots. Now what really sets the men's mask apart is the addition of 1072 nanometers of near-infrared light, which is proven to penetrate deeper into men's thick skin.
Helped me a lot with the wrinkles, shaving marks,
pigmentation.
This red light mask is going to radically improve your skin.
This has been a lifesaver.
I love it.
Eyes of the world on you.
President Trump suggesting he knows who he's going to pick as his next Fed chair nominee when I spoke with the president. In fact, I mentioned Treasury Secretary Scott Bessent's idea that the administration might not want a new Fed chair who gets nervous about inflation when the country sees hot economic growth numbers. If those numbers are the result of a productivity boom brought on by AI or by big beautiful bill or other deregulation, other policies. And here's what the president told me.
Right now, if you announce great numbers, the stock market goes down because they say, oh, they're going to raise the rate, they're going to kill it, which really stops you from having any great runs, and we want to have a great run. So we're going to be at 5.5 or something. They're predicting. I don't know. It's much higher than they thought. But let's say we're at 5.5. We could be at 10, or we could be at 12. We could be at 15.
Yeah, it was funny on Cauchy yesterday. You just see they were saying what questions I was betting on, what words that the president would use, and someone sent it to me, and I didn't want. Then I didn't look at it.
Yeah. By the way, there was something that I had done recently when my son sent it to me, and now people are betting on what you're going to say. It's wild.
It is. It is crazy at this point. 8% nominal growth. We can ask our next guest whether that. It happened once. Can it actually happen? I don't know.
David Solomon is here, CEO of Goldman Sachs. So we have a lot of ground to cover with you. That was not where we're going to start, but let's start right there. Chairman and CEO of Goldman Sachs. Welcome.
Thank you.
Nice to see you.
Nice to see you guys. Always nice to be here with you guys. We have a confluence of some very stimulative things that make us pretty optimistic about the level of growth that we could see in 2026. I don't know that I would have thrown out, 8% nominal. Yeah, no, I wouldn't throw out 8% nominal, but I do think that our view on nominal growth this year would be higher than the consensus. You have very, very strong fiscal stimulus. You obviously have the things in the bill that are coming through. You have some stimulus that comes from the deregulatory environment that the administration has created. We obviously have continued AI infrastructure spend that's very, very significant. Plus, you've got productivity gains coming as AI, is implemented into the enterprise. So it's a relatively constructive environment, and barring, in my mind, some sort of an exogenous event or a change in sentiment that's created either by geopolitics or, some other speed bump that we don't see, I think the nominal growth that we see will be out of the consensus. So I think the tailwinds are pretty constructive in that front.
Do you see the expense? I keep hearing about the expensing thing. The factories that previously wouldn't have been built are being built. Someone was going to make batteries. They didn't even make batteries for their own equipment before. Now, because they can write it off immediately, they're actually breaking ground on a factory.
Well, I think the expense depreciation benefit is a big benefit to spur investment. There's a lot of talk about investment from U.S. companies and from foreign companies in. I think one of the things that we're trying to do, I think everybody should be doing, is tracking what actual investment's occurring and how it's occurring. These things, Joe, and this, they take time. To build factories, plan factories, actually get them in place, get them online takes time. And so we're at the beginning of what is the potential for a much more significant
What do you see
investment cycle.
when you're tracking it? What numbers?
It's early. In other words, right now it's more talk than it's actually happening. But there are a lot of people making significant commitments. And as people follow through, that is a further tailwind for growth. When you talk about the possibility for a multi-year run, I think we're set up where we have the possibility for a stronger growth trajectory for the next few years. We're set up for that. That might not happen. A bunch of exogenous things could soften it, but I think we're set up with a better possibility for that than we've had in quite some time.
Can you square the circle for me? So the economy looks strong. Yes. On one end, we had the Mark Carney speech where the whole world is breaking apart and there'll be new partnerships and complete sort of reshaping of power in the world. And on the other end, the president makes this deal with NATO last night, and the market goes up, and some people are saying, this is just another great example of new cooperation. What's going on here underneath the sheets?
Well, we talked about what's going on in the economy, particularly the U.S. economy, underneath the sheets. We're in a geopolitical environment that's more fragile than it's been for some time. We have a president that's got a clear view about how he wants to drive an agenda, and he's got a certain style in the context of the way he drives that. I think, markets don't like uncertainty. And so if you just look back over the last couple of days, there's been a variety of narratives that have created a little bit more uncertainty, and then there have been narratives that have followed up that seem to have taken the uncertainty out. And so I think what's interesting right now is the business environment sets up very well. Business people feel unleashed, all over the world and want to invest in their businesses and grow their businesses. They have an environment where they think they really can make progress growing their businesses. You've got technology innovation that's helping people in their businesses, and CEOs are very focused in that.
Are those U.S. companies or around the world?
I think it's around the world. I think what slows them down, and we're talking big multinationals, what slows them down is when there's uncertainty. And some of the noise around geopolitics creates uncertainty. One of the things I try to do is I always try to step back and say, okay, what's noise, what's actually substantively going on? And I think that's a helpful lens. But on a day-to-day basis, when you're listening to the news, when you're listening to the speeches, if you're sitting here, there's going to be noise mixed in with the substance.
Is it compartmentalized between economic issues and security issues? And I think there's a lot of overlap. I think maybe that escapes us sometimes, whether it's Venezuela. That could be really positive for the Western Hemisphere if their oil starts coming out of the ground again. Think about the Middle East and what happened with the peace deal and what could happen in Iran and how the Middle East could play out. Our discussion was whether Greenland was worth it, whether bringing this up, making a big deal about it, spooking the markets, worrying that NATO is going to, dissolve because of an attack on a sovereign country. Was all that worth it? Would it be worth it if we did get a Golden Dome and had a greater control of what happens in the Arctic Circle, which is so important?
Well, again, let's get to the substantive issue that you're highlighting, Joe. The substantive issue for the U.S. and Europe is Arctic security.
Yeah.
That's the substantive issue. If we come out of this, with a strengthening of Arctic security for the U.S. and Europe, that will be a good thing for the world. So I don't have to debate, every discussion,
Right.
every way that we get there.
None of us were thinking about this on Inauguration Day. No one was worried about Arctic security.
Arctic security is something that's worth thinking about. Okay, there are different ways to get there, but if we wind up with a better structure around that, that would be good both for Europe and the U.S.
But we don't know at this point.
We don't know at this
Looks
point.
like, but it's both security and, you can't have economic prosperity without security.
No, security is a very, very important of economic prosperity, for sure.
Do you want to? I'm curious what you do think then of the Mark Carney speech, because clearly he's saying that Canada may ultimately have to align to some degree with China. So our neighbor aligning with China in any way is something that historically we would have done everything to prevent.
Yeah, I think we're talking about some long cycle structural changes. I wouldn't let one speech at Davos at this moment in time drive a conclusion as to where things wind up. The U.S. and Canada are massively economically entwined. Canada is a hugely important ally to the U.S. I'd watch to see how this plays out. I wouldn't glean too much from the speech, but it obviously was an important speech. He said some things that certainly will get people on both sides, thinking about, where we are. I think a de-escalation and a focus on the important relationship we have would be very constructive.
Let me ask a couple other questions. So the president, though, has been going after Wall Street in some very unique ways. One on the credit card piece, and then the other, interestingly, on some of the big firms that are basically buying up homes in America and either renting them out or reselling them. Yesterday, he made a point of explaining, I think, just how depreciation works and how, you know, if you buy 500 homes, you can depreciate it as a company. You buy a home by yourself, you can't do that at all. What do you think of what's happening here?
So he's touching on, with these topics, he's touching on issues that are real issues. I think affordability is a real issue in the United States. You know, with respect to the credit card cap, the first thing I'd say is I think
you're so happy you're out of that
it's a very
business.
good time for us to get out of the credit card business. But stepping back, just as an observer of you know, markets and someone who has some understanding of the business, I don't think that's a good idea. I think it would significantly constrain credit, you know, for most Americans. And you know,
Meaning
the
that it wouldn't
point,
be offered.
the point that that affordability is a big issue and we need to get at it, I think is correct. I don't believe that a 10% credit card cap would be constructive in that context.
Okay,
Brian Moynihan told us that if that goes through, that 10% cap, you would have to have a credit score well into the 700s as a consumer to get access to credit. Does that sound right?
I'm not clear on the exact cutoff, but you know, I don't know, 80% of American consumers would be constrained in credit that's available to them. And look, a lot of people obviously run credit card balances where they pay interest, but there are a lot of people that use their credit cards to run their working capital during the month based on their paycheck, where they're actually not paying the interest, but they need the access to credit in order to run the working capital on a month-to-month basis with their paycheck. And so that, I don't think that's a constructive path to get at that cost.
What about the housing piece?
Housing's a real issue. I've talked with you guys, you know, on TV before about housing. I think it's a complicated, multifaceted issue. I do think the president made some very good points around how the structure depreciation works with some of this. But to really get at the housing issue, I think we've got to get at supply. I think we've got to get at things that create incentives or make it easier for people to afford down payments on homes. I think one of the things that's been a big issue is the price of homes based on the price of construction. The lack of supply has made the prices higher and people don't have the down payments. I think there's some interesting ideas floating around.
There's talk of allowing people to effectively invade their 401k plan to do that. And some people think that's a great thing, and some people think it's a horrible idea.
I think it's an interesting idea. I think you've got to think carefully through, you know, the consequences, you know, of that and how you would do it and how you would make it work. But at the end of the day, home ownership in the long run, people live in their homes, has been a great source of savings and stability for Americans. I think things that we can do to accelerate that and make it more accessible will be very positive.
Wouldn't this help on the supply issue? Because if Blackstone can't buy it, that takes a big buyer out of the market and should create some more supply. I mean, it's not real supply, but if you think about just the constraints on who's bidding for the property.
At the margin, that has to be true, Andrew, but remember, there are all different forms of institutional capital that buy homes in the United States, not just the public companies, the couple of public companies. There's all sorts of institutional capital formation that supports the accumulation of housing, you know, in the United States. And so the bigger issue, I think, that we have to really get at, I'm not saying that that's not an appropriate issue to look at, the bigger issue is supply and the availability of housing stock.
Okay. David, it's great to see you. Thank you for coming in.
Thank you very much. Glad to be here. Thank you.
Absolutely.
All right, when we come back, the CEO of commercial real estate player JLL. Stay tuned. Squawk Box will be right back from Davos, Switzerland. Welcome back, everybody. A bright spot for the commercial real estate industry is the growth in data center spending. It's helping offset headwinds from things like rising construction costs. Joining us right now is Christian Ulbrich. He is CEO of JLL. That's a global commercial real estate firm. And Christian, thank you very much for coming in.
Thank you for having me.
Let's talk a little bit about this because real estate has been a difficult business for some. The S&P Real Estate Index over the last year is flat, but your stock has been up 29% over that time. What are you doing differently? What are you involved in that others aren't?
Well, we are a service provider and we are servicing the largest corporates in the US, and most of them have been incredibly successful, and with their success we are able to grow and grow market share.
What's very interesting is that you do play a big role in the data center space. I think you have more than 340 data centers that you manage around the globe, but you don't build them, you don't own them. Explain how your model works.
Well, we manage them. We do the facility management of those data centers, and we help to project management when they are being constructed, and we help to design them. But you're right, we don't own them. We help to raise the capital for them, but capital is not the constraint. As you know, the constraint around data center is power.
Yeah. Where are you building these days? Where does it look like a good place? Because there's also some local communities that are pushing back and saying, we don't want data centers in our backyard.
Yeah, I mean, you need land, you need power, and you need water. Those are the three big topics, and so you literally have to look where you can get that without those constraints that the neighborhood is getting very upset. So you will see also data centers now moving into geographies where you have that a little bit easier, where the legal environment allows you to push it through quite easily, so in the Middle East and other places.
Where in the United States?
Well, I think there is a whole load of people looking for where is enough power available, where you can actually get access to power. And so that could be a given up industrial site or any other locations where you have real strong access to power, because it will still take a while until we can build enough new power plants to deal with that challenge.
I realize that most of your portfolio is commercial, but you do have some residential real estate as well. We were just talking with David Solomon about what's happening, what the president is saying, just in terms of what big companies can do, publicly traded companies can do in terms of buying houses. Will that have any impact on what you do?
I don't think so. When you look at what institutional investors did in this single-family rental, I think, if I'm right, it was about 1.2% last year what they accounted for in new buys, and they own roughly about 3%. I don't think it will have a meaningful impact on the market, and it certainly will not have a meaningful impact on our business.
What about the question of affordability? That's something everybody is trying to resolve. You've made some comments on it in terms of what Mamdani has proposed in New York City as well, the new mayor there. What is the right way to get at the question of affordability for housing?
Well, first and foremost, this is an issue all around the world. This is not a U.S. issue. We have the trouble that the kind of the lower end of the society is increasingly struggling to pay the rent or to get into the housing market. There is no easy answer to it. You can try to kind of provide more cheap land, but the construction costs have gone up really high. And then very often the issue is that they don't have enough equity to just start off and get some debt because they can't deliver the equity piece, and that's where government can step in and help on the equity side with guarantees.
Christian, I want to thank you very much for joining us today. Christian Ulbrich.
Meantime, it is just about 7 a.m. right on the East Coast, 1 p.m. right here in Davos, Switzerland. You're watching a special presentation of Squawk Box on CNBC. We're live at the World Economic Forum. I'm Andrew Sorkin along with Joe Kernan and Becky Quick. We got a lot going on here in Davos. By the way, Elon Musk is going to be speaking on stage in just a little bit. A number of big CEOs are going to be on our stage right now. Circle's CEO Jeremy Allaire, Brett Taylor, chairman of OpenAI's board. We're also going to talk to the Wells Fargo CEO Charlie Scharf. But before we get to all that, a quick check on the futures following yesterday's big rebound. Take a look at where things stand right now. The S&P 500 up about 38 points, the Dow up about 150 points, NASDAQ up about 216 points.
Earlier today at the World Economic Forum, President Trump launched the Board of Peace. The president is hosting a signing ceremony. He spoke about Venezuela and maintaining peace in Gaza. He also talked about new investments coming into the United States.
We have secured commitments for over $18 trillion in new investment coming into our country, which is a record by many times over, not just by a little bit, by many times. There's no country ever in history that's gotten anywhere near that number.
And yesterday I spoke to the president about the tense situation in Iran and keeping the country from regaining its nuclear capability.
They had one thing specifically that really got me. They were going to hang, the old-fashioned hanging. They were going to hang 837 people on Thursday. And I told them, you can't do that. If you do that, it's going to be bad. I don't want to go exactly what I said, but nasty. And they canceled it, hopefully permanently.
But those tariffs are still on, including China. Has China responded to
sanctions?
25% for anyone who does business with Iran, and that will go forward.
Yeah, that's going forward.
That will go forward. There are assets moving into the Gulf, obviously carriers and other things. So a lot of people are wondering whether that's a prelude to further action.
Well, we hope there's not going to be further action, but you know, they're shooting people indiscriminately in the streets. And they were going to look, this was a big thing for me, they were going to hang 837, mostly young people.
When you did successfully hit Fordo, you got a lot of grief from the Democrats for doing it. Now, the grief is, oh, you promised to do something in Iran. Now they want you to do, or they're at least finger pointing, say, you said you were going to help the protesters, and now you're not. So you can't win.
Well, we had, of course, again, I mean, if I came up with the cure to cancer, they'd say, why didn't you do it faster?
If you walked on water, you can't swim.
Yeah, look, they're sick people. They really are. We call it Trump derangement syndrome.
Should we stay tuned in Iran? I guess that's my question.
I guess, I mean, look, it's a rough place. It's a place that we hit very hard with the nuclear, ending the nuclear. They would have had a nuclear weapon long ago. It's actually already done. They would have had a nuclear weapon probably a month after we hit, had we not hit. And we hit them on the B-2 bombers. We just ordered 25 additional B-2 bombers. They were unbelievable. Those things they were totally undetectable. They were undetected. And think of it, with no moon, in the dark of night, late in the evening, every single one of those bombs, and the Giants, every single one of those bombs hit its targets and just obliterated the place. So we're going to find out where they are now about what they're going to do with nuclear. They can't do the nuclear. You know, the one thing I've been strong on, they can't do the nuclear. Now, this attack that we did at the time, which is now a little bit older than what happened in Venezuela recently, which was equally as good, but the attack in Iran, if they do it, it's going to happen again. They've got to stop with the nuclear. You know, they keep experimenting with nuclear, and you know, at some point they're going to get the idea that they can't do that. They're just not going to be able to do that. Can't let them have it.
The thrust of that question wasn't about their nuclear capabilities, and he ended up, in my view, changing the subject
It looked like he was dodging your question.
Because, and then this is what I was getting at, and then this came out this morning in the Journal, and Trump seeks decisive options for Iran. The U.S. held off on strikes, but is moving an aircraft carrier and jet fighters into the region. Regime change is going to require significant air and ground operations, and there's about 5 different, apparently, options that are on the table. And the reason that I bring it up that he didn't want to talk about it, if you remember the Fordo, the way that was handled, the jets took off and headed all the way around the other way, and no one was expecting it to happen. And I just don't want to be not thinking that something might be in the works. I want to at least consider, and that's why I wanted to ask him about whether there is still something being planned, because when he says I'm going to help the protesters, help is on the way, and then gets criticism for not following through, I think that sticks in his craw, and I think
he wants to find a way to do something.
Right, which we were talking to Dara.
And the question is, what does that look like?
What does it look like? Does it work? Is it possible? Do we do regime change? Is it time? Is it now the right time to try to do it? But I just want to at least be on record trying to find out whether something's being planned right now, and we have no idea.
It looked to me like he was avoiding your question.
Right, I don't know. You have to wait and see, and I don't. But he wouldn't want. He never wants to show
And why would
his
you?
hand.
Right. Well, the element of surprise is pretty important.
The element of surprise is important. So here we are. It's in 6 hour difference. If you guys notice that it's very weird when it's 4 o'clock here and you call someone at home and it's like 8 in the morning. Isn't it strange? I guess you're used to it.
Don't call them at noon here.
Right. It's actually 10. And I got math worked out. Sometimes I get confused. I go back the other way. You're a world traveler. You're a globalist, right?
Proudly so. Proudly so. Still to come right here on Squawk Box. We're going to be joined by Circle CEO Jeremy Allaire. Stay tuned. You're watching Squawk Box. We're live at the World Economic Forum in Davos, Switzerland.
Welcome back, everybody. Procter & Gamble reporting earnings of $1.88 a share. That's actually 2 cents better than the street was predicting. Revenue came in at $22.1 billion, and that was about in line with expectations. Procter & Gamble did say that higher prices helped offset a decline in volumes. Procter is affirming its guidance for the full year, but the stock is down by just over 2% right now.
Well, let's check in on the world of banking and stable coins. Joining us now, Jeremy Allaire, Circle CEO. Like so many things, Jeremy, it's like 3 steps forward and 2 steps back. I think to some extent it's a nascent industry, burgeoning, but yet there's these little potholes along the way.
Well, it depends on the perspective that you take. I mean, last year we had the Genius Act passed. We saw USDC grow massively, transaction volumes growing massively. Sitting here at Davos, virtually every major bank in the world is sitting down to talk about how to implement and integrate this technology in capital markets, in payments, in tokenization. So things are accelerating. Regulatory relief at the federal level, every government here, all constructing policy. So we feel that continued momentum. Obviously, there's a market structure bill. I think that's maybe what you're referring to.
Referring to that,
some of these debates.
it was stable coins were the problem, wasn't it? Is that sort of the sticking point? And can you explain what we need? How many Democrats to pass it?
So I mean, look, the issue is this: Genius Act prohibits stablecoin issuers like Circle from paying interest.
Okay.
And in fact, every regulatory regime in the world for stablecoins, and we're subject to a lot of those, prohibit stablecoin issuers from paying interest. These are cash payment instruments. That's what they're designed to be. But there are lots of companies that distribute stablecoins and provide services around them, and they want to be able to provide incentives and rewards and loyalty systems around those. And I think there's a debate about how to do that, and whether that's good or bad for the banking system. That's really the debate there. But I think the fundamentals, there's not really a debate. I think it's really around kind of this marketing activity.
Congress, things usually go so smoothly without any hiccups. I'm amazed that this is bogged down at this point. It's amazing anything ever gets done. Will it happen this year?
I mean, I think there's clearly bipartisan desire to do that. I mean, we hear that from leadership on both sides. And that bill itself is not about stablecoins. It's about a lot of other things, about opening up digital tokens for much broader use in capital markets, which I think is a very big deal. And so I think because of that, banks, capital markets, crypto companies, all the above want to see this.
So you wake up and you see Visa is starting to think about stablecoins and incorporating it into the payment systems. What do you do? Do you go, yes, it's happening, or do you go, no?
It's fantastic. I mean,
it is?
Visa and MasterCard are both significant partners.
They don't
of
replace
Circles,
you,
and they're using USDC.
Okay.
And in fact, they've grown their USDC usage pretty significantly year over year.
So it's going to be additive to you, not.
There's short, medium, and long term on all this stuff.
Long term, it could be.
I think over time, the cost of storing and moving money around kind of goes to zero, just like the cost of moving data or publishing software goes to zero. And so, in that future world, and where AI agents are doing the money movement, it's going to be hard to know exactly what the payment business model is over that period of time. But everybody has to participate in the technology.
Not everyone agrees we're that close. JP Morgan says it's years away, right? And let's say where Visa thinks it's near term.
It's a question of how fast this scales, right? Is this, as Secretary Besson says, is this going to be $3 or $4 trillion of stable coins blanketing the world in the next 3 or 4 years, or is it going to be $1 trillion dollars of stable coins? And how much is that woven into the whole financial system? We take a somewhat conservative view on that when we talk about our own outlook. Sort of what a
so in the cone of variance, for you it's what? It's a trillion?
You'd
be happy with that.
Look, we've grown our circulation 80% year over year, 2 years straight. But we generally say, hey, look, a CAGR of like 40% in this is a pretty reasonable baseline, and that's just really built on the fact that there's more and more utility, and it's going to get deployed in more and more places, and so that's a pretty, I think, a pretty reasonable growth assumption on how this rolls out.
So some banks are they're not using USDC. They're going to launch their own stablecoins. That would, I would imagine, not be possible, or would the more the merrier.
Yeah, I mean, our view is that stablecoins are network effect businesses. So they're platforms people build on and integrate to, and they're utilities that people connect to. And the more people who connect to them, the more usage they get, the more network effects they have, the more circulation you get. And so we've achieved very strong network effects, and we've got, I think, a very big global platform for that. And I think the important thing is we're a neutral company. We don't compete with banks. We don't compete with payment companies. We don't compete with exchanges. We're a market neutral player. And I think in this space, when you're building on stablecoins, you're going to want to build on a neutral infrastructure player.
You're perfect for Switzerland. It's beautiful. You love it.
Singapore's pretty good too.
Pretty neutral too. You just don't chew any gum, or at least don't spit it out on the sidewalk. Anyway, I think you get cane still, don't you?
Yes. Last I heard.
Not here. You're fine. All right. Thank you.
Thank you, Jim.
All right, when we come back, OpenAI's chairman, Brett Taylor, on the latest AI trends. He's also the co-founder and CEO of Sierra. He's going to join us next to talk about all of this. Stay tuned. You're watching Squawk Box. We are live from the World Economic Forum in Davos, Switzerland. Welcome back, everybody. AI has been the topic du jour here in Davos, and joining us right now is Brett Taylor. He is the co-founder and CEO of Sierra. He's also the chairman of the OpenAI board, and he's one of the co-creators of Google Maps. Got a lot of other titles that we could throw in there for you, too, Brett.
The like button.
Yes.
That, to me, is like the thing that you should
Genius.
Wait a minute.
Yeah.
Nothing's better than Google Maps. Nothing. Nothing. In terms of life-changing, you ever live in LA? You're afraid to leave the freeway until you Google Maps will say, oh my God, the world is open.
Yeah, Google Maps plus the iPhone is the best combination since chocolate and peanut butter.
True. I think it even beats chocolate and peanut butter going together. But let's talk a little bit about where things stand with OpenAI. Let's say AI writ large, because that's what we're really trying to get our arms around right now. There's been so much excitement about it, so much thought that it's going to be able to boost productivity in so many different ways. And then on the other hand of things, you have somebody like Satya Nadella who said this week that if it's not given more broad adoption outside of just the big tech companies and maybe even some of the big companies, that it does run the risk of being a bubble. Where do you see all of this at this point? How do you add all that up?
I'm an AI optimist, obviously.
Yeah.
Probably didn't even need to say that. I think we're at the beginning of this curve, though. It's a little bit like 1996 and the rollout of the internet, where I think it's somewhat self-evident it's going to have a huge impact. Just like in 1996, we're sitting here, we'd say it's going to impact commerce and search and payments. But it takes a while both for the infrastructure to be built out, it takes a while for companies to adopt, the regulatory landscape needs to evolve. But it's interesting sort of bringing it back to sort of my day job versus my busy side hustle of being chairman of OpenAI. There are a few, I would say, areas of applied AI where we're seeing a ton of adoption. One is software engineering, where tools like Codex from OpenAI, companies like Cursor are really taking off, and customer service, and this is the area where Sierra is leading. And I think that's really exciting because I think most companies don't necessarily want to buy technology, they want to buy solutions to problems. And so one of the things I hope to see this year is more companies like Sierra and Harvey, which does applied AI for legal, where companies can buy off-the-shelf solutions. You know, you can buy Sierra and replace your IVR system with an AI agent that answers the phone. You don't need to worry about models, right? And I don't think companies should be developing software. Companies should just be applying technology to solve their problems. And we're just early in that applied AI landscape being mature, which is why I think adoption sort of lags the potential. But I'm very optimistic we'll see it this year.
So beyond what you're doing, beyond Harvey, who else is interesting to you in that space?
Well, I think broadly, I like first principles thinking. What is large language models? What do they let you do? Well, first, computers can talk to you now, which is awesome. They can talk over chat, they can talk over voice, and I think we've evolved from punch cards to mice and keyboards to touch screens, and now conversational interfaces. So that will obviously impact the call center and customer service. It'll also impact things like sales. We actually do over 1 million outbound calls every single month with Rocket Mortgage, to give you a sense of the scale of that. I also will think it will impact anywhere where you're dealing in the world of information, analysts, legal profession, contract review. Just think about KYC in banking or onboarding a new vendor. And all of those areas, intellectually aren't hard, but if you have to build it from scratch, all of a sudden you're going through this cost-benefit analysis. And what I think about is, where's the startup doing these boring but important kind of back-office processes so we can actually realize this potential?
In the agentic AI world, what's the switching cost from going from one off-the-shelf player to another? Because that's become a huge question. Harder. By the way, there seems to be more moats in the enterprise space than there is in the consumer space. People seem to jump from ChatGPT to Gemini, back to this, back to that. In your space, I think it's different.
Yeah, it's a very interesting question, because I think, traditionally we've talked about enterprise software, systems of record, and then sort of systems of engagement. The atomic unit of an AI agent is actually a process. It might be, say, helping you fix your DirecTV receiver, like one of our agents would do, or it might be onboarding a vendor to your supply chain. And that spans departments, it spans systems of record. And so I think, AI agents, I think the reason it's been so disruptive to the software industry is it's kind of shuffling the deck of, where are the anchor tenants for all these, how do you think about the software landscape? And what does that mean for switching costs? And I wonder, is there sort of a system of record for your core company's processes, your customer experience, your back office, how you audit your financials every year? So I don't know the answer to that question, but I think it's evolving before our eyes. AIs, and it's why there's a lot of open questions about the future of software now that AI agents could write them, and it's just a very interesting time to be in the industry.
Do you compete with the likes of the big guys like an Oracle or somebody? Do you work with them? How would I look at that relationship? Because those companies that have been around for a long time are kind of embedded in a lot of these corporate headquarters and throughout. Would you be working on top of them? Would you be knocking them out?
I remember, I think it was Reed Hastings on a Netflix earnings call, and someone asked him about who his competitors were, and I think he said Fortnite or something, or what?
Yeah. I would remember him once saying sleep.
Sleep.
He competes with sleep.
He had a really clever response that I'm screwing up. But it's interesting because I think the world of agents often don't directly compete with any of the, I'll say, incumbent vendors. It's just new. So if you have an AI agent pick up the phone and make a sale, or pick up the phone and solve a customer service problem.
There was nobody who
What
was
are all the systems that didn't get accessed as a consequence of that? So it's more disruptive than it is competitive, and that's what's so interesting about it. And it's why it's not a foregone conclusion that these incumbents can't benefit from AI, right? You could, sort of pivot into the space. But on the other hand, I think you start to say, where is the anchor tenant for your digital strategy? And it's going from many of these incumbent platforms towards AI agents that are more autonomously doing these tasks. And that's why it's so exciting, and it probably is a bubble. When everyone knows that AI is going to have a huge impact on the economy across a huge range of industries and workflows, money is plentiful. And what you end up with, smart money, dumb money, you end up with too many competitors at every layer of the stack. But I think that's good. Competition's good. It ends up with this culling effect where the free market determines who has the best products and where the most value is. And I think over the next few years, you'll see correction. You'll also see consolidation. But I don't think you can get innovation without that kind of messy competition. And so it's pretty stressful for people like me in the middle of it, but it's sort of, can these startups become the consolidators, or they be consolidated? And it's the greatness of the free market, and we're seeing it in real time.
That's great.
Can I ask you one stressful question?
Stressful, go ahead.
So Elon Musk is going to be here this afternoon. The trial is actually now appears like it's going to happen, meaning his case against OpenAI in your role as the chairman. And I'm curious sort of how that changes the dynamic and potentially even changes the timeline for what you think about either going public or how this whole thing shapes itself.
Look, we've been consistent that we believe this is baseless, and we're really focused on building out this foundation, which is now one of the largest foundations in the world, in our new structure, which we're very proud of. And in particular at the board level, thinking about how can this new structure amplify our mission, and whether that's going public eventually, but more importantly, even the short term, saying now that we have this foundation with this incredible equity structure, how can we broaden our view of that mission, go beyond simply building AGI and thinking about healthcare, thinking about jobs, all the other things that it means if we really want AGI to benefit humanity. So it's a really exciting time at OpenAI, honestly.
Brett, thank you. We really appreciate this conversation, and we hope we get to see you again soon.
Thank you.
Thank you.
Right, coming up, President Trump calling for a cap on credit card rates and restricting corporations from buying single-family homes. We're going to have his comments when Squawk Box returns.
Time now for today's Aflac Trivia question. Who is the youngest and the oldest person to hold position of Defense Secretary? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. Who is the youngest and the oldest person to hold the position of Defense Secretary? The answer, Donald Rumsfeld, serving at age 43 under President Ford, and then the 21st Secretary under President George W. Bush, leaving office at age 74.
Rumsfeld. Welcome back. The Squawk Box. I spoke with President Trump in a wide-ranging interview yesterday, hitting many topics, including capping credit card rates and keeping corporations from buying up single-family homes.
Credit card companies are getting 28%, 30%. These people don't know they're paying that.
Right.
And I said 1 year cap of 10%, and I love it. I know it's sort of like, it sounds like the mayor of New York maybe came up with that, but the people are paying, they can't make it. They can't pay 28. You know, whatever happened to usury, they can't pay 28%. And so I said 1 year, I'd like to see a 1 year cap of 10%. With the credit card companies, and they'd understand that. I've had calls from credit card companies, people that are friends of mine actually, and I treat them good, I respect them greatly, but they make a lot of money. They got to give the people a break. 28% interest. You know, people go out and they buy something, and if they're a little bit late, they're paying 28%. They end up filing for bankruptcy. So I would like to see that happen, yeah.
So there's, I guess, we're getting toward the end, but there's classic conservatism, there's populism, and I guess there's common sense. Is that how you would describe some of the steps that you made? I mean, there are people that call it statism, or that we're getting too involved with managing the private sector.
I'm conservative, but I think I'm common sense. You know, it's like people say, are you a conservative? I say, yeah, but I'm a common sense person. I mean, I do things that aren't necessarily that conservative sometimes. And like men and women's sports, okay, people think it's wonderful. I think it's a horrible thing. I think it's a ridiculous thing. Open borders for everyone so that everybody's prisoners can pour in, where they come in from the Congo, where they come in from all over the world, from Venezuela. And by the way, we picked up 50 million barrels of oil the other day from Venezuela. We're going to sell it at the market price. We're going to give some to Venezuela. We're going to keep some. That's going to be great. You know, we're getting along great with Venezuela. They have tremendous oil and oil reserves and other things too. And 20 years ago, Venezuela was a sort of a pretty hot country. And now it's going to be maybe hot again. By the way, they'll make more money with us than they would have made in 25 years.
All these things the 10% on the credit cards, the not allowing corporations to buy single-family homes, it all seems to be.
They were gobbling up all the homes.
It's aimed at affordability, I think, at this point.
It's also aimed at common sense again, but they were buying up all the homes. People couldn't buy homes. You know, you have these big companies, these big corporations buying up thousands of homes and renting them or doing whatever they do with them. Some of them are flipping them for a big profit. But it got to be too much, too many. It became, you know, it's good investment. And we're not saying take them away, but we're saying that we don't want that. We want people to be able to buy a home.
The 10% cap, it's impossible to do, isn't it?
Well, it's impossible to force companies to loan to people at 10% if that's all you can make on it. It means that they're going to withdraw the numbers of people that they're
fall by the wayside as a proposal?
My expectation is that what you keep hearing from some of the leading bankers here is that they're looking for an off-ramp and that they somehow think that the president's going to find an off-ramp.
I mean, it's a nice idea, and you definitely don't want people, you know, jacking up these interest rates, but that's why you have competition in the market. And hopefully you can get rates down, but through the capitalist.
Oh, by the way, then there are credit card companies, including, you know, Bilt. We've talked about Bilt over the years, that credit card. They apparently just did a 10% cap.
I mean, you can do it. So are they offering it to people who have credit scores below
that's the part I don't know.
20 or 700? Like that's.
Right. I mean, I kind of asked the president, how often do you and Senator Warren plan on talking? Is this going to be a weekly? He goes, I called her. She was delighted I called.
And she was too. She told us herself that she was delighted when she called. She almost didn't take the line because she didn't recognize take the call because she didn't recognize the number.
It's one of those imitators. There's some good ones.
Yeah. All right, when we come back, how AI is shaping the global labor market with the CEO of Workday. Stay tuned. You're watching Squawk Box, and we are live from the World Economic Forum in Davos, Switzerland. Dominated the conversation here at Davos with major implications on the future of the workforce. Joining us right now to talk about just that and more is Carl Eschenbach. He is Workday's CEO. And Carl, thank you for being here.
Thank you for having me again.
AI is everywhere. It's changing things pretty dramatically. And I think it's changing your business pretty dramatically too. Last year, almost a year ago, you put out an announcement that you were going to be laying off about 8.5% of your workforce, but you told the workforce it was because you needed to hire in different areas, to expand in different places internationally, and to hire in AI. So what's happening? What are you seeing internally? And then we'll talk about what's happening beyond.
Yeah, absolutely. Yes, last year we did a workforce optimization exercise so that we get more dollars available for us to invest specifically around AI and AI talent. And that's worked out really well. Our hiring has been pretty robust this past year. We continue to lean into the opportunity of bringing incredible talent. Just in the last year, we hired 2 incredible technology leaders, both of them out of Google. One is our president of product and technology, and the other is a CTO. And the lineage of AI talent they were bringing into our company is pretty exceptional. So the strategy to optimize the workforce around AI talent, which allows us then to deeply invest in AI on the Workday platform, is paying off, and I'm super proud of how we've executed in the last year on that strategy.
The market is not necessarily seeing it yet. Your stock, I think, is down about 27% over the last year. I think there are some concerns about revenue growth. What do you say to investors or potential investors?
Yeah, so first let me just say I'm super proud of our performance. We're coming up on our year end here in January. Our FY26 has been a really strong year, and we're building a lot of momentum as we go into the new year, FY27, specifically around AI. To be honest, Becky, there's a narrative out there in the market that's impacting our stock. And I think it's an overblown narrative, and it's not true.
What's the
There's
narrative?
a narrative that AI is going to disintermediate or displace mature software companies like us. Let me ask a simple question. If you were to start an AI company today, would you, as an enterprise, go and support a VC-backed, vibe-coded, HR platform, or would you rather partner with someone who has 11,000 customers, 65% of the enterprise or the Fortune 500, a 98% retention rate, and we have 75 million users on our platform today? This is not a platform that services a function in the company. It's across every single employee. And we have the most highly curated set of data when it comes to enterprises supporting their most critical assets, their people and their money. We are uniquely positioned to be one of the AI winners in the enterprise because of our incumbency, and lastly, because of the trust we get from our customers. Our customers aren't saying, Becky, they're replacing Workday. They're asking us, how can you bring more AI to market so we can build it into your platform? It's not bolted on. It's built into the fabric of our data. We have the cleanest set of data in the industry, and AI is a tailwind for us. It's absolutely not a headwind.
Are you feeling like you're getting those AI tools developed quickly because of the changes that you've made over the last year?
We are. I think the innovation engine here at Workday is as good as it's been. I'm super excited about how rapidly we're bringing AI solutions to market, including our own first-party agents. I'm also excited about how we're really executing on our platform strategy. So if someone else, meaning a customer or one of our partners, wants to bring an AI agent into the enterprise, they're going to do it on top and through Workday. We are the enterprise AI platform for your workforce, whether it's agents or it's humans.
Here's the question, and we've been talking all morning, and frankly the last 72 hours about this idea in AI. In the world of AI, where's the moat, right? And I think you're trying to say here, the moat for our business is we've already organized the data, we have the relationship, and we're the trusted player. I get that. The question is, and you said vibe coded, but there are these players, and the amazing part about AI is just how quickly I could sit here, maybe with the new Anthropic Claude app, and try to build something that looks crazily enough like Workday. Now, it may not be Workday in its first incarnation, but not only can you create the sort of user interface piece, you can actually go resort and retabulate the underlying data that you've already sorted. And that's the thing that I think people say to themselves, oh my goodness, actually, the moat isn't as wide. The alligators in the moat aren't as hungry in a new world where we can do so much, and what that ultimately looks like.
Yeah, and fundamentally, Andrew, we think that narrative is out there, but it's not true.
Right.
Our customers are saying, you have our data. It's highly curated. It's data that no one else has. Why wouldn't we look to you to get all of our agents of the future? Workday, you're in a unique position. Leverage it. And you can't underestimate what trust means in the enterprise. We have not seen an enterprise replace Workday, and we have 65% of the Fortune 500. And we're working with new customers. When new customers are looking for an HRIS system or a financial system, guess who they're coming to? They're coming to Workday. So yeah, there's going to be these third-party agents. And oh, by the way, if they want access to the Workday data, we'll give it to them, but we're also going to monetize it. We're not just going to allow people to come through open set of APIs, get access to our data, and try to replicate what we're doing. They can't do it.
That's interesting. Brett, I want to thank you very much, Carl, for coming in to talk about all of these things and to lay it out. And I hope you come see us on Squawk Box on set soon.
All right, thank you. Thank you for having me.
Thanks, Carl.
Coming up, Liberty Global looking to keep broadband front and center as it competes with new technologies. We're going to hear from CEO Mike Fries next.
Welcome back to Squawk Box, everybody. Joining us right now is Mike Freeze. He is Liberty Global's chairman and CEO. And Mike, thank you.
Thanks for having me.
You are probably the perfect person for us to try and talk to, just in terms of what's happening here with President Trump, how the Europeans are feeling about all of these things. You are an American living abroad, running a European company, and there have been so much talk about how we get along between the two countries, and then competitiveness, how competitive Europe is versus America, and I'd love to get your take on it.
Yeah, listen, it's an interesting time, to say the least. As an international CEO, I'm in search of stability everywhere, right? I want people to get along. And at the end of the day, whatever your position is on the U.S. policy today, I think what's coming out of this is a more muscular Europe, one that's more focused on industrial policy, on defense spending, on the things that it needs to do for itself to get the economies going, and for that, the promise.
From a 90-pound weakling to, you're about 130 now, you're doing some...
But it's going the right direction, Joe.
Doing a couple of bicep exercises.
It's going the right direction, and I think that may be a dividend of this whole thing. Let's see. But I think the mood here in Davos, as you're sensing, is very conflicted. On one hand, we're talking about this stuff.
Yeah.
The rules-based order changing and what's going to happen. On the other hand, we're talking about AI and its transformational moment, which is like nothing I've seen. I mean, my first Davos was 2005. Internet penetration was 15%. Only a third of the world had a mobile phone. And all we talked about was this and what it might mean, and it took forever. Here, we are talking about change that is happening at light speed, so it's incredible.
You took over you took over from Malone, I guess.
As
now
chairman,
you're
yeah.
One of the questions, what do you learn from him? I can't imagine that he isn't rubbing what's happening all over his body.
Yeah, look, this segment's not long enough for me to tell you the things I've learned from John.
But he's he's a conservative voice.
Yeah, he's a libertarian. And I think
Liberty Global.
He's got
Libertarian Global.
He's got strong views. But on the other hand, he's not going anywhere. I mean, yes, but at 85, he is still as busy as he's probably texting me right now. He's got a lot going on.
Let me ask you. You talk about sort of this new world order piece of it, though. The dividend may be that Europe gets stronger, right? And maybe their economies get better and put more defense in, and that's clearly a function of maybe described as tough love from the president. That maybe that's the polite version they would call that.
Yes.
But what do you think it does long term to the relationship between the U.S. and Europe, and also relationships that Europe might have ultimately with China or India or other countries like that? That's something that Christine Lagarde has talked openly about here this week.
I think it's a red herring.
It's a red herring.
I do. I think that Donald Trump's approach is to take the extreme and figure out where. I think it's a red herring. I don't believe the relationship will change fundamentally over the long haul. He won't be president forever. I mean, I think it's too fundamental, too many things that we need to do together. So I'm an optimist. I think long term, I think it's an interesting headline to say it's changed forever. I don't think so. That's my view.
You were starting to talk about AI. How is it changing how you do business at Liberty Global?
Yeah, it's a great question. I mean, listen, what I'm picking up here is this massive gap between what AI can do and what I'm doing. I mean, your prior guest, Brett, told me the other day, if you stop building AI gigafactories today, you would get 80% of the benefits that it's going to provide. Someone else in Davos said there's a 10x gap between what it can do and what we're doing with it. So what I'm stressed out about is we're making these marginal improvements. You call my call center, the call's a little better, but these are marginal improvements. Where's the transformation? I sat with one of the big tech CEOs and I said, I spend $14 billion a year on OpEx. I want it to be 7. He said, send me your P&L, and we'll go through it. This is the kind of stuff, we'll see what it means, but this is the kind of stuff that I want to be working on, the things that are really fundamentally going to change our business. We're not there yet.
Let's talk about your stock price. Today it's up. I saw 2.75%. I think it's flat to maybe down just a couple percent over the last year.
Yeah, we're a classic value play. I mean, when I was on this with you guys a year ago, we had just spun out our Swiss business, which has now got a 4 billion Swiss market cap. And so we're in the business of unlocking value. We've got 22 billion of revenue, 8 billion of EBITDA in this European telco business, and we think that it's undervalued and underappreciated. And if we can bring these assets to markets locally, we'll find investors who like dividends, who want to own national champions. So that's the strategy. And then we have
Yeah, I spoke, it's actually down 9% over the last year.
Yeah,
Yes.
okay, thanks for that
Sorry.
correction. It's up and down, it's volatile.
Yeah.
And I think, what we're telling investors is, watch this space. We will unlock value in these telecom businesses that have a lot of positive momentum. And we're investing in some really interesting stuff in our sports and media and infrastructure portfolio. So there's some good things happening.
Yeah, some of the sports that you're investing in is the e-cars.
Yes,
racing,
Formula E.
Formula E.
Yes,
Right.
rolls off the tongue. But it's actually, we had a lot of activity on Formula E here.
Are the cars quiet?
Well, not really. When you get 20 of those, they sound like fighter jets.
Okay.
So they are loud and it is fast. This Gen 4 car coming out in a couple months, it's just a matter of time before we're faster than F1 if speed matters to you. If it doesn't matter to you, then fine. But it's the 5 fastest cars in the world have batteries. I mean, the physics of this are that it's going nowhere but up, and that's exciting for us. There's only 8 global sports on the planet. We own one. I'm happy about that. So we compete on 5 continents, and it's got nowhere to go but up.
I guess Malone had an influence on a lot of people's lives. What do you make of Zaslav? What that company was worth $15 billion, being sold for about $80 billion or something.
I'm really happy for him, and I think it's a great outcome for Warner Brothers shareholders. And it's a testament to the value of IP and content. And look, whoever wins that, they have ambitious plans, and we'll see how they unfold. But I think it's a great outcome for Warner Brothers.
Interesting piece of data. Netflix is doing pretty good, but they need Warner. I didn't really understand.
Well, you've had partnerships with Netflix. Has a partnership with you.
Sure.
So, and you've
hunt
got
hard
Warner.
models
So
on
how
it.
do you think about that? That's actually interesting. And what about Paramount?
I got to be careful here. I'm not going to come down on one side or the other, but whoever wins is going to be a partner with us for sure, or already is, because that content will be too important to us, and either party is going to be really ambitious about it.
Okay, here's maybe an more interesting one. As someone who lives in Europe, what do you think EU regulators are going to think of it?
I think both buyers will have a little bit of work to do because, as you know, EU regulators and local regulators are quite protective of their national broadcasters and their content industries. So I think both will probably have some work to do, but I think they'll get done.
Mike Freeze, Mike, thank you. We appreciate your time.
Always great to be here, guys.
Great to see you.
Meantime, we've got a news alert for you folks. You know what? Actually, we don't have a news alert for you. We're going to bring some news to you, hopefully, after the break, because we've got Wells Fargo CEO Charlie Sharp will be our special guest. Don't go anywhere. We are live at the World Economic Forum in Davos, Switzerland.
Mike, could you
is 8 a.m. on the East Coast, 2 p.m. right here in Davos, and you are watching Squawk Box on CNBC. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. Let's take a look at the futures this morning. We've been higher throughout the session, or the pre-session, I should say. Dow futures now up by about 170 points. NASDAQ futures up by 232. The S&P futures up by more than 40 points, and this does come after some major gains yesterday. The major averages closing more than 1% higher on easing U.S.-European tensions over Greenland. Treasury yields have come down from where we were earlier in the week, too. This morning, the 10-year is sitting at 4.25. The 2-year is at 3.6%. Earlier this morning, President Trump held a signing ceremony to officially launch his Board of Peace, and he's meeting with Ukraine President Volodymyr Zelensky right now. We are expecting comments from the president, and we will bring them to you as soon as that happens.
Meantime, we do a news alert. The U.S. and China have now signed off on a deal to sell TikTok's U.S. business to a consortium of investors that's led by Oracle and Silver Lake. This is now according to a report from Semaphore that says the deal is set to close this week. It's something we've been waiting on for quite some time. I should say about 2 years, multiple years. I think this started even the last administration.
And this will be a good lead into our next guest, because during a conversation yesterday with President Trump, I asked him about the Fed and the markets. I pressed him on who may possibly be his next pick for Fed chief.
I'd say we're down to 3, but we're down to 2, and I probably can tell you we're down to maybe 1 in my mind. But and I will say this,
impress you in recent?
Very impressive. Yeah, he's been there for.
Because for a while the betting markets had wars in the
Well, Rick is very good. They're all good. You know, all 3 are good. All 3 would be, I think, good. We have a problem with the man that's there now. He's too late. He's always too late, except when it comes to politics for the other side, where he was actually too early.
Another one, a person I know you have a great deal of admiration for is your Treasury Secretary.
Yeah.
He made the point that...
By the way, he only wants to stay where he is. That's one thing.
But
he's fantastic, but Scott only wants to stay where he is.
His point, as a real estate guy, some people say you always want lower rates, but Scott made the point that if you have productivity gains, whether it's from AI or whether it's from Big Beautiful Bill, whatever it is, that you need a Fed chairman that can't get too agitated about a hot GDP number. In other words, we might be at a point where we could run nominal GDP of 8%, or after inflation of 5.5%, but that doesn't mean that it's inflationary and that you need to raise rates. So if you considered someone that could be like a Greenspan in the 90s?
Well, that's what I want. I mean, right now, if you announce great numbers, the stock market goes down because they say, oh, they're going to raise the rate, they're going to kill it, which really stops you from having any great runs, and we want to have a great run. So we're going to be at 5.5 or something. They're predicting. I don't know. It's much higher than they thought. But let's say we're at 5.5. We could be at 10, or we could be at 12. We could be at 15. But immediately when they announce good numbers. Now, in the old days, you're too young. In the old days,
you think I am, but
no, but 20. I know you look good. Whatever you're doing, keep. But look, Joe. In the old days, when you had a good run, you'd announce good numbers and the stock market would go up. Now the stock market crashes every time you have good numbers because they think everyone's going to raise rates. And growth is not a big cause of inflation. In fact, it can go the other way. So look, we've had tremendous growth and we have almost no inflation. For the last 3 months, we have 1.2% inflation, and yet we've had tremendous growth.
Joining us right now from Davos for the first time is Charlie Sharp. He's the CEO of Wells Fargo. Good morning.
Morning.
How you doing?
I'm doing great.
You want to react to that? I'm just curious what you think about interest rates and the Fed, and maybe who you might even want to be the next Fed chair. How much do you care?
Care a lot, but thrilled with the choices that are on the table. I think they all make great choices, and we've got a process to get from here to there, and I think we're in a really good place.
What do you think about interest rates right now and his growth trajectory?
Yeah, listen, I think, first of all, the growth trajectory is everything that we see is really, really good. And so it's more likely than not that growth will be stronger than people expect. And for us, as a U.S. company, where so much of our business is in the U.S., we feel great about it. rates we can debate. That they likely will go lower, and that's probably a good thing for a period of time. How low they go, I think, is dependent on all the other data that we see, and I think that would be a pretty good place to be. And I think the markets would certainly feel good about it.
Okay. The other big issue, and I know you've been probably asked and have had to answer the question a million times this week: credit cards. You're in the credit card business.
I like the credit card business.
You like the credit card business.
Yes, I have one.
I assume you like the credit card business a little bit less if you had to cap interest rates at 10% across the board.
Yeah, so first of all, remember, the president has not suggested that rates get capped forever across the board. So just as we think about the business, it is a great business. It's a really important business. It'll continue to be that way. We offer products that are well below 10% for an extended period of time, so I understand that. I think, we just got to be very focused on what we're trying to solve. And what we don't want to do is put in artificial price controls that could be harmful at a period of time where it matters most to Americans that need
So
credit.
Jamie Dimon, said quite publicly that he thinks this is dangerous. And the question is, how dangerous is it? What do you think the true ramifications of something like this, even if it was just for 1 year, would really be?
I'm not sure what this is. I think we'll see. One of the things I've learned a lot from just watching the administration is they've got lots of ideas. They're very, very focused on the outcomes, and he's very focused on affordability. And the thing about this administration that I think is wonderful is they engage and they want to get to the right answer. They want to do the work. They want to do the study. So 10% everyone overall, I think, would be a real problem. But let's figure out.
But do you think it would have a meaningful reduction? There are a lot of people out there
reduction in credit
that need that credit. We were talking about, by the way, I think they were a partner of yours, Built, put out a press release saying capping at 10%. But we were saying that might be a different demographic.
Right. Who are they loaning to?
First of all, I didn't see the press release. My guess is it was capped at 10% for a year, which is what the president asked for, which is what they would do anyway because of intro promotions. So my guess is that's pretty good marketing.
Pretty good marketing. One of the other big questions is housing. And the president has talked about two things. One that he was very explicit about is effectively going after some of the big home buyers. I think he's really referring to things like Blackstone and some of the other publicly traded companies out there to tell them, we can't have you buying these homes because it's actually jacking up the price of homes. And then there's been a lot of scuttlebutt here. It has not come out yet about potentially allowing Americans to use their 401ks to buy, to put down a down payment, for example, on a home. What do you think of that as a mortgage originator?
Well, I don't really know enough about the issue of corporations versus individuals. I do think one of the things that has come out, anytime there's an inconsistency, whether it's between institutions, between individuals and institutions in terms of what it means from a tax perspective or whatnot, and when one person is advantaged, that's not a good place to be. So we shouldn't have a policy where it is more affordable for an institution to buy something than an individual. It doesn't make sense and it doesn't get to the right goal that we want, but I don't understand the full extent of that.
Hey, Charlie, I just want to congratulate you on where Wells Fargo is and the turnaround that's taken place on your watch. I mean, it's something that the markets have obviously sat up and taken notice of. What are your plans from this point, though?
Yeah, I think, well, first of all, thank you.
Yeah.
And as I think I've said, when I came on here, it really is tens and tens of thousands of people that have done the work, and so I'm appreciative to all of them. We're able to compete on a level playing field now for the first time since 2018. Yeah. And so when you look at our results, I actually feel great, not just about the fact that we put these issues behind us, but that almost all of our businesses are growing today, and we were able to do that while not being able to grow loans, grow deposits, grow inventory, and things like that. And so now we're able to do all that on behalf of our customers.
Shackles have come out.
Exactly. And by the way, the market didn't give us any degree of reprieve because we had that. They had the same high expectations for us. And so our balance sheet's up 11% since the asset cap was lifted. We're going after companies who we had to ask to take deposits away to say, please bring them back. We're increasing our inventories and financing. We're growing loans again. And so, we're still very, very conscious of being, what Wells Fargo is, thinking about our own risk tolerances the same way, but being much more on our front foot. And I'll tell you, one of the most thrilling things is to see people inside the company feeling great and being in the marketplace and feeling like they can compete again.
When you think about sort of the next, actually, you know what? I want to go back to the housing for just 1 second because we didn't get to the second part of it. For the 401k piece, do you have a thought on that?
I think it's super interesting. I think for under the right circumstances, depends on the amount. I would think about level of concentration within 401k and things like that. But it should be a long-term investment locked up in a long-term plan. The devil's in the details, but I think it's really interesting.
I was going to mention your investment bank has actually had quite a lot of success. And people don't always think about Wells Fargo in that context. And kudos to someone I think we both know, Doug Bronstein, who's been helping, and a whole bunch of other amazing people with that group. What does that look like 5 years from now?
Listen, the investment bank is one of the great opportunities that we have. It's one of the great businesses that we currently have, and Doug's done a great job. Fernando Rivas runs the business. Tim O'Hara has done a great job in terms of bringing talent on. Listen, we've always been in the business, but we've always wanted to be below the radar screen. It's a natural progression from using your own balance sheet to finance companies, to give them access to public markets, give them access to broader degrees of private credit, provide financing advice. And so, what we've made the decision is that we don't want to keep it under the radar screen. We want to grow the business. We want to continue to serve companies of all sizes. We have competitive advantages. We have treasury services relationships. We lend a huge amount of money to these companies. I think they like doing business with us and have liked doing business with us for long term, and they want more options. And there aren't a lot of companies out there that can do the types of things that we did recently for Netflix with the size bridge loan that we made, or what we did for Quikrete in the non-investment grade market. So this is a journey. I always say the world is littered with companies that have tried to do this and failed. They failed because they've hired the wrong people. They've done the business that no one else wants to do. They've compromised. They've taken too much risk. And so we're trying to be very, very thoughtful about growing this at the right pace. And we hope it becomes a bigger part of the company, and quite confident that it will be profitably with high returns.
Charlie Sharp, thank you, sir.
Thanks for having me.
Appreciate it. It's great to see you.
All righty, you
Thanks.
too.
You bet.
All right, when we come back, AI and the entertainment business, creator, musician, and now a college professor, will.i.am, will be our special guest. Squawk Box live from Davos. We'll be right back.
Welcome back to Squawk Box. Shares of Intel have jumped more than 16% this week. The company said to report after today's closing bell, and analysts expecting higher spending on AI infrastructure to lift Intel. And that's interesting. Higher spending to lift the stock. I mean, just think about that for a second. Right. Usually, you spend less money, people like you more.
Unless you have to invest in your future, and they want you to be building these foundries, which are expensive. Right.
Republican lawmakers have accused CVS Health of possibly violating antitrust laws by discouraging independent pharmacies from working with third-party competitors. A staff report from the White House Judiciary Committee alleges that CVS tried to kick independent pharmacies out of its network if they were partnering with rivals. In a statement, a CVS spokesperson said that the report is misguided, misleading, and inaccurate. Executives from CVS and other insurers will testify at a congressional hearing today. And when we return, will.i.am will be our special guest, plus the CEO of Sanofi, on how AI is impacting research and development in the biopharma industry, and much more. The futures this hour continue to rebound from the nervousness about Greenland earlier this week, now adding to yesterday's gains. Squawk Box will be right back. In my conversation yesterday with President Trump, he explained his common sense approach to politics and his expectations for Venezuela.
I'm conservative, but I think I'm common sense, you know. It's like people say, are you a conservative? I say, yeah, but I'm a common sense person. I mean, I do things that aren't necessarily that conservative sometimes. And like men and women sports. Okay, people think it's wonderful. I think it's a horrible thing. I think it's a ridiculous thing. Open borders for everyone so that everybody's prisoners can pour in, where they come in from the Congo, where they come in from all over the world, from Venezuela. And by the way, we picked up 50 million barrels of oil. the other day from Venezuela. We're going to sell it at the market price. We're going to give some to Venezuela. We're going to keep some. That's going to be great. You know, we're getting along great with Venezuela. They have tremendous oil and oil reserves and other things too. And 20 years ago, Venezuela was a sort of a pretty hot country, and now it's going to be maybe hot again. They'll make, by the way, they'll make more money with us than they would have made in 25 years.
I like common sense things too, but there are certain things that that on face value appear to be good ideas, and we know through history that where a lot of well-intentioned ideas lead. And I think sometimes the administration, I think Charlie Sharp was talking about, they try a lot of different things, and if it is borne out or they get talked out of things, then they'll say, okay, maybe that wasn't such a great idea. And there's, well, you know, there's a lot of things that, and you've pointed it out, if it was a Democratic administration proposing some of these things, my hair would be on. I'd have hair on fire a lot too. Some of these things, if Elizabeth Warren is calling them all the time and they're like nodding with each other, I think I have a problem with I would have a problem with that.
I'm aware of that. I'm aware.
But you kind of go the other way. All of a sudden, all the Elizabeth Warren ideas you don't like so much now that Trump's thinking about it.
No, you know I've always questioned a whole bunch of Elizabeth Warren ideas, but you know I think there's a bunch of her ideas that sometimes make sense.
If the president starts saying, "Well, that Mamdani's got some great ideas," then I think he kind of bordered on being somewhat.
Had a very.
I just wonder whether there's a different. I just wonder whether I think the destination that he's getting to may be the right place. Meaning in terms of even what he's forcing Europe to do for itself and everything else. The question is how you get there, and does it matter how you get there? Because I do wonder whether there's longer term implications in terms of the relationships and things. I don't know if it's just as elastic as people think.
Pick your expression if you want to describe the way the president, for better or worse, how he operates. Do you like baby with a hammer? Do you like bull in a china closet? Do you like, I mean, baby with a hammer is pretty good. Like if you're like, let's say a 10-month-old gets his hands on a hammer, there's no way that turns out.
Yeah, but I think sometimes you got to coddle the baby.
Not when the baby's Europe. Don't tell me that.
Well, we got a guy from Europe we talked to about some of this.
We do indeed. In fact, joining us right now to talk pharmaceutical landscape, what's happening, everything from the new vaccine policy and drug pricing in the United States to how AI is accelerating new treatments, is Paul Hudson. He is Sanofi's CEO. And Paul, thank you for being here today.
Yeah, very happy to be here.
We have so many things that we could start talking about, but why don't we start with the perspective of what you heard from the president yesterday, what you think that means for your business at home and abroad?
Well, there was a lot in the speech yesterday and in the conversations people had. You know, whenever there's these important political moments, I'm always left wondering, where does it leave us on healthcare? What do the rest of the team think? What does it mean for patients, for health inequity? We had great conversations with Dr. Oz and the administration around how do we make sure patients who need medicines get them, what could be improved about U.S. healthcare. Many of us have already spent time with the administration to get to a greater understanding of how we can work together. I'm encouraged, actually, by the energy for removing health inequity, and I think it bodes well for access to innovation, not least the US, but perhaps the challenge the President put down for Europe is also an important one. So,
in terms of them paying more for some of their medications?
I think we start with making sure people get access to medicines. A lot of people need them, and we're trying to do our very best to demonstrate our value, of course, but I think getting it on the agenda, I think that's important. Where we go from here, we'll see, but I'm very encouraged about conversations I've had with heads of state around health as a priority. I mean, it sort of gets lost sometimes, and it really shouldn't, given how many people need help.
What the president was saying in his remarks on the stage here yesterday is that he's spoken to some of these countries, whether that be France or some of the other countries here, and said you're going to have to pay 200 to 300% of what you're paying now in order to make sure that it's a more equitable split between what the United States and other countries are paying. Do you get the sense that those countries are hearing that message and agreeing to it?
I think there's a little way to go on the conversation, and I have to, pilot our own organization
through some of this complexity. The only way for us to do that, by the way, is to do things that have never been done before, to research rare diseases, to go after unmet needs, to try and do things that ultimately health systems will want to pay for. They get people back to work, they change, save, or protect lives, and that's the journey we've been on. And you mentioned AI earlier. We're trying to make sure that we're using AI right across the governances in R&D, set higher bar, be more demanding, because in the end, innovation is the only thing we know will be rewarded. Right. When all is said and done, if you're doing things that have never been done before, and that's what we laid out 2 years ago for the company, that's where we'll get the relevance, that's where people will need what we
But
do.
how much do you fear that if President Trump can't convince a Macron to pay more for the drugs, or any of these other European countries to pay more to balance out what he wants to do in the U.S., that he's going to say, okay, then we're just going to run serious price controls here in the U.S., and that's going to change your entire business model? I mean, that is the underneath it, beyond tariffs and everything else, that's the threat to your business.
I think we're now having the debate, and I think the debate is very necessary. We don't know where we'll net out. I've said before, innovation is what is our absolute heart of what we're doing at Sanofi, is the only thing that can protect us in those difficult situations. We're delivering an incredible commercial performance. Through Q3, we're outstanding. We hope to continue that through full year and announce that shortly. And that type of improving how we run the business, how we allocate resources, allows us some protection for what may or may not be ahead. I'm encouraged, by the way. I think Sanofi is extremely well received in the debate with heads of state on what we can do. And I find that we're moving to a much more desirable conversation than we thought would have been possible previously.
Paul, you've had great plans. You've laid out this pipeline. You've got a lot of drugs that are in the late stages of trying to get through some of those issues. And you've talked about how you're going to be moving over the next 5 years, I think, from high single-digit growth to double-digit growth. Yeah. That's your plan for these years. But if you're looking at the stock, it's down. And I think that has to be in part because the drug companies have faced these pressures. You have agreed to go along and discount drug meds on Trump RX. You've also cut prices, I think, by about 61% on average for a select group of drugs that you're offering at lower prices for Americans through Medicaid and Medicare. The street wonders, though, how do you take all of that and make up for it in profits?
Well, again, firstly, there's two things that drive value in our sector. One is top-line growth. And after the obesity companies, we put ourselves in the top decile, right? So we're doing a great job on that. Secondly is pulling the pipeline through. And when you're doing innovative first-in-class, best-in-class, there's a lot of work to do. We've completely reinvented how we do R&D. It's not a fast job, right? The biology goes at its pace. But we're getting very close now to those readouts and the excitement around what it'll mean for patients. So we have had a plan for 3, 4, 5 years, and now we'll find out exactly how well we deliver on the plan over the next 12 to 24 months. We're extremely optimistic as a company, and again, we're delivering superb performance. We need to make ourselves resilient. We need to turn the cards over in R&D. Internally, we would tell you we're setting a higher bar for patients and treating them than we've ever set in the history of the company. So, of course, a little bit of luck along the way, but we think it's the best way as the narrative changes globally, politically. I think innovation is going to come more forward into the narrative, and we'll be well placed for that.
Other things that you would like to see happen, you mentioned rare disease. I'm obviously very interested in that too. Where are you working on that, and how does that become profitable when you're generally dealing with such small patient groups?
We're one of the world's leaders in rare diseases, and there's such small numbers of patients, as you mentioned, but it's so necessary to help. And we've been able to run a successful business and doing that at the same time. That's going to continue. We're well placed for that. We just launched Wayrils in ITP, and we're going on to, it's already had a great launch. We've been launching extremely well over the last 12, 24 months. I think we have a duty to do that work. That's why most of us are in healthcare. But I think the way we set ourselves up on the balance of the portfolio, we can support those patients with first-in-class options, and we can run a really successful business at the same time. And I think it's important to do that. That's why I'm in healthcare.
How is AI changing the drug discovery process? Is it moving the timelines significantly?
Well, I think there's a part of the timelines that are regulatory approval, and we hope that they update and use AI as well. There's part biology, and there's a part process. And I think we've managed to strip a lot out of the timeline on in the governance committees by being, radically objective with AI as a sort of neutral voice in the room. Often now with some of the decision making, we will ask the agent what it thinks at the beginning of the meeting, not because we're going to go with what the agent says, but the agent doesn't have a career at stake. It will give you a dispassionate view, and then we can have a real debate from a great starting point. Some people have been involved in projects for a very long time, and rightly so, but we have to bring even more ruthless subjectivity into it. I think that's somewhere where the company over the last 12 to 24 months has really honed the AI contribution to the governance and decision making, and over time it'll give more incredible medicines. It'll make us a bit more efficient, and the cost and speed will change, and that's good for everybody. We're very proud of that. I think we're one of the earliest adopters broadly in AI in pharma, and of course, it'll have to show itself over the next 12 to 24 months, but we have some big readouts ahead of us. Everybody's feeling very excited about what we're doing, so we will see where we get, but I'm excited about 26.
Paul Hudson, thank you very much.
Thank you.
Appreciate it.
Thank you, everyone.
Coming up next, AI and Payment Biz. will.i.am is going to be our special guest. And then President Trump launching his Board of Peace earlier this morning with a signing ceremony. He just met with Ukraine's President Zelensky and described that meeting as, quote, very good. Former advisor to the president, Jason Miller, is going to join us. Don't go anywhere. Squawk Box returning from Davos, Switzerland after this. Welcome back to Squawk Box. I want to talk more about AI's impact on the music industry. Joining us right now is creator, musician, and now a professor at Arizona State. will.i.am is here. It is great to have you on the broadcast.
It's always good to be here.
And you've been sort of on the edge of the envelope when it comes to technology, but AI is really here, and it's affecting music in all sorts of interesting ways, from the bad stuff like AI slop, but then there's also all sorts of new artists that are emerging and older artists who are using AI on top of it. And I'm so curious where you really think this all heads and how happy or unhappy you are about it.
It's a mixed bag, right? I love technology. AI slop. This is the worst it's ever going to be.
Right now.
Well, it's technology, so technology will continue to get better and better. And it's math, so we're going to move from prompting to promptless systems. And so it's Pac-Man right now.
But do you think that any of that music is real? I mean, would you say that like an art that you're going to give credit to an artist for creating music this way? Do you know what I mean?
Like imagine it's 1970, and we're talking about jazz here.
Right.
A jazz musician would say, "Hey man, what do you think about these samplers that are coming, man? People just sampling our stuff that we did back in the past, man. You think that's music, man? Just sampling stuff, man." Turns out that that's the form of hip hop, sampling,
right?
And using technology to reimagine and chop up and reconfigure, doing poetry, tapestry, collage music. Like so, I can't be that critical over AI because I have a career sampling music. So, and the songs, people like the songs, like Pump It is Misery Loop by Dick Dale. And I reimagined that and
But you are a human who took creativity and added to it.
Yeah,
If it's a machine that's doing it, are they just stealing it, lifting it?
Well, that's all. You got to be careful with that too, because there's a lot of Shakespearean plays that have been reimagined, and somebody used that as reference points to create films. Whether it's the hero of a thousand faces, we've taken and borrowed and created. But at the core of AI music is some developer, and that's their art. So you can't discredit their art for creating that algorithm to create. Yes, they did borrow from music. They did train on the entire library that humans have made, and that people should be paid for when you train on that. And then we're going to get to a point 20 years from now where it would have evolved, and it's not about training on yesterday's music. We have to prepare ourselves for that too, because the AI that we're concerned about is not here yet. And that is the AI that's creating just on its own.
How hard do you think it is to create today the next superstar? Meaning in such a fragmented world, where you go to like Pop Rising on Spotify, those songs are like, off of TikTok basically, from some smaller influencers that are now in the music business that might have never even been in the music business in the past. And so you have so many people. Can you create a summer hit anymore?
No, because just a couple of years ago, 10 years ago, we were communal. Everybody listened to MTV or the same radio station. Everything is now fragmented, and you're lucky if in this fragmented world, everyone is like magnetically drawn to something that's trending, but that trend's short-lived. It isn't like the full summer or the whole year like it used to be. There's an onslaught of like attention bombardment, where what used to be sustained over, like I said, a summer or a full year.
So do you think you could start a career right now and be who you are?
Well, yes, you could start a career. Is it going to, like my career wasn't the same as Lionel Richie's career. Lionel Richie was at the height of selling vinyl. My career was at the height of selling CDs. Today's artists are at the height of TikTok, relevance.
But when we talk about, like a Beyonce or Taylor Swift, do you almost think that it's like a different generation?
That's a we're selling records generation. Taylor Swift sold MP3s. Now, we are now in a world where DSPs have devalued the worth of music. Like, music is not worth the way it was when Lionel Richie got rich.
Right.
When Sammy Davis Jr. was,
But,
you know,
does that mean
Candyman.
does that mean it's all live now? I mean, that's the other piece.
We're going to get to a point where live is the place to be. You can't trust the screen in a couple of years. It's going to be indistinguishable between human music and AI music, or organic oranges or oranges, whatever oranges are, if that's organic orange. We're going to have to be able to say this is human music, this is AI music. You have to be able to.
Well, you remember there was a whole lip sync. You know, I remember Milli Vanilli, and back in the day, people would talk about a live thing, and people would be lip syncing, and everyone said, "Oh, you live, even live is changing."
But now everybody's Milli Vanilli.
I'm here.
So how about that? So now everybody's singing on top of some vocal. Everybody has some backing track and not really performing. On the Grammys, flat, it's going to get to a point where you truly have to improv. You truly have to, perform. Theater is going to be like, did you see that play? Did you go see that? At least that's my hopes. As much as I love technology, we're going to get to a human-made, that's the value. We're going to, you know what I mean?
Now that you're a professor, what are you teaching these kids?
We're teaching these kids to build their own agent, because we're now like sharing the same village agent, the same village AI.
What does that mean?
So, I love OpenAI, great company, great product, ChatGPT. I love Gemini, Google's rocking it, and those type of services are always going to be needed. But you need your own agent, and for you to have your own agent, you need a GPU at the house. You have a house? You have a refrigerator?
Yeah.
You have a toilet?
Yep.
You have a sink?
Yep.
You have a stove? Do you have a data center at your house?
I do not.
Thank you. Right? Why don't you have a data center at your house? Because you and the concept of us having our own personal agent, that's not the product yet. So what we're teaching at at ASU in my course, Agentic Self, with a collaboration called Edufy, are students to build their own agent. Thank you, NVIDIA. Thank you, Jensen, for providing GPUs for our students to marry and mint their agent that they build onto their own personal GPU. Because, for example, you have a job.
Yep.
To get a job, you need a bank account. You have an email address.
Yep.
You have a phone number.
Yep.
You couldn't get a job without it. You can't. If you took all your money, went out and bought a house, you couldn't pay in cash. You can't do those things. In the next couple of moments, you're going to need an agent to have a job. Especially when you're seeing, I know you reported a couple of weeks ago, how many jobs have been replaced with agents. So they're replacing humans with agents, and those agents don't even have a lived experience or certificate or diploma. So thank you, President Crow, for providing certificates for all of our students, taking the Agentic Self course, so that when they graduate, they also have a certificate for the agent as well.
How many students are in this class?
100 plus students starting off.
I would say that there's got to be huge lines, people trying to get into it.
Yeah, so it was 100, we capped at 100, now we got 100 plus. Really awesome. And I'm so excited because I'm seeing like the next 15, 20 years of my life. I get the same joy writing a song to programming my course. Programming like how to get the students engaged, motivated,
Okay, so I got a crazy question for you. I mean, there's an IP question about who you are.
Yeah.
So there is so much. I mean, you've created all sorts of music. You've also created all sorts of other content. It is possible that AI will be able to create an AI version of you.
Yeah, I heard it.
You've seen it. You've seen people do this, and potentially sing songs even long after you're alive.
I heard that too.
Sound like you, look like you.
Yep.
Is that a good thing for you, that you could live forever, and that you could even be teaching this? Forget about even singing. You could be teaching this class even when you're not teaching this class.
The reason why it's a bad thing, or yourself.
By the way,
I've seen you like tell the news.
Yeah.
Sit here. There's going to be an Asian version of you.
Yeah, there may be.
Right. The way that you present and share and storytell and break information. That could be scraped. CNBC could make a doppelganger of you. But the reason why that's a bad thing now is because you don't own your agent.
Right.
I don't own. So there's not a bank to bank your data. I have a bank that banks my money. But
So what you're talking about in an agent is basically we own our own likeness, our name, image,
Yes.
likeness, all of it.
Yeah, so if you own it, it's not a problem.
Yeah.
If you own it, just like I have my bank account where my money's at, I have my investments, and there's companies put in place with practices and laws around it, and we're all safe.
Right. So how far do you think we are from that? Because right now, everybody's scraping everything.
Yeah, right now we're in the WWW. And that ain't the World Wide Web, that's the Wild Wild West. We're in the Wild Wild West. There's no sheriff in town. And in these movies, the gunslinger comes in, pew pew, and no one's accountable. Somebody got pew pew, bro. And there's no accountability to the pew pew. And so the laws, the regulations, to make sure that we're safe without stifling innovation, because I'm an optimist, is right around the corner.
You're an optimist that we're going to get laws like that.
I'm optimistic.
Who is going to push for? The problem is you have big companies who don't want those laws to.
That's not true.
No?
Mark Benioff, you saw what Mark Benioff did yesterday. There's some things that are happening where agents are being like suicide coaches for teenagers. Teenagers are killing themselves with these tools.
Right.
Mark went up there and was like, "Yo, we need to get this under control." So you're seeing right now the beginnings of like, let's get this handled. So you have to be an
You're going to
optimist.
say, let's get this started.
So, and then I wanted to, you know what I'm saying? We started doing, you could be Fergie.
I know.
We can make it happen. But I got a feeling that everything's going to be all right.
Well, I am. Thank you.
so.
Thank you.
Appreciate it. That was a lot of fun. Thank you for coming in.
Yeah. Really great. Thank you. Let's get a check very quickly on the markets this morning. We've been up all through the morning. If you're looking right now, you'll see that the Dow is indicated up by about 225 points. We've also got the S&P indicated up by 46, the NASDAQ by 250 points, and this builds on the gains from yesterday. Obviously, a lot of relief in the markets yesterday with the news that President Trump looks like they're reaching some sort of agreement. Those tariffs are not going to be coming, at least next month. That's what it looks like at this point. If you check out treasuries, you'll see right now that yields are lower than we were earlier in the week. 10 years at 4.25, the 2-year is at 3.61. Oil prices, with everything that's happening in the backdrop with Venezuela and Iran, actually down by about 1.5% to $59.67 a barrel. Let's take a look at crypto prices, too. At this point, it looks like crypto, Bitcoin is down slightly, $89,642. The dollar, which has been under quite a bit of pressure recently, had a very rough session earlier in the week, now trading at 98.65. And finally, gold hitting yet another new record yesterday. It's a broken record. It sounds like to say this almost every day, but the gold prices this morning giving back a little bit, down by about $22 to $4,815 an ounce.
Next, former advisor to President Trump. I still think he's kind of a current advisor at times, I believe, too. Jason Miller is going to join us to discuss the top issues here in Davos and beyond. Squawk Box will be right back.
Breaking: Trump appears to be gearing up for a potential all-out conflict with Iran. Do you think so? I don't think so. Oh, better get my boots ready. I'm here. Run deep. It's me. Okay. Well.
What's the easiest tool to manage
Welcome
my...
back to a special edition of Squawk Box. We're live in Davos, Switzerland. On a panel here yesterday, JP Morgan CEO Jamie Dimon weighed in on President Trump's immigration policy.
Davos.
I don't like what I'm seeing, with 5 grown men beating up little women. Okay, so I think we should calm down a little bit on the internal anger about immigration.
Hey, join us now for a closer look at President Trump's message in Davos. Jason Miller, who served as senior advisor on President Trump's transition team and election campaigns. I'm not sure about the linkage of bringing you on after playing that. We didn't play it all.
I got 691.54 on the spy.
Thank you.
Thanks for having me.
We were just talking off camera about the president coming here. You had something to do with I guess organizing such a big turnout of administration for Scott Bessa and Howard Lutnick, the president himself. Has it been a good experience for the president? You said something about someone might like a world stage, I guess.
As we know, President Trump loves the world stage, and I think the reception that he received here at Davos was really quite overwhelming. And even yesterday, when he was delivering his remarks, I think a lot of folks expected him to come in and talk about Greenland, but they didn't expect to hear such a clear, concise case of why the U.S. should own Greenland. And everywhere we went, there were administration people all over the place. As you mentioned, Secretary Bessent, Secretary Lutnick. In fact, I bumped into a gal that works at the WEF who's been with the organization for years, said she's never seen an administration have this large of a contingent at Davos. And the reason why? America has a great story to tell. President Trump has a great story to tell. Everywhere you saw Americans, you saw optimism this week. Except for Gavin Newsom, you can't help him.
You were in the room, I guess, during the speech, and I guess people were listening quite.
You had to throw that in there
to the president at that point. Own the room.
They were, and that's the thing that
uncomfortable things to hear for a lot of Europeans.
But I think that's a big part of the reason why people respect him so much, is that he's going to come in and tell you exactly what he thinks. By the way, you can also follow him on True Social and find out exactly what he thinks, as you guys do and react to almost every day. But I think Europe needed to hear that. And one of the things that, this is my first trip to Davos, learning is that the sense of optimism that you have with the U.S., with Americans, not necessarily shared by the Europeans. And almost all the Europeans I met with or spoke with seem to be pessimistic, or seem to be dour. And I could see why they'd be frustrated with the EU and the overregulation. But Americans believe the country is back, the economy is back, and we're taking off like a rocket ship.
We don't talk about the overregulation. We haven't in a couple of years just starting a beer company in Greece. If you try it's basically impossible to break through in a lot of entrepreneurial endeavors all across Europe. And I think the GDP numbers for the last 20 years speak exactly to that. I'd be in a bad mood too, I think.
And I think that's a big part of the reason why so many people want to invest in the U.S. And you see the stock market taking off this first couple of weeks here, and even at the end of last year. The optimism is in the U.S. The investment is going into the U.S. And I imagine coming out of this, you'll probably hear some more deals about folks investing in the U.S. as well.
Let me ask you a question just about maybe process. Maybe not even the outcome. I think a lot of the outcomes, obviously the outcome yesterday between NATO and the United States over Greenland is a positive outcome. But there's a process question, and I think even if you talk to a lot of the most influential, biggest name CEOs in America, they are conflicted at best about how we get there. And in part think actually that long term it could damage the underlying relationship and trust between European nations, European companies. I've heard some of them privately even complain about just how much of the conversation is actually about that, and what you think that ultimately looks like long term.
Yeah, really good question, particularly for the markets as people are watching this. I think that Europeans needed to hear this message from President Trump, and unless they heard it from him here in Davos in very plain, straightforward, easy to understand way, they're never going to have the courage to make any of these reforms. If the current path, whether it be on the population, whether it be on the economic trends, Europe's heading in the wrong direction. You look at the United States and what we're doing, it's a great place to go and put your money and invest. But President Trump came in, someone had to tell the Europeans what's going on.
When Brigitte Bardot died, the one thing they talked about, she was controversial because early on she said Paris is changing, France is changing, the immigration policies of Europe are changing these countries. And I think they had to sit there and listen to the president berate them yesterday on cities that are unrecognizable from where they were 20 years ago.
Yeah, and Andrew, I want to go back to the point you were making also just about the process aspect of this. President Trump realizes he has 3 more years in office, unless I can convince him to run again in 2028. That's a joke. That's a joke.
Don't say that to around here.
If you do all the first 3 campaigns, you'd have to stick around for the 4th.
You can say that around here.
President Trump knows he has a finite amount of time to get the U.S. on track, but also get our allies on track. We see what he's done with increase the spending that they're going with, because we don't know who's going to be next. Obviously,
say that around
Vice
here.
President Vance, but there are no certainties in life. We have to get it done now.
What did you make of what Mark Carney's speech? Because there was a lot of people talking about that in terms of sort of a new world order, the idea that some of these countries ultimately that have been allies of the U.S. may be allies in some ways, but may have to find new friends, including friends like China, which is something that I don't think we ever wanted to push people to the
Did it occur to you that sucking up and partnering up with a repressive communist regime is just, that does not compute for a Western nation like Canada?
It may not, but by the way, they're going to have BYD vehicles in Canada, and they're going to be on our doorstep.
I wouldn't put it past Mark Carney to think that China is a better partner than the United States, but I don't admire someone that would come to that conclusion.
I'm just doing that. He's clearly playing to his political base.
Yeah,
and that's a
Will be a fight today.
Statement to say that Canada might look to partner up with China. And again, to your point, Joe, if that's where Carney wants to go, then more power to him. The fact is, Canada should be a good ally of the United States and vice versa, but also the United States can't be expected to cover everything for Canada or to be taken advantage of with trade deals. And so I think the president's right to push him. And look, Carney needs to come around, tune in. We have a limited amount of time to fix not just
Western
the country.
Canada for the Uyghur, reprocessing camps, a lot of room out there. That might be a great place. Let's see if Mark.
Look, I'm not suggesting this is the right path. I'm suggesting that the fact that a Western country's even talking about that aloud.
Well, if he's talking about it aloud, it's his problem. That's my point.
And we're going to see. Do you think there's a way to repair the relationship with Canada?
Well, of course, there's always a way to repair the relationship. But President Trump knows he's going to get the deal done first before he can get better terms, before we probably get to that point. But Carney needs to get on board.
And one last thing about the Supreme Court and tariffs. The president has used these tariffs through executive order very effectively. There is a possibility that the Supreme Court will say that you can't use these tariffs the same way. Not saying you can use tariffs at all, but this mechanism could change. And the question is, if this mechanism changes, what kind, he's used these as sort of a chess piece in terms of leverage with all of these other countries over so many different issues, and how you think that dynamic shifts if in fact he doesn't have them in the same way.
So I'm not a lawyer, definitely not a trade lawyer, so I can't speak to necessarily the Supreme Court specifics.
You're not very bright,
but the
then.
smart lawyers that I speak with, including Jameson Greer, our fantastic trade rep, feel very confident about how things will turn out with the Supreme Court. And there are all sorts of mechanisms that President Trump can use, and that's one of the transformative things that he's done with his presidency is use the ultimate soft power, which is trade. It used to be power would only be if you move a battleship or an aircraft carrier off the coast. Now you can use trade to move things, saving lives.
Jason, thank you very much for joining us. It's a pleasure seeing you.
Thank you.
We appreciate
Thanks
it.
Thanks for coming.
Folks, that does it for our coverage here at Davos. It has been
That
quite
does
a
it.
week. We're on our way home after this.
Not true.
Oh, wait.
See you tomorrow.
Andrew's here
I'll see you
tomorrow.
tomorrow.
Are you two going on the same
We'll see
plane?
you later. Right now it's time for Squawk on the Street.
He doesn't want to go.
Question is, are we going back on the same plane?
Good Thursday morning. Welcome to Squawk of the Street. I'm Carl King today with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Stocks continue to shave away some of the losses for the week as the president now returns home from Davos. Oil, gold, the VIX.
I understand why they go to these cold places where they could go like to the beach.
As final Q3 GDP comes in at 4.4. That's the best in 2 years.
The market's up today.
With optimism in the markets as the president backs
Randy.
to hit Europe with tariffs over Greenland, saying there's now a concept of a deal.
There's a concept.
Debate over immigration.
Yesterday we were going to war. And Trump was going to blow up the world. Today there's a concept.
And what's been going on with the semis overall involving that so-called AI trade.
Let's begin, though, with the markets looking to extend the rally from yesterday, sparked by the president's comments in Davos about Greenland. He says there is a framework for a future deal regarding the Danish territory. This is what he told our Joe Kernan.
Oh, he told him.
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland, and it has to do with the security, great security, strong security, and other things.
Still on the hunt, Jim, for what the incremental gain is, although there is reporting about pockets of sovereignty for the U.S.
I think that there is a tone. They're speaking to a lot of terrific CEOs on the record. I speak to a lot of CEOs a little more off the record, and there's a sense of relief, but there's also a sense of it's a little unreal that this is American hegemony again. You read these articles in the New York Times, basically says we're losing our place. In the Wall Street Journal, and China's passing us. The execs I see are saying, hey, listen, win one, another one, let's move on to the next. He's speaking for us. We've got the year made. And then you try to go deep record and keep saying, but isn't there an absurdity to it? Isn't there something about when you look at Greenland that it was an overreach, Cuba about to go? David, no one will go. No one will say.
Initial
no one will say, you know what,
reaction to core
it is an interesting time.
price index.
Is that surprising to you that there's an unwillingness on the part of executives to be critical at all, even on background?
I voted.
Just
fear. Yeah.
I was the first to vote.
I don't think there's anything. Let's say we were back in college. I think people would say, the world's upside down. I don't get it. Or even maybe a junior level executive.
Well, that's why there's been so much attention on really four people who've pushed back publicly in various areas: Darren Woods, Jamie Dimon, Mark Carney, and Jay Powell. Two of them are central bankers. Two of them are CEOs.
Look, I think these people. I remember once when I outed a particular insurance company executive as being dead. I got a
You're kidding about the postponement of the F minus? How dare you?
I felt terrible. I didn't want that. But I think that these people are vulnerable. I think that Mark Carney could make it so the tariffs go up huge. Darren Woods could lose a concession. There's payback. There's payback.
There's conceivably, yes. And by the way, Darren Woods, CEO of Exxon, just said what we've been reporting and what many others acknowledge, which is this is going to be an extraordinarily expensive undertaking. We want long-term security guarantees, and security broadly speaking, and of course was excoriated by the president as a result. Very much unclear what will be the result.
Who is that guy singing in the background?
Most CEOs at this point, I think we can say.
Someone asked me who's that guy singing in the background, and well, believe it or not, it's me. Thank you. Thank you very much.
Table came out with sort of kind of a stunning statement at the time, talking about it's not just about that. Well, it is just about that right now, it would seem. Judging him again.
Powers are good calculus.
I mean, that's a tough answer, Jim, but it is notable. And it's funny, I was just having a conversation this morning with somebody.
Okay, I'm going to walk into the kitchen.
Who noted to me as well that even in private, many CEOs
take off my shoes and put on my slippers.
Significant criticism. By the way, even if you agree with a lot of stuff, you typically would criticize something, but in this case, no, so maybe it does go back to fear.
Well, I think it matters because people at home have to understand that they may think that it's little.
You got a little bit more dishes to do.
We all kind of say, oh yeah, it's fine in Greenland. No war there in Copenhagen. Avoided the 101st being sent to. But people are saying the same thing to me at the highest level, which is
Yeah, we might go down then back up too.
And when I asked to go deeper,
It's a tough decision based on technical analysis.
It's not defensive. It's more like, why are you doing this to me? Why are you doing this? Didn't you see?
Magnificent. It's a tough decision based on technical analysis.
And I read the paper. Don't go there.
Right. And it's not just about foreign policy either. Diamond's criticism in particular has been about domestic issues like immigration. Take a listen.
I don't like what I'm seeing, with 5 grown men beating up little women. Okay, so
no, I don't want to change my vote.
Down a little bit on the internal anger about immigration.
No, you're totally angry. I should.
Of course, the raids from ICE in Minnesota and apparently now Maine that gets a little bit bigger.
Yeah, and then we have Brian Moynihan still being hurt because of the debanking. Can they really do anything?
Listen to this headline.
To the president, can they change the narrative?
Ted Cruz seen on flight to California ahead of winter storm in Texas. How dare him? He's done that before. And why is he wearing them sunglasses? Woman says Barron Trump helped save a woman's life after witnessing a violent assault. Washboardjim awarded Chartist of the Year of 2025. Galvin Newsom and Livid Goose caught at a Missouri hotel at midnight. Is everybody ready for the snowstorm? I'm scared. I have to make a phone call. Save me 2 bags of ice melt, please. Oh, I need to message my manager. Well, I wonder how hard it would be to hitchhike all the way across the country. In a safely manner. Or if I could do it on an electric bike. I could do that. Probably. $50 miles a day. Okay, well, the crowd's going wild here at the sports arena. If you shovel snow, make sure that you don't overdo yourself. Oh, that kept playing. Oh, that's nice.
We'll look at some of the declines in volume in various categories, and of course GE guiding above on this surge in air travel, all when we come back.
No, turn up my shoes. Yep, 15 more minutes. It seems like I really missed something here today. Huh. Well.
Welcome back. Intel shares trading now at a 4-year high, extending yesterday's 11% gain ahead of earnings due out after the close tonight. Chip maker is this month's biggest gainer on the NDX, up more than 47%. Jim, this has to surpass even your expectations.
Yes, it's a must-own. I've loved Lip-Bhutan from the time I met him and worked with him. I do think that what he's done, he's ridden the wave. There is a shortage for most of his product. They actually losing some share to AMD, which is doing well, but it doesn't matter. What I point out is even the Foundry Initiative, which everyone thought could be a white elephant, may be right. Lucky, good, doesn't matter.
Jim, maybe you've been lucky here, but it's certainly been good because you, minute Lip-Bhutan was appointed, you were positive on the stock,
Very taken
and
by
you
it.
changed your opinion. So kudos
Well, I
to
mean,
you.
I remember when the president went,
Because
they
it's
were going to
been-
fire him, and
It's been right. Then the president was going to fire him. Then he turned him around. Then the U.S. invested $10 billion, which, by the way, is looking very good.
That's good buy.
Yeah, really good buy.
Nvidia, good buy.
May have been a double. But you can see, and yesterday we didn't really have a show, obviously, to discuss, but many of the names we're looking at, whether it's Micron, it was also AMD, it was a lot of CPU-related trading going on. Nvidia had a decent morning, certainly, but nothing like a 10% gain in Intel or the significant gain in MU or AMD or and on from there.
Okay, I have it.
ARM.
Ben Stoddle and I worked on
So
it.
what's going on?
Okay, so here's the ones that have the shortage, can't be met. Micron, Western Digital, Seagate, SanDisk, Advanced Micro, Intel, ASML, Lam Research, Applied Materials, and KLA. Last three being Semiconductor Capital Equipment. Those stocks are up 36%, 40, 25, 111 at SanDisk, 16 Advanced Micro, 47 Intel, 27 ASML. This is from the year begin. Lam 33, Applied Materials 26, KLA 25. Now get the obverse, okay? This is the losers. This is the software, enterprise software. Salesforce down 16, ServiceNow down 18, Adobe down 15, Workday down 14. At one area this morning, Atlassian down 24, HubSpot down 25. There it is.
Yeah, CRM, the worst Dow stock of the year so far. I like this note from Melius yesterday, Jim. The more Taiwan Semi raises prices, the more an elephant like Apple will be forced to engage with Intel and its founder.
I thought that Ben Rice's piece was very strong, and I think Apple's going to be able to get some business. They actually need the foundry. Now, there's an example, by the way. I've been very critical of Pat Gelsinger, but the foundry's going to, remember, this is the U.S. government, back them. They have great partners, U.S. government and NVIDIA. By the way, Jensen Huang, long-time friend of Lip Bhutan being perhaps the godfather of semiconductor in this country, whereas China, of course, being in Taiwan. David, when you see these things, when you go back to what Andrew said in Davos to Carl Eschenbach from Workday, which is, can't I just go make your product by going to Claude? And immediately, which, this, and Carl, I've been on the show many times, says, no, there's an element of trust you can't have. Andrew pushes back, comes back to the element of trust. David, I don't know what to do with ServiceNow. I don't know what to do with Adobe, with Workday. And yesterday it happened for the first time. Microsoft, it can be beaten by Anthropic. I don't believe that, but that's why that stock was down so much.
This is one of the key questions that investors are wrestling with right now. The answer has been just sell, and I'll try to figure this out later as time goes on. Despite the protestations to the contrary from Mr. Benioff, for example, who was on with Sarah earlier this week, and many others, and Bill McDermott, there is this fear that the tools that Anthropic is developing with Claude, software, being able to write software, by the way,
which
the agentic revolution will ultimately disintermediate many of these companies, even as they have announcements saying they're incorporating that very software into their offerings.
Now, is that because there are just not as many seats? They have what's called a seat model, so therefore they can't bill as many, or did they raise price too much and there's now pushback? Or is Claude so superhuman that it really can do what Adobe does?
That's a question, and I don't know the answer. I have not used Claude in that way.
You know, I like acronyms.
I'm really good at using chat at this
I came up with FANG. I came up with FANG. I've been working all morning. I don't have it yet, but I have come up with mass kill.
Which is what?
Well, we got Mike Crawley of AMD. We've got Steve Gavian of SanDisk. KLA Lam. But I don't really have anything for the ones that are on life support. Now, by the way, Mark Benioff would tell you, Jim, I don't even, how could you say that, life support? Have you seen our agent force? And the agent force is doing well. The stock is doing well. But it's the other parts that maybe they charge too much. I've used Salesforce twice, I had 30% lift, and now people tell me it's cost so much money you would never do it.
That said, what's going to be what's going to be the moment where you can say, all right, Salesforce, you have proved that you are going to be somewhat insulated from this?
No, it's not good. I've thought all about that, David, and it has to do with the PE. They historically have bottomed, like the cloud companies, when they got hit, 9 PE on a forward basis. Salesforce is 17, ServiceNow 32. Hey, Adobe's down to 12, Workday's down to 18.
Right, those are low
9
multiples.
times earnings.
That said, the chairman of OpenAI, who was a guest this morning with the Squawk Box crew, Brett Taylor, of course, once remember as the chairman as well of Twitter, had this to say about an AI bubble.
It probably is a bubble. You know, when everyone knows that AI is going to have a huge impact on the economy across a huge range of industries and workflows, money is plentiful. And what you end up with, smart money, dumb money, you end up with too many competitors at every layer of the stack. But I think that's good. Competition's good. It ends up with this culling effect where the free market determines who has the best products and where the most value is. And I think over the next few years, you'll see correction. You'll also see consolidation. But I don't think you can get innovation without that kind of messy competition.
Interesting comments from Mr. Taylor. Obviously an important person. Reports again around about the significant fundraising that OpenAI is involved in around the globe, perhaps raising, pick your number. Will it be 50 billion? Will it be more? Will it be less? We'll see. But certainly, Carl, they need the money.
I'll tell you one thing. The cynic would say, of course they're going to say it's a bubble. They don't want incremental investments.
You know what do people about? I gotta tell you over and over again, off the desk. What do people say? Musk is the most evil, maniacal. He is going to kill OpenAI. That's what his real goal is.
Oh, with the lawsuit that we will be following closely as it gets closer.
He's like the Justice Department.
By the way, Musk will be with Larry Fink on stage at Davos, I believe.
10:30ish, we think. We'll keep an eye on that.
We'll keep an eye on that.
But look, otherwise they can get that round, say at 800 billion, and Oracle gets its money, and all the happily ever after. Nvidia goes to 200, and see you later to a mass kill. But
OpenAI says they still have 40 billion on their balance sheet, OpenAI, in cash.
Well, they did do the 20 billion on the way out. The Sarah Farr manifesto piece that came out this weekend was superb.
Jim, we'll get your mad dash after the break. We'll count down to the opening bell. S&P futures trying to get back to break even for the week, which would be around 69.26. Stay with us.
Oh yeah. Coffee. There it is.
Some signs of relief today as the VIX gets back to 16. Some gainers on the NDX include the likes of On Holdings, Autodesk, Datadog, and Lamb. Opening bell's coming up in a couple of minutes, and don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
Yeah. We got 4 more minutes. I say pull back now, but we'll find out. Let's see, my platform's tradable. Yesterday I couldn't trade on my platforms. I didn't want to stick around if I couldn't trade. Less than 3 minutes. And the crowd's going wild here at the sports arena. Okay.
All right, let's get to it. Let's get to a mad dash opening bell following that. Abbott Labs not looking good this morning in terms of potential decliner at the open.
ABT?
One of the greatest, known for a very long time. They do diagnostics, they're great. We have nutrition, medical devices. They did come through with what I regard as being, they don't want to regard it necessarily as a shortfall. I don't blame them because it's very tough in terms of their growth. But they did say they're not going to make the numbers next quarter. And David, what bothers me, nutrition's been weakest, but it's diagnostics. Abbott is the world's best diagnostic company, so they're not going to be able to do their number. It's not clear exactly why. I don't like that. They are the Exact Sciences EXAS deal is on track, but this is the one that I think it did. The only big cap pharma that's disappointed.
Right.
And I'm trying to figure out whether there isn't buying opportunities. I think Robert Ford does a good job. But this is jarring.
Oh, God.
This is a company that we're not used to seeing this level of decline. So it's worth doing what we're doing.
Goodbye.
He's talking about things like electrician.
Right at open. What's going on here? Support was definitely be this high that we had yesterday, not the wicks, but the bodies. They've got the wicks on here. 97, 6907, 69. No breakout. It's at 691.54 on the SPY for resistance. Nothing yet. Yesterday I took my time and I had 4 real nice, good trades. But I played them smart. I had to cost average down 2 of them, but only once. I mean, I went small and then went big. Right here off the 21. We got 3 black crows. It's the 690s. Mm, 122. We're at the VWAP. We got the 200 down here at 689.20 for the final support. That we go in small here. The 690s. And see if it holds, or we have patience and wait and see if it hits the 200. But you'd go in small. But I'm going to wait. I think it could bounce here, though. I mean, really could. Off to 63. The 690s are at 119. Squeeze your bottom. Well, we're not going to blow up the world. Well, that's true, Jimmy. There you go. Boom. Nailed it. $134. 120 to 134. And 38. 9. Could double top and break it, even break it on the next candle. Whoa! 144. So if you're in the trade, please take some profit. Learn to take profit. Yesterday I called a $2,000 day. I said we're about due for one, and bam. And all day yesterday I say, man, this bullshit about blowing up the world. I haven't learned yet. They're now at $1.50. James, for that call, you made me $300 richer, and I want to thank you. For you're the best trader I've ever known. $160. There's your double top. He did it again. $168. 691.54 resistance. Randy. 691.54. Magnificent. Go ahead and give me a grade A plus, please. Randy, please give me a grade. Sue gets a triple A. What the hell? Highway robbery. Let's get on with it. I don't see where'd her AAA plus come from. SXTP. Hogwash. She can't help herself. She's just magnificent. Some women were born with it. GDP, unemployment. Is there any news? Partnership with Runaway Health. That's why. Set 1 for 4 stock split. I don't like that. Jimmy doesn't like that. Sorry. Ladies and gentlemen, as the SPY starts to pull back to support levels again, and we are at the 63. Hello? Hello? Can you hear me? We're gonna hit the 200 again and bounce up. Watch. There's my oh! Okay, magnificent. Give me the A plus, please. Look at that. Okay, we're looking at the 690 calls. Washboardjim. Okay, the crowd's going quiet here. We're at 107. This is how you do it. You want to try to get it up, so scalp this. SPY. Scalping the lotto, the 22nd. Yes. Strike is 690 at 1.07. Right now we're at 113. We got a hammer. Oh. Angel, I hope you don't have any children around with my bad manners. I'd hate to set a bad example. We're needing to break out, please. We're now at 1010, 12, 13. Just give me a little pop to the VWAP, or to the 60 free. Jimmy called the 200 earlier. What's he mean by the 200? Ladies and gentlemen, this is the 200 SMA. This is the VWAP. This is 3 black crows. This is a hammer. So basically, we need this to stay above the 200 or I have to immediately get out of the stock. I know I keep saying that and I end up getting stuck because big old fat candle comes in here. They're not a buck. You're down $70, Jim. Have you ever thought about selling? I'm down 100. Oh no. Okay. Double bottom off the wick. Ooh, not good. Oh, this can go down a lot. He's gonna put his price line across. First support, right there. Second support, low support channel right here. Okay, we're at the first support. First support, double bottom. Let's do it. And that's your low support channel right there. 687.24. Did Magnificent give me that grade? Just a dog? Okay, good. Well, he doesn't mind if I burp then. He'll probably come up to me and want to sniff it. Damn it. Did you have ham hocks last night? $6.90s are now at 72 cents. We're approaching the serious support channel here, folks. Pay close attention to what Jim's about to do. Pay attention. Get ready for calls. He loves it? Oh, good. Do you want a treat? Do you want to go for a walk? I want you to do this tonight, Angel, when you get done trading. I want you to sit around with your boyfriend or whoever, have your dog in front of you, and look at your boyfriend or whoever you're talking to and talk dog talk. Like, what do you think about going for a walk? Or, honey, you want to go into the kitchen and get some treats? Or, honey, do you want to take a bath? See how your dog reacts. You probably get right up in here and shake his head. No. And go hide when you say, I want to go take a bath. Okay, prepare ye in the name of the Lord. James Howard is getting ready to double down. And then I'm going to have an early lunch. Okay, get ready. I really need this to work here. Jimmy went in big. He's in big. We need a big breakout. Now I'm going to show you how I got this support here, so when you're looking on your charts, because I had this charted out this morning, kind of, in my eye. Oh, there's 81. How's he do it? I was sitting here watching him, me and my dog Alex, and Alex's ears popped up. He heard Washboardjim say, winning. I need 89 cents, please. Break the 9. Have the decency of any human being and break the 9 and do it now. Don't make me buy more. I'm about even. Now I could sell it right now, or are we going to go up to the 200? That's the question. So I've got an issue here. And we're going to find out. People on YouTube, I want you to look about what I'm about ready to do, and please do not try to copy what I'm about ready to do. We got a problem here. This microphone. Okay, this is much. Okay, get ready. Confucius says, should I hold and play this out for the rest of the day, or should I just sell at even or take a small loss? Confucius says, go into the kitchen and make lunch and don't worry about it. And you're going to get a knock on the door of some pretty girl named Nancy for a smooch. I'm not sure how he does it. 200 EMA. Let's get a breakout. You see, we're applying pressure at the 9. You gotta watch these candles. This in here's a good looking candle right there. That's a good looking candle right there. I like how it closed above the body of this here green one. Now we're just now busting above the 9. So we need, what do we need? Jim's asking a question. Today's question is, what do we need to continue this run? Yes, Marcia? Oh, God. No. No. Okay, we're pulling back. We're retesting. That's what I'm hoping. Oh, God. We need a whole body candle above that 9, no matter what size. But now we got a double bottom. So, I should have went into the kitchen. Microphone's in my face now. It's not good. Well, no, I'm busy. Always clean. This is Jim. May I help you?
Hello.
Yeah, what's up?
This is David. I'm calling you from Subsidy and Benefit Department. So how are you doing today?
Very good. Where do you live at?
Firstly, let me congratulate your name having qualified to receive free benefit by the government. Absolutely free of cost. You are not going to pay any cent or dollar out of your pocket. All right, sir?
Do you know what the SPY is? I'm talking to you. Lack of interest will get you nowhere. Oh, God. Here goes Larry.
I waited all day for you, Larry. I waited all day for you. It was my first cat.
Woo! Well, this ain't looking too good. Give it a little bit more time here. I can't give it too much time because this is my lotto trade on SPY, and I got like no later than 11 o'clock shut off. And I've got 1 hour. Actually, 2 hours. But it could get worse from here. So we just hold on here a second, Jimmy. If I get another, damn, how much more? 30 times 67 bucks. Ooh-wee. Ooh, I can't do that. Right to the bottom of my support channel. So watch this here. Let me see if I can get it on the 5-day. This is after hours. So you got this almost to resistance, but I went with this one right here. I could have dropped that down just a little bit. Yeah, it could have. I could have probably initially put it right there, but for some reason I put it right there, and that's right where we landed. But I could have dropped it just down just a little bit more here. Maybe I was looking at the head and shoulders here. But that would have hit that yin yang, and that would have been, and these here would have made a confirmation, support, 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 support. But for some reason, that's what I went with. Maybe it had something to do with something else too. Yeah, if it don't hold this support, it can drop quite a bit. It didn't consolidate much here. It bounced off of it, but it didn't. I think it consolidated off that 1 minute here, but not enough. I mean, right now you're doing that body below it, so that's bearish. Until we get back above it. So now I might be able to afford, might be able to go ahead and double down on these now when I get a chance. Lot cheaper than what I was going to pay. Oh, Jim, wait. AMD pulled back, 3 black crows. We got NVIDIA with a 1, 2, 3. And Meta's coming to the 200. So we got support levels, inverse head and shoulders, 3 black crows, 1, 2, 3, 200 SMA on Apple. And on the 1 minute, I don't know what to think about the 1 minute head and shoulders. All of a sudden, we're going to war again. Trump told women they had to wear bras. And the liberals say, what's a woman? Okay, well, I'm going to have lunch. I'm still here. We could drop down. I mean, the pivot point on SPX is definitely the 200 on the 1 minute. There's no doubt in my mind. Around 68.80. $15 drop. I mean, that's solid. But on the SPX, my ready, set, go says 68.84.62. Do you understand? You keep an eye on that one right over here on the left. You got triple bottom support right off the 200. You do, don't you, Jim? You have all kinds of confirmations there, James. You have the 200 SMA, you have the yin yang, you have the triple top breakout, you have the triple bottom. I don't know what to tell you. That's a real good call, James. Hurry up. Today's not the kind of day you wanted to mess with me. I want to move this one up to this previous high right here. That's where I want to put that. And we should have no problem seeing those alerts. We also have a falling wedge. I'll be right back. I'm an SPA. Anybody in the SPY with me? Say yes or no. You are? We got to break the 9. I'm in the SPX. Oh, I'm looking at the SPY. What the fuck am I doing here? I'm in the SPY, but looking at the SPX. There we go. We got to break his support channel. 687.76. Wow. Let's go. Yeah, I'm 69.15s. 11 minutes now that we've been consolidating here at support. And this is still kind of bearish. Kind of. It's also got a fallen wedge. It's just now starting to break out of. So it's got to break the 21 right here. But it's starting to look a little bullish. So if you can gain respect above 69.0769 or above the 50 SMA, which is 69.0560. We've got a double bottom with a higher low out of a fallen wedge. This thing could easily come back down and touch this top of that wedge pattern. And then come back up. SPY starts to become weak here in a little bit, so it needs to do something.
Year, just the first 2 weeks of the year, it's delivering another double-digit return as well. So within South Korea, let's say the Franklin South Korea Fund, we have technology, which is
break 687, 76, 76,
they're targeting that first link.
76. I'm going to turn this into a red line because I think this is important right here. That one's got to break. That breaks, I think we're saved. It's still got a couple barriers, the 63 and the VWAP. I'd be more concerned about the VWAP than the 200. And we're at 59. Still need some. Yeah, this might be a lost cause. Yeah, I'd rather be trading the SPX. It seems like it's a stronger one to trade on a lotto. Back down again. Okay.
Country and the bottom is like 100%. And part of that, you mentioned a few countries of interest. You mentioned Mexico, which is the primary beneficiary of the near shoring, or some people now like to call it like French shoring. But it doesn't have its own like headwinds as well. So it's like balancing between that. And the other neighbor within like the Latin America that is also interesting is Brazil, because people probably didn't realize that they invest quite a bit into renewable energy. And if you look at the return, which was I think over 50% last year, one of the sectors that is quite among the top in terms of performances is utilities. And part of that is building that infrastructure using renewable energy to be more efficient and also to power that next level of artificial intelligence as well. It's interesting that you see like bits and pockets of opportunity across each country, and they're all driven by different catalysts, right? So what's happening in Brazil is different than what's happening in South Korea. It's different than what's happening in Japan, for example. You mentioned Japan. Japan, of course, is undergoing its own challenges right now. But it is an area where they have in the past been strong at automating manufacturing, and the fact that they are very close to like the future consumer of tomorrow, because if you look at Asia, more than 60% of the population and the future consumer are coming in that region, and having been placed in that area where they do have the semiconductor equipment and the rare air around there, it's helpful. But I think for Japan, they are at a different path in terms of interest rate policy, right? They're one of the few that is actually on the upward trend, and that is somewhat challenging on top of the politics as well, and their spending that they have to control.
Right, so every market has its own sort of individual story here. We know the story with Japan because we talk about it quite often in this show, particularly with respect to the Takaichi trade, but we've also seen the corporate reforms being very much a catalyst in recent years for equities as well. But I just want to sort of speak more broadly as far as international ETF flows. I mean, very much the conversation here has been one of broadening out. And part of that has been, international global stocks becoming beneficiaries of that diversification. Then we started the week off talking about the so-called Sell America trade, where international investors are not giving up on America, but they're rethinking about that, place in the portfolio. We saw that in the dollar, we saw that in treasuries. When I speak to money managers out
and they'll be making a big mistake, chick.
US. I mean, this is the world's biggest economy. There's a lot going for this country. But to just talk about some of the flows that
you're at 66 here. Here's a spot if you bought the dip and added on. You can scale that position at 63 or try to take the risk and run it up to the VWAP. Now, if this breaks to 63, I almost could think that it would be a stronger resistance than VWAP itself. But it would just create another squeeze between the 63 and the VWAP. So I bought the dip, 48 cents, and run it to 68, 66. It's still in it. Actually, almost was about even. Pretty damn close. Yeah, not close enough, but real close. Come on. Move. Right now I'm green. So now we're above the 63 and we're, well, shoot, now it's an inverted hammer. See, I don't want to see that. Like I say, it's break above the, yeah, it didn't break above 63. If that would have turned green and broke above the 63, I'd feel better. But that's an inverted hammer. That's not good. That's bearish. Okay, there's 48.50. Let me look at the SPX. Okay, we're coming up to support on the SPX and the /ES. Right to support. Right to support. Looks like an expansion pattern out of a snake. I'll be right back. Oh, I'm gonna go get my lunch going. So now we got a megaphone, so we got to come, I think we're going to come back up and hit the VWAP, or try to hit this resistance again. And that'll be a double check. As long as we stay in this pattern, megaphone, snake, fallen wedge. And if that breaks, boom, all the way up to the top. SPY, I got 69 cents and I got 50 cents. So I should sell them again. Make 150. So I called this bottom right here on the SPY. Now we're getting to the double top. So this is a major resistance right here. Now I'm even. So I could sell them and get out of this damn thing. brakes. There's one. There we go. 71. I'm going to get out of these. I'll move into tomorrow's. Should go ahead and sell these right now, but I'm going to see if I can get up here one more candor. There's your $10, 69.15s. You still in them? Who got in them? It's Richard? Who else? Did you get out even or better? And I sat here and talked you through it. You better be green. Where we're at. Did you see the triple top? 1 bus, 2 bits, and a freebie. Now we stay above the previous resistance. Right here. We can't go any lower. No lower. I haven't looked at Tesla today, so I will. There's nothing you can do about it. It's Tesla. Blanket. We beg thee to break the 63. I don't know if it can. What is this? Oh, that's the VWAP. I'm gonna change it. Break it. Bebop. Ladies, we just now broke the VWAP, and we just hit the 200. Now, if you're definitely in the position and you were down, and hopefully you're even by now, because I'm going to get rid of these 50 ones I got for 50 cents here at 79 cents. And I'm going to sell at the 200 SMA. And I've got a lot of these. A lot more than I know what to do with. If we break the 200, this could be a good payday. But I'm telling you right now, we're at resistance to break the 200 SMA on the 1 minute time frame. Randy, should I sell or should I hold? That's the question. The crowd doesn't know what to do. We were sitting here all of a sudden, we were eating ham sandwiches, and all of a sudden this song came on called Higher Level. And Washboardjim was sitting here. He was down quite a bit on this SPX and SPY. But not, and so he kind of buckled down and scalped it 3 different times from the bottom. The 69s, 690s now are at 50 cents, 80 cents, 84, 85. So I could make a business decision right here. Make 600 easy dollars. Or I wait and I see if this makes 1,800. But Trump's not going to blow up the world. Jim's right. Trump's not going to blow up the world. Well, Confucius told me to hold, and I'm glad he did. And the video in a Darvis box. Okay, well. Boom. 75. AMD just now broke the 200. CRVS. I think I'm going to go make lunch. open at 661. This is the one I want to wait for a knife and jump in it and go long for this summer. Man, it's nippy in here. I gotta put something on. Oh gosh. I'll turn the TV on first. Still holding some SPY. SPX are gone. And by the way, thank you for saying you were down on SPX, because I grabbed some.
Morning movers.
Who's in SPX?
What's shaping early market action. Tech check, options corner, futures focus.
Washboardjim needs an answer.
Morning movers.
He needs it right now.
Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves.
Good job, Sheba.
Download the Schwab Network app and stream anytime wherever you are.
You're my most trusted.
Live
Oh,
from
anyone
Chicago,
gonna hold
this
intel
is
into
Trading
earnings?
360. I'm Marley Caden. We track macro forces, market trends, and company news that
All that
shape
money that
investor
the government's
decisions,
printing
all with
for them, it ought to be
analysis
pretty
and
good.
actionable context. From inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab
I'll be right
Network.
back.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell
I have a crush
to
on
the
Nicole.
closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
The biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Morning Trade Live. I'm Sam Barnes coming to you live from the New York Stock Exchange. It's time now to look at the sectors of the moving markets this morning. So I'm joined by Alex Coffey now. Very good morning to you, Alex. So obviously we're extending on gains here. We're seeing another record for the Russell today. But we are seeing some rotation as far as the sectors are concerned beneath the surface. And interesting as far as which sectors are lower today, despite what we've heard from some of the companies and the CEOs in those sectors. Just talk us through what you're seeing there at a sector level.
And this is more of a high beta rally today when you see the bounce back of tech and some of the big tech related stocks, communication services, consumer discretionary, and IT all leading. So that's really going to be your Mag 7, but more on that in just a bit. Areas under pressure, real estate, energy, industrials, and utilities have largely been some of the brighter spots so far this year, particularly when you talk about energy and industrials. When I look at the performance in the heat map, 2/3 of S&P 500 components are higher on this day. Equal weight S&P slightly underperforming the cap weighted S&P. It's up about 0.4%. Growth is certainly leading as a factor over value. Semiconductors back out in front as well. NASDAQ also slightly outperforming the S&P. So all that to be said, Sam, it's a really nice bounce back day, and I'm not going to be the one to say that, hey, all is calm and you can get back in the water, but the market's kind of saying that. You have VIX 1 day sub 10, you have VIX 30 days, the traditional VIX sub 16, and you even see volatility sub 100 again. It seems like kind of business as usual after that 1-2 day blip around some geopolitical headlines.
Sure. Interesting move as far as what is happening in technology, as you mentioned. What had been working largely yesterday, not so much today. And I'm thinking some of the memory names. I was thinking about Intel at a 4-year high ahead of these earnings, now just coming off a bit, but we are seeing all of the Mag 7 in the green today. What stands out to you?
Yeah, 7 for 7 higher, and really the tremendous outperformance. It's, you know, basically double and then some the performance of the S&P 500 and the NASDAQ. When you look at the Magnificent 7, if you were to index it, it's up about 1.3%, Sam. So you really have your market generals carrying their weight today, and it's going to be really difficult to see this rally completely turn around unless something changes among the 7 names we have on the screen here, and maybe throw Broadcom in there as well, which is up about 0.5%. So those top 8 names by market cap continue to be ever so important, and they're finally an actual tailwind for the market today as opposed to the drag that they've been over the last month or so.
All right, and obviously we've got some big earnings out later today. Alex, thanks so much for getting us across some of the sectors and stocks that are moving markets for us this morning. Checking in on the relief rally in global markets. Now European stocks are rising after the rhetoric around Greenland and tariffs eased in Davos. Auto and farm stocks were higher. These are some of the sectors particularly exposed to those duties. While Europeans welcome the change in stance, there are still some reservations there. Asian stocks, meantime, rebounding overnight. We saw another record, as we mentioned, for Green Coffee. The benchmark
Keep going.
the 5,000 mark for the first time.
Double top.
Gains. That 5K level is a key milestone as it's set by the president as far as the target, Li Jianyang. It's being helped by the country's most valuable stocks, tech heavyweight Samsung and SK Hynix. The index is the world's best performer, up over 90% over the past year. Japanese stocks also rallying on strength in technology, easing banking yields, helping things out as well. After spiking earlier this week, the BOJ kicking off its meeting today is expected to hold steady after raising rates to a 30-year high of 0.75% last month. But markets will be looking out for any clues on the future path for rate hikes and any commentary around growth and recent yen weakness. Coming up, it's time for Inside Out, and we'll take a closer look at Intel ahead of earnings and bring you an example trade when morning trade live returns.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Still holding on.
Trade brilliantly with Schwab.
for $1.20.
Intel will be in focus when the chipmaker reports earnings after the closing bell. Analysts are expecting adjusted EPS of 8 cents a share and revenue of $13.38 billion. The stock hitting a 4-year high this morning before pulling back ever so slightly. So joining us now is Michelle Connell, who is the president and owner of Porsche Capital Management. Thanks so much, Michelle, for joining us today. So what are your expectations from this company come this afternoon?
Thanks for having me, Sam. Well, I think everybody is so excited about where Intel is with their new chip, the Panther Lake, and that is where the momentum has come from, especially this year with the stock being up 32%, and I believe just yesterday 11%, as you said, pulling back today. And Panther Lake is critical for them to have a turnaround in their consumer chip area, and it's an AI chip that will be used in laptops, and it's not even being used yet, but you'll see a rollout in laptops at the end of this month.
Okay, so we're looking for a little bit of an update on this chip, obviously, to take us this next leg higher potentially, because obviously it's had a good run since arguably the summer when we got to some of the word about the equity stakes and then some of the tie-ups and some of the investments here into Intel. So this has all been very much a tailwind for this company. What are the metrics that are key to look out for as far as what we hear from them in this report card this afternoon?
Well, of course, we want to hear anything additional that they can say about the Panther Lake and the rollout of that. I know Microsoft is up and coming in terms of jumping on board and putting in their laptops. But also we want to hear what's going on with their foundry business, because they've put in themselves $100 billion. All of it has not been spent yet, building out new foundries. That's supposed to be finished by 2030. You had the United States throwing in another $9 billion, and then you had NVIDIA throwing in $5 billion. So at some point, that needs to pay off. And in addition to that, you have a restructuring that's been in place for this quote-unquote new Intel, $15 billion last year. Where are they with that? And $16 billion for this year was what they estimated. Is it going to be enough?
Right, okay, so we're looking for Panther Lake, we're looking for the foundry business, which has sort of been described as a white elephant. We want to see what's going on there. But, you know, as far as CapEx is concerned, you mentioned some of the investments that they've announced already. Everybody is wanting to see this ROI, show me proof of all this spend. How tricky is it for Intel, given that, you know, Lip-Bu Tan has previously talked about how these guys have got a little bit ahead of their skis previously. You know, how much of a tricky sort of balancing act is it for Intel specifically with some of those numbers?
Their past history, right? They've always had an issue with being able to deliver, you know, for several years. And I'm very happy to see what's going on in terms of the investment, the reorganization, etc. But this is a lot to juggle at once. At the same time, they hope to come out with a data center AI chip that will be Clearwater Forest. These are a lot of things to handle at once, right? You've got a restructuring that's multi-year. You've got a build out that's also multi-year. Your goal is to be the second largest fabrication facility provider after TSMC by 2030. That's a lot to have on your plate, don't you think?
Yeah,
Yes.
it certainly is. And so
Quite
that's
a
why
bit.
I say the commentary is going to be very, very important here. What about some of the concerns out there about losing market share to perhaps like an AMD, you know, the competition, for instance? What have they got to say about that as far as reassuring the market?
The proof is in the pudding. They think that they'll be able to take back their share. That's been an issue for them. That's why we have an earnings report that's 37% less than last year. Hopefully, their hope is that Panther Lake will help them take back share from AMD. This chip is critical to them for the near term, for them to be able to maintain the momentum that they have, and for all these costs on multiple sides to pay off.
So riding on Panther Lake, let's see what they have to say about that, obviously going into production very recently and giving us this next leg high that we've seen. A bit of a pullback in trade today ahead of this report, but thanks so much for the setup, Michelle. Appreciate it. Michelle Connell there, President, Owner, Porsche Capital Management. Let's trade it now with Tom White, host of Fast Market. Obviously, we're going to be hearing from Intel later today. What's the example trading the approach for this one heading into that report card, Tom?
Yes, and barred pretty high in this one. You've seen the rally over 140% over the last 12 months going into this report. And this is based on maybe the investments from the U.S. government, nearly 10%, NVIDIA with $5 billion investment, SoftBank with $2.5 billion. So that's creating some optimism around this stock, and it seems like there's call buyers every day. Option market's priced in a pretty hefty plus or minus 8% move either way, and the shares over about $4.30 either way. So those kind of strategy, you think it's going to continue to go up. It's not a pure earnings play. It gives you some duration in case you don't get the move that you want post earnings. I'm not to the February 20th monthly options here. So 29 days to expiration. We're going to buy that slightly in the money 53 strike call. It's got that higher delta. It reacts more like the stock. And then to offset some costs, I'm going to sell the 60 strike call. So a bullish $7 wide call vertical here to the upside. You're going to pay roughly, I've got a 240 debit here. It's probably trading closer to 260 now. The stock has continued to move higher. But the debit you pay is going to be a risk. So I can risk $240 to make up to $7 if it gets above that $60 level over the next 29 days. So I've got some duration in this one. If I pay that 240 debit, it takes my break even to 540 to the upside. That's less than 4% above the current share price in there, so well within that one standard deviation move on this. And so, a lot of people would say, why don't you just buy the 53 call that's bullish? Well, it's going to cost you more. It's also going to raise your break even on this one. And by selling that 60 call, you're offsetting the cost on this bullish call purchase on the 53 call by over $2. So there's a lot of option premium in those out-of-the-money calls at this point. That break even, as I mentioned, less than 4% of the current share price. And I think one of the keys with this directional type bias, this is a bullish example, that it gives you flexibility. So if you get the move immediately after earnings, it gives you some flexibility as, hey, I can maybe close all or a portion of my position if I get the move to the upside that I wanted. And then if you don't get the move, it also gives you some flexibility to say, hey, I've got 29 days, a month in this trade where I can wait for this stock to recover and maybe get back above 60. So if you're bullish, this trade may work out for you. If you're bearish, maybe buying a put vertical may work out if you think this stock is overbought, because on an RSI and a technical basis,
Give you. Well, the music went away. They'd say they'd be right back. Jimmy went in the kitchen to grab a little snack. So he cooked him a baby waffle. He did what he could do. Only little dash of chocolate chips with a little bit of honey syrup. I like my waffles over easy. Boom. Okay, I got that out of my system. Where's my coffees at? Mr. Howard? Oh, hang tight. We'll be right back. What do you mean by that?
Moving
Well, that didn't work.
Through a model, and then of course we just got that nuclear deal news yesterday as well. So up 6.7% seems to only be getting better, but that number you can see in just recent weeks is closer to 20% over the last month. So not quite to the peak.
Magnificent 7 Earl Green.
The latter parts of last year.
Meta, $22.
Off the races again, perhaps.
I mean, another strong day for Alibaba, up more than 6.5%, but also
Marley.
really playing into Beijing's continued message that they want to remove some of the reliance on American technology here. And they've had other companies that have done similar things to try to enter this space, and they've been met, really positively in countries. So another interesting move from Alibaba, as we always talk about, a really diversified company.
Yeah, and we talked about this, I think it was just yesterday on Next Gen, which was there's multiple races going on at once. One, there's this big overlap. Almost, if we're going to use an analogy, it's kind of like how in Europe for soccer, they have the Champions League. And that's the best of the best, and they compete for one title. That's sort of the AI race holistically, right? You have names like Alphabet, and NVIDIA, and Meta, and Microsoft, and OpenAI, and Alibaba, and others, DeepSeek, competing to have the best possible software, the best possible hardware, and to do it the fastest, the most efficient, shore up their energy needs, etc. But then there's almost like the independent leagues. It's like the European, when we look at England, they have the Premier League. Germany's got the Bundesliga. And you start looking at that, and it's like, okay, well, in China, that market's not necessarily going to be open to OpenAI.
That's correct.
Maybe we don't want, Alibaba or some of these Chinese tech firms to steal market share here. And so it's almost like there's then competition within those markets. So maybe Alibaba, perhaps just throw it out there, maybe wouldn't crack the top 5 right now in the overall race. But maybe they're number 1 in China. If you're number 1 in China, there's a lot of opportunity.
Certainly is the second largest economy, absolutely. But Alibaba doing a great job in what we've seen 26 to be a headline-driven market, keeping its name in the headlines. Alex, thanks for breaking that down for us. Alex Coffey, our senior equities contributor here on
Netflix.
I do want welcome our next guest, though, broaden out our focus. Joining us this morning, Dale Smothers, President and CEO at RDS Wealth Management. Dale, great to see you. I haven't seen you in the new year. Happy New Year to you. Thank you. Alex and I were just talking about Alibaba, but really more focused on this, all these headlines we're getting in 26. It's very much a headline-focused market. We're driving through these headlines, but we also seem to be shrugging them off pretty easily. We see these moves, but then we just flip right back. What are some of your takeaways from the market action we've seen this year so far?
Marley, what a read on the market so far. It's exactly right. It's driven by headlines, and then we shrug them off. So here's the word going into 2026. We talked about this right before 2025 ended.
Oh, we did.
Discipline. We've got to maintain discipline, stick with the plan. There are a lot of reasons that we are optimistic here. RDS Wealth is very optimistic going into 2026. We had a GDP print that was unlike anything we've seen in a long time. We've got an incoming Fed chair, at least by the admission of Donald Trump, that will not look at the GDP number as a reason to raise interest rates. So perhaps continued in a cutting trajectory here into 2026. We've got growth like we've not seen, productivity like we've not seen, and earnings season is coming up on us. I think these headlines are going to be ones that we consume as an investor, and we see the market go higher on the backs of that, continuing to climb this wall of worry into 2026.
So as we continue to climb this wall of worry, what are some of the risks? What would make us fall off here?
Yeah, the biggest underlying risk, theoretically, Greenland's behind us, right? So the biggest risk that's going to persist throughout 2026, Marley, is what if AI is either not profitable or companies realize that there's no need to continue to build out this infrastructure that they are currently doing. This AI infrastructure build-out has produced what we've seen in 2025. Going into 2026, I think it continues. If the questions begin to be answered with, well, we're just not sure how we're going to turn this into profitable businesses, or how we're going to continue to consume as much energy as we need for these data centers, or maybe there's a more efficient way out in space, this could cause a little bit of a headwind for the market. And that is, in our opinion at least, one of the biggest underlying risks that we know today.
So discipline is the most important way that we might handle that and combat that. How should we be approaching the potential that AI might not play out how it's expected, and also
blah, blah, blah. 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 Can we get to the orb? That's the question. Let's get 70 more cents. This PA is horrible. What's that mean? It's only 10:09. Jeez, it's gonna be a long day. Oh.
You've got a young couple that can take a trip there and have fun. You've got children that can take a trip there and have fun. And the reality is, in this industry, they are the leaders in terms of earnings and actually turning that into a profitable business. Not to mention the fact that they are currently actively trying to dial back their debt. They're paying back debt with their revenues, and they have a buyback program that they recently announced. I think this is the time to take advantage of that business model and buy more of Royal Caribbean if you already own it. Now, clearly, that's not a recommendation for all. Let me be very clear here. Our book of business, what we are doing with our clients, is we're taking advantage of that dip for those who are long-term focused and want a little bit of a dividend in return.
And Dale, I want to talk about the Fed. You mentioned the Fed in your first answer, and obviously an important part of any outlook for the year is we are getting a new Fed head in 26. The president seemingly signaling he has a pick in mind. We have some hints of who that might or might not be at this point. What do you think the overall market response is going to be when we do finally get that new Fed head? And what action will immediately follow this new placement?
Yeah, so Marley, the uncertainty is never a good thing for the market. And so, I've got a pick, and now I don't have a pick. I think right now the market's kind of tuning that out.
Good pick.
As we get closer to the time, what does
that's funny.
Powell do now? Does he stay with the Fed? That might cause a little bit of a headline. But when he is replaced, officially replaced, I think that particular certainty brings a little bit of ease to the market. And then once we realize what this particular Fed chairman initiative will be, if it's cutting into 2026 to get to what I believe is the more neutral rate, which here's a little bit of I guess we'll call it a guess more than anything, but I would say foreshadowing. I think the Fed's going to look to be around 100 points lower than where we are today, and the market will certainly find that favorable in terms of stock prices for sure.
All right, Dale, I love to close out on a little bit of speculation. When we get that move, if we get it, we'll revisit this conversation and talk about how you got there. We'll pick it up. But Dale, thank you so much for being with us. Always a pleasure to see you and talk to you. Dale Smothers, President and CEO at RDS Wealth Management. We've got plenty more for you to come on Trading 360, so stay with us. Next, we've got the big three. 3 stocks, 3 charts, 3 trades. Rich Ducat will take us through the technicals. Dan Denny
69.15s or 13.50.
Newmont and Boeing. That's next on Trading 360 on Schwab Network.
In the world, this is Opening Bell with Nicole Pedalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As
14:20.
Real time. Opening Bell, live at the NYSE, right when it counts.
Someone else was in that trade.
She's got your smile.
Here in the room.
Yep.
They were down on it.
Actually, we invest with Schwab. They have everything we need all in one place.
I can set up for college funds.
I've been learning about trading strategies. Schwab helps me journey.
Carl's way is the best way. Let's not forget.
Does somebody need a nap?
Invest your way with Schwab.
Carl's way or no way?
Trading 360, I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, 3 trades.
Shut up.
Take us through the charts here to take us through the trades is Dan Deming, managing partner at KKM Financial. Dan, great to see you. We would love to get your thoughts on this rally that we're seeing continuing from yesterday afternoon.
Yeah, Marley, impressive. I think that concern about the geopolitical tensions appears on the surface now to be overblown, and the markets are now focused on some of the dynamics. Certainly, the data this morning was very positive.
Yeah, it was.
The interesting thing, Marley, that you and I have been talking about for the last month, if not longer, continues to be that rotation in the market. Look at the Russell today going to new all-time highs once again today. The Dow just off all-time highs. So you continue to see some of the areas that were undervalued or appear to be undervalued as we move into 2026, continuing to benefit from the trends that the market has realized so far this year.
Yeah, certainly, but one pick that is not benefiting this week, even with this rally here, is your first pick. I'm talking about Netflix. We covered their earnings and they came out live on Market on Close. I mean, arguably a good report, good subscribers. There's obviously a lot of concern about this potential Warner Brothers Discovery acquisition and how expensive it's getting, but really beaten down since then, Dan.
Yeah, and I want to hear Rick's take on this one. This is the one that usually
Rick.
Those high momentum stocks. This is not one of them, so I'm curious to see what Rick has to say about this. But I think, when you look at it, there's support down here going back to last April, right around this 82 level, 82 level. And, I think the dynamics from the continued negotiations around the potential deal will get clarified by the end of February. So the trade example today is a risk reversal down here at these lows from last year, with the opportunity to benefit from some clarity from the deal that continues to be negotiated.
All right, Rick, so Dan wants your thoughts. What say you on the setup here?
It's definitely one that takes a lot of continual reassessment here, because we kind of keep going from not great to not even greater, I guess. I don't know what to say exactly, because, kind of just not really doing very well, kind of keep making another leg lower and lower here. We can see that for now, though, we have mostly held on to this supportive area that we see back here. We can see that this was some lows corresponding with notable low points from back during the tariff news shock. Now, we did actually make intraday lows beyond that level. 81.93 is our new low area here. But in terms of closing prices, we mostly held on to this key area here, despite making another push to the downside below our shorter-term downward sloping channel type shape in white there. So we can also see that in terms of horizontal levels, the gap area that we see here around 87, that could be a notable area that the bulls want to recapture. When we do look at our moving averages that we follow, this is one of those situations where we're seeing the moving averages diverging apart from each other, suggesting the trend is still continuing to the downside. We're not seeing any slowing or discrepancies between the slopes of the moving average. They're still continuing to push further downward here. Look for the shorter-term moving averages to start to reverse and to start to overtake their slower counterparts as signs of potential trend reversal. But for now, pretty deeply oversold. The RSI below 20. RSI only goes from 0 to 100, so sub 20 reading is really quite low. So speaking to the swiftness of this downward move here. When we do look at our volume profile study, the only notable volume area that's anywhere really close to current price activity is around 90. Things do start to pick up again here near 96, 97 or so, but that's a bit of a difficult climb to get back up there. Notice as well, very heavy volume on these down days as well. Many notable spikes during the past quarter, suggesting high conviction.
All right, Dan, so there's Rick's thoughts. How would we trade this, knowing that we've gone from not great to even less so?
Exactly. I mean, again, I'm pointing to the April low, and as Rick pointed out yesterday, we did make new intraday lows, taking out the April lows, but not from a closing standpoint. Now we're trading around $84 today.
To the green
so
line.
The example today is a risk reversal example for February, 29 days out. selling the Feb 82 put, buying the Feb 86 call. You can do that for about 25 cents here. So if we see some weakness in that February expiration, you have the opportunity to put in the stock somewhere around the 82.25 level, which is basically the lowest going back to last year. If we see some reversal here, some higher price action as some clarity gets potential clarity in the potential deal, the Netflix deal as it moves into February, I could see the stock bouncing significantly, and therefore trying to capture that. You can have that upside call to capture the upside momentum.
All right now Netflix trading just below $84 today, down a little bit more than 1.5%. Your next pick, though, not down, as it's a gold miner, and gold has been having a standout week. Standout year, standout last year. We're talking about Newmont. We saw gold go up above $4,800 for the first time ever, and Newmont also doing well on the heels of that performance.
Yeah, gold and copper miner, actually. I mean, gold being their focus, but they also are in the copper mining business, and both those metals continue to realize substantial upside. Looking at the dynamics, I think even as it has this price appreciation, from a valuation standpoint, it's still technically a little bit undervalued, and if that momentum continues to carry forward in the metals, you got to think that Newmont's going to benefit from that. So, looking at this momentum, this is a name that we recently added to our Central 40 portfolio. So again, conviction in this name moving into 2026, and I see further upside. So I structured a trade to capture further upside, and I want to hear what Rick has to say about this one. A little easier.
All right, Rick, this is a very different chart here, and more of a momentum play like we usually see from Dan. I can see your upward sloping channel. Do you see more upside potential here?
Well, we are making new highs. We are taking out the peak from yesterday. We're near the highs of the day. It's seeming like, not signs of slowdown so far. That's what you really be looking for is as early as possible after you're sure the trend changes. That's kind of the point of a lot of these technical trend-following methods here. When we do look at our most recent ascension here, some interesting points to consider are, one, we had an old high point here that became the low point at which the bulls held support. That was near 98, so that was a notable level. But from there, we had many instances of these rallies to the upside, kind of seeing the bull flag, bull pennant types of shapes here, where we have a strong push to the upside, a sideways to downward period of consolidation, and then once again another breakout rally that pushes above that initial high point. So we've seen that happen several times during our climb here. That would be kind of the setup that you may be looking out for now going forward here, would be after things start to quiet down a little bit, a pullback, potentially maybe here around where we opened up after our gap up around 116 or so. That would be the point at which you then maybe would be making a decision about what to do from there. So when we see our moving averages that we follow, our 5-day weekly EMA is the only one that's really close to current prices. That comes in near 118.44. That could be a short-term support area. But longer term, our 21-day EMA, our monthly EMA in teal here, is roughly around 110. That also lines up pretty closely with our trend line, so that stands out a bit more as potential support. RSI, kind of the opposite picture of what we saw in our last chart. In this case, strong and continuing to climb, making new relative highs along with price. Not quite at an equivalent level. That would be kind of 80, would be the really strong threshold for this upside push here. But still, again, no signs of slowdown here. Downward sloping trend line also invalidated. So when we look at volume, when you have fast-moving prices, there's not really a ton of time for volume to accumulate. But the places that we can identify are these small nodes here near about 98, 105, and here near about 112 or so. Those would be some areas to watch going forward as well if we do start to pull back once again.
All right, Dan, so there's what Rick thinks on this one. How would we trade it if we're looking to trade?
Yeah, the trade example today is a buy right scenario. Buying the stock here around this 120, and I think it's 122 now, but when I look at the trade, 120. And then selling the April 140 call for about $5. It gives you about a 4% return versus the stock over the next couple of months, and the upside capture zone, significant upside capture zone. So I think that the momentum here is something that, instead of putting on a cost spread, we have some cost to that, trying to capture this momentum by owning the stock outright, but then also collecting a premium on the sell of the call about 4% over the next several months and still capture upside momentum. And that also does give you an extra point. So if we do see this continued momentum on the upside, get 1 to 140 enable expiration, that's a point where maybe, it would be a decision to take that position off, and this gives you that opportunity.
All right, and then this last one, Rick and I are going to do our best to avoid making any sort of taking off or flight puns. We give a hard time with it. But you've got Boeing here, another potential momentum trade as their turnaround plan really seems to be, I'm going to do it, taking off. Sorry.
Go for it. Why not? Absolutely. Yeah, it's bounced on the runway several times over the last few years, and so finally it does appear to be taking flight, as you pointed out. So. Boeing, the momentum here, this stock, it's been, certainly in the news. Prior to all the issues they had, it was typically one of the better performers, year in and year out. So I think it's slowly getting back to the potential for that to occur moving forward as they continue to work through their issues. But this move now, as we continue to see a further upside, it does feel different than the breakouts that they had attempted the last couple of years, and it does appear to me that the momentum will continue.
All right, Rick, so as you look at the technicals, does this setup for this move to the upside look different than what we've seen in the past for Boeing?
Well, you've put our puns in a holding pattern here, so anyway, though, so what we have, 236 was an old high point that we saw here. That's around where we had a breakout. But really, the trends, the trend lines that we would see, kind of harder to identify in this case. It looked to me more like we were seeing more of a gradually broadening triangle, a megaphone type of pattern, where our two trend lines are diverging apart from each other, suggesting higher volatility. In this case, though, it seems like the strength is continuing more toward the upside because, again, like our other chart, we're making new highs here near 254.14, pretty close to those highs of the day. Our moving averages, we can see, show that, again, similar situation, our 5-day EMA is pretty close, around 249. Not really a good matchup with our trend line, though. Our monthly 21-day EMA, around 234 in this case. RSI, in this case, we are above that 80 threshold here, so even stronger than our last name, 83.1. Look for RSI to keep making new relative highs along with price. When that relationship starts to break down is when you could start to see signs of potential consolidation or even reversal. Our volume study here, 248 or so is where we have our small node. Then down here is the next standout level, much heavier volume, around 230, 235 or so.
All right, Dan, so as we look at Boeing here, is this going to be a long-term play or a short-term trade? What are we looking at?
Short term in this instance. So, the momentum is so substantial here. There's a possibility we could see some repricing of Boeing over the next couple of months, particularly if the market does hit some turbulence. I think, defined risk to me in this type of momentum trade is something that I wanted to focus on. So the today's example today is basically a call spread, a short-term call spread, February expiration, 29 days out, buying the Fed 250, 265 call spread. You can do that for about $6, so it gives you about a $9 capture range if we continue to see momentum up to 265 over the next month. But again, defines the risk when you see some hit a couple of air pockets over the next couple of weeks or maybe over the next month. I think, again, capturing the momentum, but also having defined risk should this momentum all of a sudden find a shift in pattern.
Well, Dan, we appreciate you being with us for Big Three today. Boeing right now up 1.5% at 253.79. But thanks for those today and for also playing along with our puns. Also thanks to Rick, our lead market technician here on Schwab Network. Coming up next, we'll be joined by Tony Zhang from Options Play, who will give us a bullish case for Akamai. That's when we come back. Stay with us.
Sometimes, you could have done better.
Could have done a lot better.
The same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of the platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving
The
markets.
dater.
Morning Trade Live with a breakdown of the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Akamai Technologies and Element Solutions. Joining us now, Tony Zhang, Chief Strategist at Options Play. Tony, great to have you with us. Before we get to your picks for the year and talking through, why we see some opportunity here for Akamai and Element Solutions, I'd love to get your thoughts on the action we're seeing so far in 26 and some takeaways as we're now early into earnings season.
Yeah, really interesting price action so far this year. Obviously, the S&P approaching that $7,000 level has been a big psychological level that a lot of investors are paying attention to. Overall price action has been pretty strong. Market breadth has been also continuing to improve, with small caps and the equal weight S&P 500 index continuing to outperform the market cap index. It's really the Magnificent Seven that's really been dragging behind a little bit here. But I think the big theme that I'm still paying attention to right now is actually what's happening over in Japan. The bond market, or rather the bond vigilantes in Japan, are showing that the increasing debt load that different countries around the world are carrying are starting to be a major concern, and we're starting to see that bond stock correlation flip back to positive here this year, where rising rates is starting to put a cap here on equities. That's really the biggest concern that I have here for equities here this year. Overall, corporate earnings have remained relatively strong. Obviously, valuations are fairly stretched in quite a few sectors, but you also have a lot of lagging sectors from last year playing catch up here. So a lot of the dynamics here at play. It's really fluid, and the bond market is really the black swan that I'm paying attention to here right now.
All right, in addition to the bond market, also have some companies that you're keeping a close eye on here. So I do want to talk about these plays that you sent over. Akamai Technologies being the first one. As I was looking at the chart in advance of our conversation, it's a very interesting day to talk about this one. They've got a nice move to the upside, almost 4% on news of this partnership with Dutch Telecom Security, but also sort of seemingly in the midst of a transition, arguably. I think they're sort of looked at more as a utility, but they're really kind of moving more into this AI space and becoming an AI player here. And also a relatively sideways chart over the last 5 years, but do you see potential for a breakout?
Yeah, that's exactly right. Akamai has really been on a multi-year transformation away from their legacy content delivery network, which was really for streaming giants like Netflix and Disney, into this cloud computing, cloud securities business that's starting to see some substantial growth here, just like the partnership that you mentioned here this morning. We're seeing, a high double-digit growth here for their cloud business. And this is a stock that's trading at 13 times forward earnings, which is incredibly inexpensive given how profitable they are as a company. And that's really where I see the upside.
Schwab has no sexy women.
Keeping an eye on this stock since November, when it popped higher here from that
Say what?
$70 range into the $90 $30 range, and it's been trading sideways since then. We've been keeping
Calm down,
a close
Jim.
eye on it, and just a couple of weeks ago, it started to break out here above that $90 level, and I think that
Randy,
is a great opportunity for the
take care of my light work.
to start adding to this position, especially since the valuations look quite compelling.
So if you were to add to this position and try to trade this name, how would you approach that?
Yeah, with the current breakout here, I think the best way here is to buy upside and using options. And I'm going out to the March expiration.
Yay.
I'm looking at buying the 90 by 110.
How dare you say that about Nicole?
You can pay about $7.50 for that call spread. As you said, the stock's already up nearly 5% today. When we sent over this trade, this was before that 5% move, so you can adjust this trade structure by moving the strike prices up by about $5. So maybe looking at the 95 115 call spread, and you can pay for roughly the same price, $7.50 debit for this $20 wide debit spread. That will give you a near 2-to-1 risk to reward ratio if Akamai continues to move higher here into that March expiration.
All right, and I'll be curious to know on the second one if this had happened before you sent it over as well. We're talking about Element Solutions, a record high today in advance of our conversation here. They're an AI player. They're not a chip maker, but very important to the process.
Yeah, that's exactly right. And you know, we've been eyeing this all-time high for quite some time now. We just, as you said, reached a new all-time high here today. We've been making new 52-week highs recently this year, and that $30 level is a really important level. If we can break out above that and see some meaningful gains, that's really where we think the upside is significantly higher from here. And as you said, this is really not an AI play in a classic sense. We're talking about a chemicals, materials company. You know, these are not household names. These are names that, generally speaking, most investors have never heard of, but they provide the pick and shovel, if you will, for the fabrication process for some of these advanced AI chips. Specifically, they make the chemicals that allow fabrication of fabricators such as TSMC to create stacking of the transistors and gates, which is really how these advanced high bandwidth memory chips, especially for NVIDIA GPUs, are able to continue to scale.
Soon these things are going to start wilting away.
You know, the limits, if you will,
on the SPY.
how small transistors
So
can
I'm
get.
going to unload them all.
These transistors on top of each other have become an important way
move
to
out to the
increase
next day
performance
because
on these AI chips. And Element Solutions produces
these same day SPYs.
the chemicals that allow that specific stacking.
As the day
and
goes
they
on.
also doubled down on this specific strategy by making a couple of acquisitions lately in the ink making process that are used for this advanced chip making process, as well as the gases required. So really looking at all the chemicals required
what the hell
for
this
these
guy's talking
advanced
about.
AI chips, and essentially building a company around that and trading at 17 times forward earnings. This is a company that is growing incredibly fast. We're talking about EPS growth that's in the 20 to 25% range year over year.
91.
And margins north of 10%, which is significantly higher than traditional chemicals companies in this particular space. So trading at 17 times forward earnings is actually a discount to the overall chemicals industry, and that's really where I think the upside potential here is significant for Element Solutions.
We're only about 30 cents off of that important $30 level that you highlighted about breaking past. So at $29.68 right now. Tony, I want to thank you for being with us this morning. Tony Zhang, Chief Strategist at Options Play. Coming up next, we've got the disruptors. We're taking a look at Palantir after Philips Securities initiated coverage on the company. We'll give you the news behind that move next.
I just have a few. I'm still in a few of them SPY from this morning. Shiba. Well, let's see if they break over $1. Been kind of consolidating a little bit too long here. It's time to unwind. Angel, would you like to come over and do my dishes for me? Please. There we go, 96.
Stay connected to markets with Schwab Network.
They told me it couldn't be done.
7 days a week on SchwabNetwork.com
And on all your...
Shut up. You attractive women. There it is. $1.02. How does he do it? Is now up. Let's see, this would be I'm up $20 a contract. Where's that guy at? What do you mean not attractive women? What the hell are you? Oh, what happened to him? Oh, let's go. Let's go. What do you know? I want to get to my target area of the orb, please. Might even break it if I'm in a good mood. $1. Yeah, it was quite interesting. More 6. PLTR.
2.6%, and even the EPS growth for 2026, 2027 is still estimated to be around 39 to 40%. That's the analyst expectation. So the company is one of the fastest growing ones when you're looking at the fundamentals. We know that they also have the exposure when it comes to the commercial business as well as the U.S. government business as well, and that has been a big driver for them. So if you're kind of looking at it from a charting standpoint, it is getting a bull flag pattern right now. The primary trend has been bullish, but we are seeing a little bit of consolidation. The stock kind of got sold off for a lot of the other software names. We will be coming up to earnings here over the next couple of weeks, and this company, Philips Securities, thinks that they have some more room to run here, and it's going to be reflected in the earnings announcement.
Well, we've got their earnings on February 2nd. If we're in a bullish trend here, but we are seeing some consolidation, KG, how would you look to trade this name for example purposes?
Yeah, so this example is looking at the February 6th, 170, 180 vertical call spread. Buying the 170, selling the 180, doing this for a debit of $3.45. So the max loss in this trade is going to be $345, with the max profit potential of up to $655. That's if the stock is above $180 at the time of expiration, with a break-even point of $173.45. Leveraging that short call to offset that long position is a little bit more at the money or even in the money at this point in time to be able to try to get some upside exposure. Once again, this is a name that has been beaten down for the most part, but when it does get the ability to gain a little traction, especially within the trading community, this one can run fairly aggressively. I did actually misspoke. That 170 call is a little bit out of the money at this point in time. So at the end of the day, you will need to actually have a move in order for this to really pay off, but it's around a 2-to-1 risk-reward ratio when you're looking at this spread.
Yeah, right now, Palantir trading slightly higher on the day at 166.60. Kevin, we appreciate you being with us for the Disruptor today. That's Kevin Green, our senior markets correspondent here on the network. Coming up next, it's time for our 360 round. We'll dive into the earnings from GE Aerospace, which has shares under some pressure this morning. Trading 360, we'll be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Hoppy.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Hayden. It's time now for our 360 round. We have our panel joining us to discuss GE Aerospace. The company on the move after beating on earnings estimates on the top and bottom lines, releasing solid guidance. GE's backlog reached $190 billion, and the company says it expects low double-digit revenue growth in fiscal 2026. But we are still seeing shares under pressure. Joining us to help break down these numbers, Lieutenant Colonel Tony Bancroft, Portfolio Manager at Gabelli Commercial Aerospace and Defense ETF, and Paul Powers, the CEO of FISNA. Great to have you both with us. Tony, let's start with you. I just mentioned that we beat on top, bottom line, also on cash flow, but we are seeing the stock move lower today, down about 5.5% right now. Walk me through your perspective on why we're seeing this move to the downside.
Yeah, great to be back, Marley. I think there's a little bit of some profit taking, a little bit of price perfection. I think it trades around 40 times or so earnings. So, they talked about their margins, and maybe that wasn't, at the expectations of what the street was like in a stock that premium. But yeah, I think you look at it overall, they've got 80,000 engine installed base, by far the largest of any OEM out there, and then the aftermarket piece of that goes on for decades. I think they're pretty well situated to perform in this aerospace and defense secular growth market, and I think they will in the long term.
And Paul, what were some of your thoughts when you saw the numbers and the action that followed here? Is this just a short-term sell-off we're looking at, or are there longer-term concerns here for you?
I'm not so much worried about the short-term stuff. I think that overall, the main takeaway for me is that the numbers actually show that GE's placing the right bet. What we're seeing is that over 70% of their new revenue and sales is actually coming not from new engine sales, but from maintenance, sustainment, ongoing service and repair. And that's indicative of a broader industry trend, right? So why is that a good thing? Why do you care about that more so than flashy new engine sales? The reality is just that nowadays, both on the commercial and on the defense side, fleets stay in service longer. So for the customers that you're servicing, it's critical that they have their system service long term. That means spare parts. That means a strong supply chain. That means strong engineering culture. We're taking that into account ahead of time, and we're seeing GE make not only focus on that in their earnings report and their shareholder calls, but also they've made some structural changes recently, like they consolidated leadership for everything from lifecycle design, maintenance, manufacturing, supply chain services, all under one leader now. And that shows they're thinking about this and they're acknowledging that there's a lot more money to be made here and a lot more value we can deliver by supporting these engines long term, not just focusing on the shiny next new thing and expecting to make the majority of the revenue that way.
And Tony, whenever we talk, we always talk about defense budgets and how they're continuously rising here globally, but they are still well below historic levels as we look at them as a broader share of GDP. How does that setup and that dynamic support the long-term growth case for GE Aerospace's defense business?
The defense budgets are, as you said, well below. I think historically we were about 67% of GDP post-World War II. On a GDP basis, and about 25% on a federal budget basis. We're now at about 13 or 14%. And GE sets up well because they're the largest engine supplier for the defense industry, particularly the U.S. I think they have a number around 90% of aircraft and around that number use GE engines. So they're very well set up. It's a large position in our Gabelli Commercial Aerospace and Defense ETF ticker GCAD, and I flew the engine. I flew the F404.
Oh, you flew it?
F18, and it's a great engine. Never failed me on the boat at night. Scary times. The engine works, and GE just makes great engines. And I agree with Paul. Long term, the aftermarket business is going to perform. And it's the sweet spot of it's the crown jewel of the aerospace and defense industry.
And Paul, staying here with defense, we've certainly seen the geopolitical headlines and geopolitical tensions persisting across multiple regions right now. How critical is sustainment and readiness versus new platform production for defense spending priorities for GE?
It's a great question. Without sustainment, you don't have an Air Force. These aircraft can only work so long without having spare parts, maintenance, servicing, and the reality is that you need constant maintenance, you need constant spare parts. And one of the biggest challenges that the U.S. faces is we have an amazing ability to create new high-tech machines and planes, but we sometimes struggle with spare parts. We sometimes struggle with supply chain. And if we end up in a situation where we're in a larger conflict, you get into contested logistics, right? And so it becomes even more important that you not only have spare parts, but that you can readily obtain those spare parts from multiple sources, and that you understand that that where you have standardization across your platforms, you might have parts that are reusable across different planes. And right now, the reality is that 90% of the time, the maintenance crew have no idea that when parts are interchangeable or identical and just happen to be labeled under different MSNs, so part number essentially. And so that insight is proving critical. And by But for GE in particular, I think as it relates to them, their focus on making sure that they have enough spare parts and that they're also taking part standardization and reuse into, hopefully they'll take that more into consideration now moving forward, now that they're consolidating under one leader. The hope is that in the future we'll start to see, hopefully, probably well from now, but 10, 20 years, less and less and less of the sustainment issue that we see today.
I want to thank you both for being with us to highlight GE Aerospace and their earnings. Lieutenant Colonel Tony Bancroft, Portfolio Manager at Gabelli Commercial Aerospace and Defense ETF, and Paul Powers, the CEO at FISNA. Also, thanks to all of you for joining us on Trading 360 today. I'm Marley Kagan. You can download the free Schwab Network app in the Apple App Store. Stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Hitting noon Eastern here at the New York Stock Exchange. Wall Street is advancing for the second day in a row after President Trump walked back new tariff threats over Greenland, with the Russell 2000 hitting a record earlier. Let's get right into a check of your scorecard as we hit the lunch hour on Wall Street. The S&P 500 right now better by more than 0.5%. The Dow has gained 0.75%, up triple digits. NASDAQ 100 also up triple digits, also up 0.75%. Russell 2000 remains the star of the show, rallying more than 1%. So small caps at the top of the leaderboard on a percent basis. Here's the roadmap for today's show. We'll look at example option strategies for Intel. It's got earnings due after the close today. That stock has been rallying big this year. Plus, the team from Lightfolio will be along with new sentiment data on Target. And Texas Instruments is also on our radar today after some fresh analyst activity. Now that we've got the roadmap for today's trading action, it is time to bring in my co-host. You've got Tom White in our Chicago studio and Ben Watson, Senior Manager of Trading Services at Charles Schwab, joining us today. Kevin Hayes has the day off. All right, guys, it's risk on for the second day in a row. You've got those thawing geopolitical tensions. The conversations at Davos with heads of state, executives remain front and center. Tom, how do you read the tea leaves?
Well, I think you take a look at the optimism that's back in the markets. Remember yesterday, we were up a little bit even before the announcement came out. We pulled back from highs, then rallied into the close on the fact that, hey, no tariffs are going to come into effect on February 1st. They've got the framework of a deal, set with Greenland, so those are positives. But it also kind of lays into the fact that investors are still waiting for any pullbacks in the market to buy up any dips. And as long as the headline risks are kind of going away at this point, that means risk on trading. Russell hitting new fresh all-time highs, the S&P down just about 1% from its record highs. We're going to probably run into more of these headline risks that are going to maybe cause pullbacks, maybe cause the VIX to get back above 20. But at the end of the day, I think astute investors are getting in on these dips with the fact that, hey, maybe this administration and Trump, even though they'll come out, firing on all cylinders as far as the rhetoric, that, hey, the bottom line is that he still looks at the markets on a daily basis, and he comments on the markets, and he did make comments yesterday. I think that's what you have to take into consideration. And if you look at the data, the GDP data that was delayed, 4.4%, that's above expectations. We're seeing good numbers for this current quarter. As far as GDP goes, jobs market stabilized with weekly jobless claims sitting at 200K. These are historically low numbers. So, yeah, you got to get past the minutia and maybe some of the headline risks here to kind of make your decisions.
Yeah, the headline risk can set off the gyrations in the market, but I remember that there was a post he had put on True Social yesterday. And to paraphrase, it was kind of like, everybody calm down, things will be great, kind of thing. And then some would say it's a negotiation tactic. I know that's just paraphrasing. Ben, what's your take?
Well, I'll tell you what, I think the ultimate result of all of this, and I think Tom's absolutely correct, that there's this buy the dip mentality, and that's been working, and it'll continue to work until it doesn't. But I think what that does is it reshapes trader mindsets and shortens duration expectation on trades and on the likelihood of continuing trends. So when you see a pullback, that pullback gets met with buying pressure, and when it breaks out of a price breaks out of a resistance level, there's some very quick selling pressure that hits that name and pushes that price right back down. So it adds to the overall volatility. It adds to the volume perhaps of the trades that are happening. But I think what ultimately it does is it shifts again that mindset. Traders by nature tend to be loss averse when trades are going against them, i.e., hesitant to get out of those dips. And they tend to be risk averse when price starts to move in the direction that they want it to go. So they tend to get out with very small gains. So I think that maybe attenuates a little bit of the upside here. But it also leads to that mentality that whenever that dip does happen, it's going to be met with some pretty strong buying pressure.
Oh, I love it. Taking us into the mind of a trader. Speaking of one that can be all over the place, Tesla Those shares are actually gaining ground today. You got fresh comments from CEO Elon Musk in Davos. Musk says he believes the company will get the green light on self-driving in Europe next month. He gave updates on his vision for Cybercab, humanoid robots. It's all coming fast. Tom, what's your take?
Yeah, this is a surprise appearance. Musk has been at Davos for a while. He got interviewed by Larry Fink from BlackRock. I think if you take a look at, the expectations for this stock, it's trading where it is, and it's had a pretty good run due to the fact that, hey, down the line, robo-taxis will be, widespread across the U.S. He stated that by the end of the year, he sees widespread adoption there. That moves into their full self-driving, getting approvals potentially in Europe and here in different cities and states in the U.S. And then also, he basically said that, hey, the humanoid robots, those are going to be on sale to the Optimus robots, are going to be on sale to the public by the end of next year. He made those comments, and that's going to be maybe the driver for their growth in the future. They expect millions of these robots to kind of, be out there and for sale, and not only used by corporations, it's going to be used by individuals. And that's the hope, I think, that a lot of investors have hung their hat on there. And then he talked a little bit about AI, and basically said the costs are going to start coming down for AI, and pretty soon there'll be more AI chips than they'll be able to use just due to the energy restrictions, right? And then, I know he's trying to ramp up his rolling out of the SpaceX IPO. He's trying to get ahead of ChatGPT, OpenAI on that front, and potentially Anthropic also. So a lot in the mixing bowl here, not surprising, a lot of different conversations that he had in that interview.
Yeah, indeed. I know when you put out the timeline for the humanoid robot, we'll see, because the one thing that has been a question around all the vision, you can't argue that he's a visionary, but it's always the timeline. Sometimes it ends up, a lot of times it ends up being too aggressive. But, then there's the question about who can afford this, the humanoid robot. I know this is supposed to be the Rosie the robot that we were all waiting for, but Ben, what's your thought when you look across Tesla?
Well, Elon Musk is always takes that visionary role, and I would tend to perhaps attenuate those thoughts about the robo-taxi pervasiveness. I mean, I spent a lot of time in Ubers and Lyfts around the country as we're going around doing our live events, and it may take a little while, I think, perhaps for that to spread out. I remember a couple of decades ago, I was in Boston trying to get from the north end to Logan Airport. Got caught in the Big Dig area, and I could not simply get from there to here. And I think you put a robo-taxi to an environment that is as dynamic as some of these big cities, it faces some challenges. I don't think we're there yet technology-wise, despite the fact that Tesla and the products that Elon makes have always been able to perhaps advance that timeline a little bit better. But I think, you look at just what the stock is doing, and I think, this becomes the core realization of where that forefront is of some of these technological advances. And I think that's where investors keep coming back to this and keep driving this trend higher, Diane.
Yeah, listen, I do actually think the Cybercab does need to come, because I noticed just, less and less attentive driving, people watching, I don't know, YouTube or Netflix while they're driving. So I was in an Uber where the driver was doing that. So I'm like, okay, maybe we do these Cybercabs. I digress. Let's talk about another member of the Mag 7. Last year's winner. It's been winning again today. Alphabet Google moving higher today off the back of an upgrade from Raymond James. Tom, what's your take?
Yeah, upgrade. What was this guy doing? He was basically strong buy from outperform. He's already basically a buy. Now he's a strong buy on this one. And if you take a look at across what they do as far as revenue goes, Gemini outpacing ChatGPT as far as downloads goes. The reviews for Gemini, the partnerships that they're continuing with Apple at this point, the DOJ, failing in their lawsuit against Google Alphabet last year also, that's a benefit. Then you look at cloud growth, over 34% last quarter. Will that continue? We'll find out at the beginning of February when they report, but it doesn't feel, guys, like there's any cracks right now in the rise in Google Alphabet, just because everything seems to be firing on all cylinders, whether it's revenue generation from YouTube, which is, the most streamed platform, out there, the growth in cloud that they're seeing, the adoption of Gemini AI, the partnerships expansion with Apple. Will Gemini be part of the Siri rollout as far as AI goes? That's a benefit for them in the long run also. Yeah, and then, you know, you just look at some of the moonshots that they've got out there, well, whether it's Waymo, that's doing really well. That's in multiple cities already. So yeah, I think, you know, all these analysts have gotten on board over the last several months. Remember, it was just about a year ago when they were saying the death of search is coming and Google is going to take a hit on there. Well, their advertising revenue is still growing at double digits on a year-over-year basis on their legacy parts of their business. So yeah, everything seems to be going well, but you know, the stock is stretched on a valuation basis at these levels compared to historics. The question is, will they continue to grow into those valuations?
Tom, I'm glad you mentioned Waymo because they're making more progress on that. They just launched it in Miami today, so you know they've got the fully autonomous ride-hailing happening there. So they're expanding it. Ben, what's your take when you look across Alphabet, Google, and the latest analyst activity?
Well, you know, I made the comment the other day that, you know, a lot of what's going to happen on AI is going to happen on a particular device, right, that Apple ecosystem. And I think this idea about Google and the Siri rollout, I think that plays right into it. Now, antitrust issues notwithstanding, you talk about the hyperscalers that are able to execute at scale and continue to scale up. And I think the one name that keeps rotating back at the top of the alphabet here is Alphabet Google, and I think what that means is investors are going to continue driving this higher, despite the fact that it maybe is starting to stretch some of those valuations, as the analysts are talking about. But you know, I think from that standpoint, you know, there are some limitations, but you know, in terms of the technology, Elon talked about the power issues, the chip manufacturing schedule, and those types of things. But if there's ever been a company that's been able to kind of respond to those technological challenges, it's been Google, because you've seen it happen again and again and again within their mindset of innovation. So that being said, could this trend pause a little bit? You've got stock moving up into some resistance levels here. You've got momentum kind of tailing off just a little bit. Going into the earnings announcement, that may be the deciding factor that maybe breaks it out of this range here, Diana.
Guys, let's talk media aerospace. Earlier, you know, it was kind of moving around in terms of investor reaction off the back of its quarterly results. They beat expectations on both the top and bottom line, more than, what was it, 12.7 billion for revenue. It seemed to be overall an upbeat full-year outlook. Some would call it in line. Tom, what's your take when you look at GE Aerospace?
Well, I think maybe a little bit of profit taking. You mentioned it. It's you know, they beat on EPS, they beat on revenue. You know, they continue to grow, but will that growth rate start to slow here a little bit? I think that's a concern for investors. And we mentioned this yesterday when we talked about GE Aerospace. Is the bar was high going into this report just because of the gains that we've seen over the last year or two in this company. And if you take a look at, you know, the guidance moving forward, when you report in line after a run-up like you've seen, maybe there'll be some profit taking, maybe it's an opportunity for other investors to get in. But I think this is still key where you start looking at the backlogs from Airbus and Boeing, the amount of production that they're continuing to increase, the backlog of orders from the airlines. That's also key here. The engines are lasting longer, so that service agreements, those longer-term service agreements where they make high margins on that part of their business, still doing well. I'm not surprised that we're seeing a little bit of a pullback just on maybe what the street anticipated as far as guidance moving forward, but you know, this has been a hard one to bet against after the last couple of years. And as you see these aircraft builders continue to ramp up their production, that's only going to be a benefit for GE as they, you know, they don't make much profit on selling the engine. They make all their profits on servicing those engines over the lifespan of them.
Okay, a great take there. Ben, do you share a similar view that we may just be watching some profit taking here?
Yeah, I think so. You've seen volatility increase in this stock really since that December pullback, which was really the first time in essentially a year that the price pulled back below the 50-period moving average. It's now done it again today on this little bit of a gap down and sell-off. But if you go back to December as a precedent, it rallied pretty quickly thereafter once it kind of got below that and started to gain back some momentum. So I think from a technical perspective, with that increasing volatility, that may simply be reflective of the fact that there's maybe a little bit of rotation. I think the core case that Tom makes for the bullishness in this stock still remains. I mean, I think the biggest issue is that backlog of orders and the longevity of those supply and service contracts that, unless something fundamentally changes with the airline industry globally, I think you're going to see this continue to fly high, Diana.
That may explain why we don't see a plethora of analysts adjusting their price targets on this, because often you see that if there's some kind of disappointment with the numbers, but it doesn't look like the sell side is reacting to this in a negative way, these results. All right, we'll put a pin in that. We've got bull versus bear coming up. The guys will get their example trades put together for Intel. Momentum has been on its side recently, but can it continue? We've got more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Taking a look at Intel, the bar is high figures after reporting its quarterly results after the close today. The stock hitting a 4-year high earlier today. Some analysts say it's on its way back to levels we haven't seen in 5 years. Here's where expectations stand. Wall Street is projecting that Intel will report earnings of 8 cents per share. Revenue is expected to top $13 billion. The stock has had quite a powerful run in the first few weeks of this year, up more than 40%. All right, time now for the tug of war on Intel. For that, let's welcome back our co-host Tom White and Ben Watson. It is bull versus bear time. So before we get to your example trades, we got to talk your thoughts on Intel. Ben, I'll start with you this time. Curious to know your thoughts. It's been, a runaway winner so far this year. What's your thought?
This is one of those stocks, like some of the other names in this space that maybe gets a little bit forgotten in the context of the headlines. But boy, this has been gaining some momentum and strength, especially in the very near term. In fact, starting to accelerate to the upside. That being said, I think that plays into the narrative that we were talking about earlier with that increasing volatility and shortening duration. So from a technical perspective, over the course of the last 2 weeks, you see this stock making, as it really broke out of about the 42, 43 range, this nice little almost textbook bull flag breaking out of the resistance at 50 in the last couple of days. And as we go into this earnings announcement, taking into account some of that additional volatility and momentum behind that trade. But that being said, they could come and sellers could snipe the top off of this little bit of a move to the upside and shorten the duration on this upside move here. Even that being said, the longer term trend I think is solid from a long term perspective. That 200 period moving average, 50 period moving average, both moving strongly higher.
Okay, and Tom, I'm curious to know your thoughts on this one.
Well, I think you take a look at the investments, the nearly 10% investment from the U.S. government into the company, $5 billion from NVIDIA, which has grown to basically $12 billion at this point from the December buyout price. And then $2.5 billion from SoftBank. So the investments are there in this company. The CEO of the Bhutan, he's slashed costs, cut jobs, trying to reinvigorate their foundry business, which doesn't have an anchor tenant yet. There were some rumblings that Apple might be in line on that 18A chip moving forward. And then the Panther Lake, if that launch of that PC platform, creates new sales for the company, that's going to be a benefit for them. And remember, they had technology delays for years. Their last CEO, Gelsinger, was just a mess for this company and for shareholders, quite frankly. And the Bhutan has kind of turned it around in quick fashion at this point. Now, with the gains that we've seen that we haven't seen since January of 2022, 4-year highs, is that now you got to see where the rubber meets the road. Now, what are we going to hear from the company? It's overbought on a technical basis. It's up over 140% so far over the last 12 months. Now, you better start giving the investors, and remember this, guys, I think one of the keys with Intel and why so much trading activity around this stock, besides the wins that they were getting as far as investments and maybe some of the cost cutting, is the fact that it was a cheap stock for a long time on a dollar basis, right? It just was hovering around the $20 level forever. And now it's got some momentum, even though it's still just above $50 a share. It's a lot cheaper on a dollar cost basis than a lot of other stocks, chip stocks in this space.
It is indeed. So then that begs the question, which direction do you go? So Ben, let's start out with your approach. What's your example trade?
Well, so I took perhaps a little bit more of a neutral to bearish approach, looking back a few years, but then shortening my duration on the trade, because I went with a 3-year weekly chart and I saw that the $50 level back in December of 23 was a strong resistance, and really we're just back and breaking above that level. So a little bit of profit taking. So I went with a very short duration, taking into account this high momentum and strong volatility at the moment. Short duration calendar spread on the put side. So selling the 50 put in this most recent expiration, in fact tomorrow, very short term duration, looking for volatility pressure on that side. And then buying a 50 put out to next week. So really just a week long duration in this trade. Net cost on the trade about 58 cents per share. $58 net debit to get into the trade, so low cost to enter the trade. And if this does settle back, or we do get a volatility crush in tomorrow's aftermath from the earnings announcement, that could pop that net profit in this trade up a little bit here. The question is, there's not a lot of time for a roll in the trade, but it's got a pretty wide range between those break-evens. Down on the downside to about the 44.75 or 44.80 level, and on the upside to about the 56.45. So this is maybe a little bit more cheating to the downside in this particular directional approach. Looking for this maybe to come in towards that $50 range. Tom?
Yep.
I think you got some.
Yeah, let's break this one down. 1 week wide bearish put calendar, but as Ben mentioned, this is relatively neutral too, because you don't need that much movement to the downside, if any at all, to get to potential profitability. But an inexpensive way to get some exposure to the downside after the stock's run up so far, so fast on this parabolic move. But let's break it down. January 30th, weekly options that expire in 8 days. Buy that 50 put, sell that same 50 put in the January 23rd weekly options that expire in just one day. 58-cent debit, probably about 55 cents, maybe a little cheaper, but that's going to be a risk. 58 bucks per spread on it. And Ben mentioned, you've got a pretty wide range that this thing can trade in. Now, because you're buying something in longer duration, you're going to see a vol crush not only in the options that you're short in the January 23rd options, you're also going to see a fall in volatility in the options that you're long in the January 30th weekly options. So that maybe tightens up that range to about 46 on the downside and 54 on the upside, where you can still be profitable on this type of position. It's all going to be based on those vol levels post the earnings results, but you definitely need to move to the downside just ever so slightly with the apex of profitability at or near that 50 level. And why is it so inexpensive on a dollar basis, right? $58 in risk. Well, you're buying about 190% implied volatility on aggregate, or selling about 190% implied volatility on aggregate in the January 23rd weekly 50 strike put, and then buying about 96% implied volatility in that January 30th options, where you're buying the 50 put on aggregate in those option series. So that vol dispersion lowers the entry point price on this. But looking for a little bit of downside exposure that's inexpensive. What don't you want to happen? You don't want the stock to kind of go higher, and you don't want this stock to fall 2 or 3 standard deviations to the downside, because the option market pricing in about a plus or minus $4.30 move either way. That lines up about with that $50 level that Ben put on this example trade here to the downside on that. Now, I looked at something a little bit different, not a pure earnings play on this one, Benny. I looked at something with a little bit of duration, so it gives me some time in case you don't get the move. It's directionally biased to the upside, the bullish trade here that I'm looking at, out in the February monthly option. So it expires in 29 days. So you got a month in this position. Buying the in the money 53 strike put, or call, 53 strike call. And then against it to offset some of the costs on that bullish call purchase, we're going to sell the 60 strike call. So a bullish $7 wide call vertical, you're paying roughly about a $260 debit. There's your risk, $260 per spread. That can expand if it gets above 60 up to $7, right? So you've got a pretty good risk reward setup on this with your break even at 55.60 to the upside. So on a percentage basis, you just need a couple percent move, well within that one standard deviation move that the option market is priced in, which is about plus or minus $4.30 on this one. But this is an upward bias where you need the stock to go higher. But Ben, one of the keys when I look at trades like this is I'm offsetting some of the costs on that bullish 53 strike call purchase by over $2 by selling that 60 strike call. It limits your upside, right? But it limits your risk also on this one, Ben. But hey, Ben, this is one of those flexible type of trade management things where, hey, if you get the move tomorrow, you have the potential to maybe close this ahead of expiration if the market's open, Ben. But if you don't get the move, I've still got a month in this position.
Yeah, absolutely. And Tom, what's interesting about this is, yes, this is a directional trade, as all long vertical spreads are. They need that directional movement, depending on how you structure the trade. So this requires that movement to get to that max theoretical gain. But what I like about the way that you structure this trade, what I like about long vertical spreads in this case as well, is if there is that big pop, there is that potential to have this move closer to that max theoretical gain. And if there's an early assignment that happens, perhaps, and not likely in this particular case because you have a little bit of duration, that becomes more likely the closer you get to expiration. But if that does for some reason happen, then that trade widens out to theoretical maximum gain as well. Now, in this situation, though, the one challenge, I think, Tom, is perhaps this potential crush in implied volatility post the earnings announcement, which is going to work to your favor on the short side, just like that counter spread that we looked at. It's also going to work against you, though, on the long side. The long side of this trade, that long 53 call is the big driver of this directional vertical spread here, Tom.
Yep, good breakdown there for us, Benny. And there you go, Diane. One's got some duration, so yeah, maybe a down move post earnings to help Benny's example trade, and then the stock rallies from there, and that would take care of the longer duration bullish call vertical.
Yeah, and what's interesting is watching the tension in the stock real time right now. We started this segment with it a little bit green, now it's gone a little bit red, so we'll see where this one ends up. But we've got cash tags coming up, guys. So the team from Portfolio will be along with new data on Target. That stock has been on the upswing so far this year. We've got more fast market after this break.
Oh, man.
Hi, I'm Alex.
I'm Dean.
And I'm his mom. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Blandis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lightfolio. We're taking a look at Target today. So, Andy, listen, Target had a tough year last year. So far this year, I know we're just a few weeks in, things are looking up in terms of the stock. What does the sentiment look like now?
Yeah, it's not bad. When we look at Target web visits, we finally got a little bit of an uptrend here, which is nice to see going into the new year, and doing better than almost all of its competitors. 15% year-over-year change in web visit growth tells me that Target is at least executing reasonably on a turnaround plan that was way overdue. You talked about 2025 earnings fell 17% that year, and the company just needed significant change, and it looks like they've got it. So, we're in a little bit of a wait and see. We want to see this data continue for a little bit longer, but I think that they're in at least decent shape. There's light at the end of the tunnel for Target shareholders, it looks like, for the first time in quite a while.
Yeah, Andy, that's kind of why I wanted to hit on this one. We hit on it last earnings for this stock, and it's up about 8% so far this month. Now, the turnaround plan, it wasn't going well throughout 2025. We saw that already. When you guys look at traffic in maybe the retail space, we've gotten good GDP numbers. Retail sales have been better than expected. Do you expect this momentum to continue? Because it feels like this is all going to be based on the next earnings event. If this turnaround is actually working, they're outlaying a bunch of capital for redoing a bunch of the stores at this point. They've gotten out of the political side of things. That kind of hurt them at the beginning of 2025. Do you expect retail and the consumer to continue to help this turnaround story? Because I think they're going to need that confidence from the consumer to have that happen.
Yeah, I think you're exactly right. And, I'd say they're spending a ton of money on tech and store upgrades. It's going to take a little while to figure out how well those are taking hold. I think the other point that you made is, you know, they seem to have learned their lesson a little bit about staying out of some of the political debates that can get very heated and turn half of the country, half of the customer base against them. But the consumer's doing okay here. I think that Target has the right demographic to benefit from the current, you know, K-shaped economy. And there's a lot of people out there that, you know, kind of threw Target out and said, I'm putting Target on my blacklist for a little while because of a lot of various, you know, again, political issues, that are probably ready to come back if Target can get them back through the door, show improved store experiences, keep their foot out of their mouth, and do a good job with this turnaround. But it's going to take time to figure out if that's really taking hold. Like, you know, when we look at our data in kind of stock trader terms, what we see in web visits and what we see in foot traffic kind of feels like a dead cat bounce. And you want to see some significant follow through over the next 2 to 3 months to see if this turnaround is actually real, and see how people are responding to some of this CapEx spend and improvements on the tech side and on the in store. So far, the jury's still out, but at least there's, you know, signs of hope. There's reasons for hope that the company isn't just, you know, doubling down on what was not working.
And just give us just a quick moment. I'm going to come right back to you with our next question on this one. What you hear happening behind me is the opening of BitGo. It's a crypto custody firm right now. It looks like shares are opening to the upside here. BTGO is its ticker, trading at 2160, 2160, 2170 right now. We will have the CEO and co-founder on our network later today, the 2 p.m. hour on the watch list, so you want to stay tuned with that. Of course, it comes at a time where there's been turbulence around crypto. Bitcoin now sitting below 98,000, but right now an upbeat showing for this IPO today. It's public debut, and it is a more than 10-year-old company, which does signal the trend we've been watching in IPO markets, that companies coming to the public market are longer into this. Company started back in 2013. We'll continue to watch how price shakes out throughout today's session, but congratulations to BitGo for going public. Now, Andy, my next question for you, getting back to Target, I wonder if on your data, if the comps were easier this year when you look at, kind of a year-over-year basis because of the difficulties that it was having. What's your, are they, in essence?
Yes, absolutely. I think that's what, that's one of the things that we're really watching for as we get into 2026 are those companies that have kind of sandbag comps when you compare to 2025. Target's certainly in that group. I think Lululemon's in that group. Even Netflix could be in that group. Whereas the Nvidias, Intels, and some of those that ripped in 2025 have a much higher bar to climb. And I think that's going to be a really key theme throughout 2025 because of that divergence in performance that we saw in 2025. So absolutely, I think Target has a very low bar to get over, and I think that this turnaround shows enough traction early on to give us to give confidence enough to investors to give the company time to spend the money on the upgrades that they're talking about spending. I think that they're earning a little bit of leeway from Wall Street, and it's the first time they've had that in a long while.
Yeah, and just a real quick here, follow-up question. On that one chart where you've got, your data seems to have turned, before the end of the year, last year, as far as Target. We don't get earnings until the beginning of March on this one. The price is still lagging, even though we've had a pretty good start to 2026. Do you expect this to continue at least until that earnings when we get some clarity on the turnaround plan?
Yeah, I think momentum is with Target stock. Again, I think that they're getting the benefit of the doubt from Wall Street and will probably continue to do so until, and if they disappoint on earnings. But until then, I think that momentum's on their side. They're executing a turnaround plan. They've gotten some grace from Wall Street in the meantime. And absolutely, I think that March earnings event will really be the key tell for this and how Wall Street reacts to that. But I have to say I'm very excited to watch the CEO Vigo come on to your network later on today. That is must-see TV.
Oh, thank you, Andy. We look forward to it as well. That is Andy Swan, co-founder of Lightfolio, with a look at Target across the sector and see how the consumer is shaping up, especially as it relates to Target. So the trading perspective of all things Target, you got some new insights from the Lightfolio team. As you mentioned, there are easier year-over-year comps for it. Final thoughts for your example trade, Tom?
Yeah, I think, since their last earnings event, where maybe it was a throw the kitchen sink out type of scenario, because the stock was at multi-year lows, just at the end of last year in November, historically, which is usually a strong quarter for them. So to see their data kind of back up maybe the move we've seen, which is up about 26% from those lows that we saw in November, is a positive. So I looked at the strategy. One of the key things when I look at Target, as the stock fell, they didn't cut their dividend. That's not to say that they won't cut it in the future. But if this turnaround story works, and it kind of matches up with what Lightfolio is seeing as far as their data goes, the thing that sticks out is the 4.3% dividend yield on this one. So I looked at a strategy. If you maybe like Target, you want to buy it, maybe there's a way to offset some of the costs. It's kind of a paid-to-wait kind of strategy. Looked at a bullish, neutral to bullish covered call strategy here, Diane, where I went out for every 100 shares of stock you buy, you go out and sell them out of the money call against that. I went out to the February 20th monthly option that expired in about a month, sold the 110 strike call out of the money to the upside by about $5.50. You're going to pay roughly about $103.50 debit I've got up here. Maybe it's trading about 103.70. But that's going to be your break even also. So you're buying the shares at a discount because you're selling it out of the money call to the upside. Now, you own the shares. That allows you to collect that dividend on this one. You have some assigned risk if the stock were to go above 110. You have that potential of getting a sign on it, but you can always roll or potentially adjust that short call if the market's open. That allows you to do that. But what you're doing here is you're owning the shares, maybe you want to buy the stock. You're collecting yield by selling that out of the money 110 strike call in February. And then you're also collecting yield because you own the shares on that dividend if it continues to get paid at a 4.3% clip on an annual basis. So paid to wait type of strategy here. And as you get closer to February monthly expiration over the next 29 days, you'll have that potential to roll or adjust that short call, creating more credits and lower your break even, increase potential profitability on this also. So a pay to wait type of strategy here. You have to own the shares. There's a lot of risk. So if you pay $103.50 on this one, you've got $10,350 in risk to the downside if the stock were to somehow go to zero. So keep that in mind. It's more capital intensive because you own the shares, but it's a pay to wait type of strategy here, Diane, setting up with maybe that Lightfolio data.
All right, Andy, pay to wait for that one. Thank you, Tom. Coming up, we've got the breakdown. We've got our eye on Texas Instruments today after some fresh analyst activity. We'll have more Fast Market after this break.
Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall live on the floor of the big board. Before we get to the breakdown, we'll give you a check on your scorecard and where markets stand. As we get closer to the bottom of the hour, we've got increasing momentum. The S&P 500 better by 0.8%. The Dow rallying more than 1%, up triple digits, trying to catch up with those small caps there. NASDAQ 100 has gained of nearly 1%. The Russell 2000, the bell of the ball, still up 1.33%. Shares of Texas Instruments are on the move after getting some fresh analyst attention on Wall Street today. Among them, BNP Paribas upgrading its view ahead of earnings, just to neutral. Susquehanna is more positive on the stock. Both analysts flagging its positioning as a beneficiary of rising industrial demand. The stock's having a better year so far this year than last year. We are only 3 weeks in. But it's time now for the breakdown. For that, let's welcome in Sam Bias, host for the Schwab Network, taking a look at Texas Instruments. Look, Sam, I want to highlight the positive. I mean, it's a better year so far.
It is, and look, maybe it's bringing sexy back because it's not the most sexy thing. It's in the business of analog semi. It is seen as very much a bellwether in this space, but yes, getting a bit of a love and attention, as Diane mentioned there, from the analysts today. Let's start with BNP Paribas, because the analyst David O'Connor has now upgraded Texas, as Diane mentioned there, from an underperform to a neutral. So more conviction, but it's still sitting on the fence, waiting to see how things pan out here. We've got a $190 price target, and the catalyst for this upgrade has been the restocking that is now underway in the industrial sector. So what they're saying is that they see a broad-based restocking recycle for semiconductor chips across the industrial end markets. They believe that this should provide some upside for analog products, which, as I mentioned, a company like this having exposure to the industrials and also the EVs, the auto market, has not performed as well as those in the more type of AI chips that are powering all the data centers. And so they believe that this should drive above average seasonal growth for the next few quarters. But it's interesting because it's not just this name, Diane. If you look across the space, they've also looked at OnSemi upgrading to neutral here from underperform $62. Their microchip upgraded to outperform from neutral, so they're more bullish on that name. But then feedback, Diane, is coming from CES and the meetings that they had at that conference at the start of the year and the industry conversations now. So they're saying that a restocking cycle typically takes a few quarters to complete, so that's going to drive the seasonal growth. So we could perhaps see this for a few quarters to come. And just as far as the exposure here, as far as the industrial sector is concerned, Texas Instruments about 34%. But they do point out, this analyst, that the auto semi demand remains low. So whether the industrial side manages to offset some of the auto side, which is not expected to come, as far as
121 now.
Until the sort of late 2020s, this remains to be seen. But what it means is that, companies which have previously run down their inventories, there's still some more demand now coming from them. They have been buying fewer chips in the past, but they may be placing new orders again as far as the industry conversations. And then, as you mentioned, Susquehanna coming out with this price target now, $225 from $200, keeping a positive rating here on the shares. They're also talking about this as part of an earnings preview. We will get this report card on January 27th, which I believe is on Tuesday, Diane, if my calendar is correct. But they generally expect inline results here, some modest upside in Q4. They're talking about this, quote, steadying upcycle as well, and the broadening out of actually AI infrastructure supply chains. They do highlight as well, as BNP Paribas did, the industrial end market improving too, but autos remaining somewhat challenged. So this seems to be the story with a lot of these companies. But as I said, it's been a tough time for some of these companies in the business of analog, because you're not seeing the type of demand that we've seen for the chips that are powering all the AI data centers as well. The industrial auto sectors have not seen that kind of appetite.
And of course, these chips do go into things like EVs, which have had also some troubles now as well with the companies that we're hearing about sort of reducing some of their capacity and just the demand not coming back as much as we had anticipated.
What will be interesting, especially if you look at the price action, to see if this trend continues and what's old is new again, right?
Yeah.
Because it reminds me of, it's obviously not to the same degree as the move we've been watching in Intel so far this year, which I know you're going to break those, I'm sure you're going to break those earnings later today. But there is a double-digit move happening in Texas Instruments this year. It's a different year than it had last year. You know, so there is some momentum on its side. I know, you know, again, we're only 3 weeks into the year, but it will be interesting if it has a different setup for this year, and if it's viewed, you know, if we're kind of going back to, yes, as the analyst mentioned, there's something to the cycle that is benefiting them. But I'm curious to know any final thoughts on that, especially given that we have such a big week for earnings next week as well.
Yeah, and I would add to that just, of course, what we're seeing in the memory space, Diane, as far as the cyclical nature of what we're seeing with those chip stocks as well. I mean, they've had an extremely good year in 2025. They've got off to a good start in 2026 as well. In fact, if you just look at the performance of the breakdown of, you know, memory versus some of the analog names today, in fact, analog higher, memory is lower, although we've actually seen a little bit of a pickup in some of these memory names as well. But I think, you know, the story now for a lot of these companies in the business of chips, whether you're in the game of AI, memory, or the analog, it very much looks like things aren't moving in lockstep. I mean, this very much seems to be like a story of winners and losers, picks and shovels, sort of individual story, and as I mentioned, very sort of cyclical in nature, which is what we're seeing playing out with the more bullish views now on the memory cycle as well.
Absolutely. All right, that's Sam Vadas, host of Morning Trade Live, co-host of Market on Close. You can certainly catch her later today on Market on Close. Thank you, Sam, for the breakdown on Texas Instruments. All right, let's get Tom back in here. So, Tom, I know you got the example trade in Texas Instruments. I'm curious to know also, though, your thoughts as, you know, how you look into this one before the example trade.
Yeah, pretty, you know, pretty strong upgrade here going into earnings next week. I think that's going to be key. They report Tuesday after the close. It's going to be a big one. You know, we've seen analysts come out and downgrade, upgrade this name recently over the last couple of months, and this is based on, you know, the industrial side. Is the automotive recovery taking place? We've already seen digital, memory, storage, those segments of the chip industry doing well. The industrial side has to be from Texas Instruments. Now, you look at their price action, into the end of 2025. It was poor just due to the guidance cut in their previous two earnings events, and that caused a lot of consternation. It's an execution risk, I think, a lot of times with this company on the legacy side of the chip industry, and that's in the industrial side. So that's going to be, I think, what investors are focused on. You mentioned it's up over 12% so far just this month into that report next week, so that'll be key. So I looked at a strategy that's a little bit more passive. It's neutral to bearish. If you think the stock's going to fail again, like it did the last couple of earnings events, and this rise that we've seen to basically where we're only 11% off of those all-time highs that we saw just about 9 months ago or so. So going back to that January 30th weekly cycle that expires in 8 days, you'll capture that earnings event next week. Looking at selling the 202.5 strike call, it's above the current share price, and then buying the 207.5 strike call. So just a short $5 wide neutral to bearish call vertical. You're going to collect roughly about $1.40 credit on it. You got to use some price discovery. Bid-ask spreads on some of these out-of-the-money calls are pretty wide. But if you collect that $1.40 credit, that's what you can make on this position, $140 per spread. You've got $360 in risk on it. That's the trade-off, right? You're risking more to make less, right? But at the same time, it takes your break even up to $203.90 to the upside on this one. So far above about $8, $8.50 above the current share price in there. So you're giving yourself that cushion to the upside. You got a probability of that short 202.5 strike call being out of the money at expiration of about 69%. So you've got favorable probabilities on this trade. That's one of the trade-offs of why you have more risk on it. You profit in 3 out of 4 scenarios on this one, Diane. You want the stock to either fall, consolidate at current levels, or if you're wrong and the stock goes higher, you just want it to remain below that break even of 203.90 to the upside. You've got 8 days in the short-term position, but taking advantage of that higher implied volatility, which allows you to collect more option premium on this short call vertical if you're neutral to bearish on Texas going into that report.
All right, that's the example trade there. I want to give our viewers a quick check on Bitco, that IPO today, getting priced at $18 a share right now. It's rallying more than 30%, trading at 23.52 at the moment. And you've got green on the board for all the major indexes. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Tom White. Our thanks again to Ben Watson. Download the Schwab Network app. It's available in the App Store. And tune in 24/7 on SchwabNetwork.com. Stick around. We've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com.
Good afternoon and happy Thursday. Welcome to the Next Gen Investing Mouse Coffee. Trading Morning has the day on. Joining me now, Sam Bottas, to join us in the top half of the show. Sam, this has been a really, really powerful recovery in the last, let's call it 24 plus hours for the stock market. Geopolitical tensions seem to have waned as a result, green on the screen. Anything sticking out to you?
Well, obviously, as you say, just really building on the momentum that we saw yesterday when we saw somewhat of a
alarm.
rally off the back of Trump's easing of rhetoric around Greenland and also the tariff situation and what people are somewhat calling the taco trade. And so that seems to be sort of alive and well, and we're seeing a continuation of that extending on the gains that we saw yesterday. So a lot of what we're seeing as far as this upside is predicated on that because of the fact that markets felt so shaky at the start of the week with respect to this sort of renewed tariff fear. On top of that, Alex, don't forget, we've also had some data out this morning, and that is pointing to some encouraging signs. The jobs market, as far as what we got from that data print, looks fairly okay. I mean, it just continues to point to this low hire, low fire environment, but it also points to some stability in the jobs market, that it's not flashing warning signs, it's not falling off a cliff. That's kind of what we want to see. Don't forget the Q3 GDP print, 4.4. That was also better than expected. I believe the best in about 2 years. So we are looking at a situation where the growth is coming in better than expected. And so that is really helping propel things along as well. A lot of the small cap rally, that broadening out that we've been talking about, that has been moving down cap, has been predicated on rate cuts. But it's also now shifting to the fact that if the economy manages to chug along at this rate, and growth, is able to stay sort of sustainable, then that will also be good for that trade as well. So as you and I discussed, look, we are seeing some of that rotation back into sort of more leadership. That's very much back in the driver's seat. I would also point out, as far as the more risk-on appetite out of more of the safe havens, we're seeing the precious metals come off a bit as well. Interestingly, as far as the technology trade, a bit patchy, you could say. Not moving in lockstep, as I've been talking about. Intel at a 4-year high going into these earnings this afternoon, coming off a bit in the session. Not all the memory names actually were participating in this rally today either. A couple of those names have actually picked up some steam today. So we've got some earnings as well. Interesting, I know we're going to break down some of them right now. Reactions as far as who cleared the bar, who's getting punished as well. So there's sort of like an individual stock story type of narrative playing out in this market as well today.
Yeah, we got a lot to get through on the stock specific front. We're going to go through some of the movers in a bit. On a chart and trade front for Chartbass, we're going to look at Intel and AMD, some big time chip makers that are definitely competitors with one another. Marley's going to join me to talk Alphabet. They got a note out, some optimism again from Raymond James. And then we'll close things out with a rare earth discussion with Jeff Pierce for Under 30. But Sam, a couple things stuck out to you before we close the macro book here and we move to some of these stories. I think if your primary reason for investment is lower interest rates in risk assets, you're just misguided. I mean, history says higher rates have correlated to better economic times generally, and that's generally the best time to be invested. And so be careful what you wish for, not you, just the royal you, if your investment thesis is revolving around easing monetary policy. That said, I want to talk a little bit about the president and sort of the actions or the lack of actions. You phrased it as the taco trade. I think supporters would point to the art of the deal and say this is basically what he wrote in the book, 30 plus years ago, 40 years ago. Sam, at some point, combine that with the fact that geopolitical headlines have generally been buying opportunities over the years, why are we still surprised by this? This has just been what happens, not only under Donald Trump, but under other presidents too. Geopolitics and the sell-offs around them, those fears present opportunity, do they not?
Yeah, and I think that's very much what we've seen as far as the fits and starts, where we have managed to coin these terms like the taco trade, where we continue to see these patterns in the market, and everybody woke up on Tuesday with these headlines that he was going after Europe again with tariffs to sort of double down on Greenland. But then the conversations, the nature of some of those discussions were, hold on a second, we've seen this episode before, just wait. This is obviously a negotiating tool. If you have read The Art of the Deal, you would know that this is how he plays the game. And so, that was very much the nature, as I said, of the conversations on Tuesday, and here we are looking at somewhat of a relief rally. And we saw that playing out in global markets as well. What I would say is, just look at the fine print here. I mean, some of the welcome relief as far as the change in stance coming from these European countries. Don't forget he was going after 8 European countries as far as these tariff threats. I mean, these are all individual nations with, their own interests. There is some degree still of skepticism around this, a little bit of apprehension about this. So I think, we just have to see where all these balls that are up in the air right now really land.
Well, one thing I would say too, when you look at the response last spring, yes, equities went down, yes, the dollar went down. It didn't seem to be a situation that the White House shifted gears on until the Treasury market started to unravel a little bit. That interest rate story is as important to one for the Trump policy plan as any. And what did we see alongside this, little bit of a spat with equity weakness? You saw Treasury weakness. And if the interest rates continue to work towards the higher end of the range, it's really going to put a little bit of handcuffs in my mind on how aggressive the president is going to be when it comes to some of these, geopolitical tensions, because it really makes the economics of the plan difficult if rates continue to move higher. I know I just said, hey, be careful what you wish for, but for the president's plan, lower dollar, lower energy, lower rates, that was sort of the three-pronged approach. And if Treasury starts to unravel, the interest rate problem gets a little bit more of a problem. Final thoughts on macro before we do some sort of rapid fire with some of these.
Kind of hovering.
Yeah, I would just add to that, pre-Davos, the thinking here was that the president was going to go to the world stage with one message in mind, and that was a little bit rare to have heard from a U.S. president taking, the affordability story to the World Economic Forum. That is not something we often see because of this, you said rapid fire, it feels like rapid fire, drinking from a fire hose type policy announcements that we started off 2026 with. And so I think, that may have been the surprise to the market, that all of a sudden it was very much about EU tariffs, it was very much about Greenland. And yes, we know that obviously he's pushing ahead with the credit card interest rate caps as well and other things. But I think it was just a sort of change in tune as to maybe what the market was expecting. But you're right, Alex. Look at that 10-year yield. While we have very much seen a change in tune in the equity market, it's very sticky. There are a few other factors, and you and I discussed that throughout the course of the week, particularly with that global fixed income story with the JGB yields also high and keeping a floor under what we're seeing here in the US as well.
Sam, as we transition to the micro, I'll start with this. Through about 10% of the S&P 500 earnings, I think you and Marley discussed this as well yesterday on Market on Close. Beat rate so far is about an 82% beat rate on earnings by an aggregate of about 8%. But the price reaction, the average one-day price reaction is a negative near 0.5%. So less concerned with the 0.5% part, but negative sticks out to me, Sam. And GE Aerospace, our first mover, is a great example of this. I don't know what's wrong with this report. Maybe you can find something, but the street didn't like it.
That's right. I mean, it's like the poster child for that stat that you just gave, isn't it, this morning? Particularly because analysts were so bullish going into this one. Look, Alex, I've had so many conversations here on the floor today about this one. This is a head scratcher. Strong quarter. It beat the street. It was initially up. We spoke about these numbers yesterday, but then it was down. It was one of the biggest laggards on the S&P 500 earlier this morning on my show. The headline is that it failed to impress despite the solid results. But beyond that, as I mentioned, many are confused about this. Maybe it goes to show that the slightest bit of disappointment and the lack of outperformance is not being tolerated. But it's hard to find that disappointment in this quarter. By the numbers, look at it. Earnings per share, $1.57 a pop on sales of $11.9 billion. Wall Street was looking for $1.44 on 11.2, so that was a beat. For 2026, it's looking for low double-digit sales growth. That was higher than expected. Operating profit between $9.85 billion and $10.25 billion. And earnings per share between $7.10 and $7.40, so all better than expected. The orders are eye-catching. We were speaking about this earlier today, surging 74% to $27 billion. Booking, the backlog, I should say, rose. This is something that's been a very big focal point of investors. $190 billion or so dollars. Orders for the company's commercial division, 76% higher, and defense up 61%. So What's interesting about this, and I've been listening to some of the conversations on our network as well, some of the analysts do point to the fact that a lot of the revenue is coming from the services and repair rather than actually the new engine sales, and that's a function of the industry trend. And we care about that today because the commercial and defense side of the fleets very much stay in service longer, and that's good for GE because from a services and repair standpoint, that's very beneficial for this type of company. But the talk is that this is down maybe to do with the big run-up that we've seen in the market pre-earnings. There is a view that maybe some profit-taking is going on today because this had been priced to perfection. Maybe the margins were not good enough for a stock that trades at this premium, so that's another thought that I've heard and a view out there. But analysts still very bullish on this name because of those double-digit numbers that I was talking about on particularly the backlog and the orders. They're a beneficiary of commercial and defense, and the company is still well positioned to very much perform in the long term, even though it's seeing a bit of a short-term hiccup in the market today.
You know, Sam, I'm not saying it's a good buy, it's a bad buy, do buy it, don't buy it. What I'm saying is I won't be surprised if in a couple weeks this is a chart that looks a little different, just simply because if we have to say maybe this, maybe that, maybe the story is just a good one, and it is a little bit of profit taking and a pullback, but maybe that pullback's an opportunity. Time will tell. Like I said, I don't know. We'll find out in time. But let's talk Abbott Labs, because this chart not as positive looking, and certainly not today.
No, and it's very clear, Alex, compared to GE as to why it's underperforming today. As you say, the markets love a reason for why things are moving the way that they are. Trading at a new 52-week low today, ADT. Disappointing results. It was hit by a fall in the nutrition business, down 9%, and this is where the drag is really coming from today. That business is very much behind things like shakes and baby formula. It talked about some of the challenges as well. What's good is that the nutrition slump was actually partly offset by other sub-segments, things like medical devices and generic drugs. Sales across medical devices rose 12%, and then the pharmaceuticals up 9%. So diagnostics, and this is obviously a big part of the business as well, interestingly fell 3.5%. That came as the COVID testing actually lapped. But that also seems to be part of the issue too here. While the core lab and the point of care showed underlying growth, it still wasn't enough to offset that overall 3.5% fall here. So a mixed performance across the sectors and the business divisions. What's interesting is the nutrition drag is not a new story. We have seen this consistently over several quarters, so that's not a surprise to the market. It actually has tried to raise the prices to mitigate some of this, but as we know, Alex, that's not exactly working in this kind of environment. By the numbers, look, quickly, $1.50 a share, it missed the 163. It raked in $11.46 billion, fell short of $12.78 billion. It expects earnings in the range of $5.55 to $5.80. Analysts are looking for something higher than that. And then also organic sales growth to be 6.5% to 7.5%. The company is still talking up the fact that it's well positioned for accelerating growth here this year. But I think the problem that the market has right now, and I've heard this view out there today, Alex, is that this is a high-quality company and one of the only big-cap pharma drug companies that's actually disappointed so far. The market investors are just not used to seeing that.
Yeah, and I love the call out too. I mean, it's the big headline, right, that the nutritional products are weighing on the performance today. But, you know, I think Abbott Labs, I think medical devices, I think the diagnostic stuff that they have, which do combine to account for about 2/3 of their product revenue. But nutritional products is about 20%, it's about a fifth. And it's brands that we know. I mean, it's things like Ensure, it's things like Pediasure and Pedialyte. So, you know, some of those household products and names that people know are part of Abbott Labs. So the more you know, and that's the weaker segment here for Abbott. Let's talk completely different gears now. Big winner around earnings, and then this took a plunge is Datadog. It's having a nice day today, but trying to turn things around after it had 3 good sessions back in early November of last year and really has not looked back on its way down ever since. Datadog, though, with an analyst move today.
Yes, and this seems to be the catalyst here for the upside that we're seeing for Datadog. It will report earnings on February the 10th. Stiefel now upgrading this name to buy from hold, so it's coming off the sidelines here on this name. It's got a price target, interestingly, of 160, which is down from 205. So it's trimmed that. What they're saying is behind the call is that their recent channel checks do point to the fact that the company will post, quote, another larger than typical quarterly beat in Q4. And they say that a lot of this will be driven by the accelerating core growth and continued strong gains. The firm believes that Datadog will guide 2026 revenue now to $4.1 billion. That's implying, they say, conservative 19% core growth. They're also talking about the OpenAI integration remaining at its current $90 million per quarter run rate. And they've also been talking about the valuation, appearing relatively attractive for one of the few names we cover, and accelerating core growth, as I mentioned. So why now? Well, obviously it's down to the channel checks, as they mentioned, as why they've tweaked the way that they see things here. This is obviously based on some of their conversations with the customers, the partners. This is a bit of a sort of look ahead to obviously to the earnings. They've trimmed that target though, which is interesting, as I mentioned, because a lot of the other analysts have also been lowering their expectations. So this is kind of moving in sync, not because they think the business is weakening, badly in any way, but more about the stock being undervalued relative to the peers with similar growth. And so I've just been sort of looking around some of the other price target adjustments, and you just recently had Citigroup cutting the price target to 175, Capital One lowering to 156, and Jefferies also at 180, but maintaining a buy rating there as well.
Speaking of Jefferies, they're weighing in on Meta platforms. Sam, for those who catch Morning Trade Live, we'll often talk about the Mag 7 performance, you and I on your program. 7 for 7 today. Meta, the pace keeper today, up 5.4%, way out in front. But quietly, and this illustrates that big macro point we were making around the rotation, 5 of the 7 Magnificent 7 names are actually still down year to date. Meta is one of them, even after this 5.5% rally today.
Yeah, we sort of had that CapEx indigestion off the back of the previous earnings, didn't we, Alex? And then all of a sudden, since then, it's kind of been on that trajectory. And, a lot of the story with Meta is that this AI journey has been expensive and investors want to see a return on all this spend. And so markets want proof of the ROI, or as they like to call it now, ROAI. But we've got shares rebounding today on this Jefferies note reiterating this buy rating with a price target of 910. What they're saying is that they're trading at a meaningful discount versus the alphabets of the world. The fundamentals, they say, look pretty good, trading at 27 times trailing earnings, roughly 22 times forward earnings as well, 12 months. They do argue that the recent hiring in artificial intelligence and broader reinforcement of its AI team should translate into tangible results in 2026. So there's that show me proof of all this spend type of story. They also think that this would strengthen the company's core flywheel, so that's obviously what drives the engagement and the advertising, because this is something that they rely on a lot across the Facebook, Instagram, and WhatsApp platforms. They also say that since Meta is down roughly 20% or so from that time, while Alphabet is up basically the same amount in the other direction, and Amazon about 4%, that's creating room for relative catch-up if Meta can ease some of the investor concerns right now around some of the margin pressure, high capex, and AI execution. Because as I mentioned, the view here, and has been since the previous earnings, is that Google and Microsoft of the world have to have better spending discipline than a name like Meta, and so that also has been part of some of the worries here, particularly around also their more advanced AI partnerships. Amazon can be put in that camp as well. But the market hasn't been ignoring the risks here. Obviously there's a lot to prove still with the capex. But you and I were even talking about yesterday about the fact that the latest foray into sort of nuclear. This has been looked at quite favourable, that they're managing to make this commitment so ahead of time before the commercialisation, and that just goes to show where AI is heading right now. So yeah, a good sort of more bullish note out today, or at least a little bit more encouraging as to why we're seeing the shares up higher today.
Yeah, about 16% of today's S&P 500 rally. Just thank Meta for that, because it's contributing about 8.5 points to the upside on its own. Really impressive rally from Meta, as well as the rest of the Magnificent 7, which is up about 2% as a group. Sam Bottas, always a pleasure. Make sure to check out Sam later on with Marley on market on close. We're going to take a short break. We get back. It's time for Chartmaster. We're going to look at two big-time chip players. One with earnings, that being Intel. The other, its big-time competitor in AMD. Rick Ducat's going to join us right after this.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where you get all your office supplies. Your notebooks, your fancy coffee, and giant TVs. Everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, Schwab, they do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Educator Investing. Time for Chartmasters. I'm joined by Rick Ducat, lead market technician for the Schwab Network, here in studio to discuss Intel ahead of its earnings after the close. And Rick, whatever cave this stock walked into and the hibernation that it was in, it's up now. It's awoke and it is off and running. Talk to us about these technicals. This picture changed dramatically in just the last 3-4 months.
Yeah, pretty unusual move to see heading into earnings yesterday. This very strong push to the upside, not really on any seemingly specific news. We did have some upgrades and price target changes, but no big major piece of news that would really point to any move of this magnitude here. But we have transitioned from this sort of gradually sloping, upward sloping channel type shape between our two blue lines into this very sharp, very steep upward sloping channel between our two white lines, which actually we still remain above. We've made an upside breakout from the upper boundary of what was already, as I said, a very sharp push to the upside. So a pretty unusual situation as we head into earnings, still hanging on near the highs of the day. Never even really re-entered these boundaries that we established earlier as well. So very, very curious to see what happens as we head into the close here in this name, as investors get a chance to digest whatever results come out. Our 5-day weekly EMA 5121, that's about the closest one we could work with here. Our longer term monthly EMA quite far below where we are now. 4483 is our teal line right there, representing a 21-day period for that moving average. Our RSI, our measure of momentum, really quite high once again here in the overbought area, continuing to make new relative highs along with price. Remember, too, RSI only goes up to 100. It's only from 0 to 100. It's kind of a bounded indicator here. So reading anywhere near 70, 80, that's pretty darn high and suggests pretty strong momentum here. So finally, when we look at our volume profile study, due to the fast-moving prices, we haven't seen a lot of accumulation of volume at these elevated levels. The best we can do for nodes near current price activity, right here around 48 or so, that's the closest one of interest. But then to the downside further, 40, and then beyond that, around 37 or so. Those are the standout areas.
Yeah, investors are hoping this chart is just not something they need to look at, otherwise it might have been a pretty steep repricing post-earnings. Rick, hold those thoughts. We'll come back to you in a second for AMD. Looking at an example trade into the earnings event for Intel. Now, you could look to tomorrow's expiration if you wanted. I have, for this example, elected to go out to next week's expiration on this short put vertical to neutral the bullish strategy, looking to go with the trend, but give ourselves just a little bit of cushion in this example in the event that it runs out of steam and maybe pulls back ever so slightly. It's a $3 wide short put vertical, again expiring on the 30th next Friday. It's the 52.49, collecting $1. You have a break even around 51. With that, you have a 2-to-1 risk reward. You risk $200 as a max loss, break even 51 as I said, and a max profit potential of 100. Looking for the stock to hold on to these gains, move higher, or if it has to move lower, just move a little bit lower. Stay above 52, and this one can be at max profit. Bring back in Rick, and we don't have earnings quite yet for AMD, but I believe it's like the first week of February, so it is coming up in the next couple of weeks. AMD is going to be a tone setter for this AI chip build out and everything that it has to say. Talk to us about the chart, because there's similarities and then there's big differences between Intel and AMD.
Yes, I believe February 3rd is earnings here. So when we look at this one, what we have here is another of these very pronounced gaps here due to similar circumstances here, just kind of across this chip sector. But what's really interesting about this one is that we have our green line here that represents our low point that we established after that big gap to the upside here about 203. Now, in terms of our closing prices, we mostly held on above that level. We did have 2 closes below that mark, but for the most part, as I said, that was a consistent supported area. From there, price seems to have regrouped. We gradually formed this upward sloping channel in blue here. Then our purple trend line starting with these highs over here. That's been broken now pretty convincingly at this point. We've also held on to some other horizontal levels that I had my eye on, namely here, marking these lows and highs here near 225, then 240, another set of highs there. We've also managed to stay above that point. So 267.08, that's the next level to be on the lookout for if we do continue this strong trend to the upside here. Well, our moving average is a similar portrait, as you said, Alex, here, kind of our 5-day EMA is the closest one. Not seeing any signs of trend change or divergence or anything like that. 240.88 is where that short-term moving average comes in. RSI, 73.4. Again, quite strong momentum here. Easily making new relative highs above our previous peaks in tandem with price here. So the setup, again, we're not seeing any signs of trend shift or things starting to wane. If anything, it seems to be growing even stronger here at this point. Our volume nodes, one comes in here near about 255 or so. Then we also have one here near 235 or so, and then here about 215. So those would be the standout areas from this perspective. Notice that we even had a low volume spike yesterday during that big rally to the upside.
Good stuff. Rick Ducat, lead market technician for the Schwab Network with the tacticals on Intel. In earnings, and AMD ahead of earnings expected that first week in February. For the trader who thinks there's going to be a run-up, maybe it's because of Intel's earnings, maybe it's some sort of chip deal we don't know about that's going to come out between that, but also think earnings is going to be a positive for AMD as well. This is a call counter spread. It's a bullish strategy that goes past earnings. So selling the February 6th, buying the February 13th. Cycles, so both those options will capture that earnings event premium in these expirations. Looking at a 275 call counter, so you're looking for about a 10% rally from the current share price to get to that level, and for that, spending around $1.65, which means, as you can see up there, $165 in risk. Now, the nice thing about this example, very, very customizable, but you do have to be precise. The closer you can accurately project where that stock would be in that short options expiration week, the better it would have to be profitable. So just one way to look at an example, building on the bullish example we looked at in Intel as well, going into earnings. We're going to take a short break. When we get back, it's time for FOMO, and one of the stocks of the year so far is Alphabet. We'll be joined by Marley Kane to discuss what's making headlines today for Google right after this.
for instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on the Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back. Time for phone mode. Today we discuss what I would argue is the new leader of the Magnificent Seven, that being Alphabet. Joining us here in the studio, Marley Caden, host for the Schwab Network. You know the show is Trading 360, Market on Close. Alphabet, what a run it's been on. I don't know if it's at the fourth, it's really close if it isn't over that line, but it's right there. You know, the Magnificent Seven today is 7 for 7, Marley. They're contributing about 2/3 of the rally. This seems a lot more like 2025's market than it does, maybe, at least not the December part of 2025. But Raymond James is getting even more optimistic on Alphabet.
Yes, getting more optimistic. They are over that $4 trillion market cap that you were wondering about. Looking right now, they are. Raymond James is already bullish on Alphabet, like most of the analysts who cover this company. But they're going from an outperform up to a strong buy. So from a buy equivalent to an even stronger buy, they've also upped the price target. That one wasn't necessary. The previous price target was $315. We're actually trading above that right around $331 right now. New price target $400. So a little more than a 20% upside they're seeing now. They're saying that they ran a new bottom-up analysis for Google Cloud and for search, and that caused them to make material upward revisions to both their 2026 and 2027 forecasts. That 2027 revenue now at the high end of the street, and they cite that as the primary reason for the upgrade. They say that the company is entering a phase where AI stack is, quote, shifting to high
Yeah, 69, 15 to now
likely entering a cycle of improving the AI stack narrative and upward revisions that could create one of the highest quality, top-line AI
6900s are
in
32.
the public universe. They also add that this acceleration story is fundamentally driven rather than from multiple reversion, and that will drive the megacap's internet performance through this year.
Well, you think so?
Meanwhile, Raymond James is modeling that they'll have growth of 44% in 26, 36% in 27, both of those ahead
Don't believe
of
him.
expectations. The firm also highlights
Hogwash.
contributions from both infrastructure and platform services, underpinned by large-scale deployments of TPUs and GPUs, which we've been talking about constantly, as well as growing adoption of Gemini and Vertex AI. Now, they also say that in 27, they think that they could exit 27 just for Google Cloud Platform revenue at $25 billion in annualized revenue from TPUs, about $20 billion from GPUs, and about $10 billion from Gemini, roughly $2.5 billion from Vertex AI, their other AI. They do think that search growth is going to be a little lower, 13% for both years. That is compared with lower street assumptions. They say that they think there'll be a decline in core search, but that will be offset by some of the scaling adoption we're going to see in AI overviews, AI mode, and in Gemini. So even if search goes down a bit, that AI component of search will sort of keep those numbers growing. Raymond James says valuation reflects what it sees as broad-based revenue acceleration across the entire stack. That price target is a 29 times multiple of 2027 earnings, and they say that premium is justified.
You know, I was just looking at the 2026 estimates is compiled by Bloomberg, and they, like, the consensus estimates agree with that take, which is that a wide variety of growth. The only segment I'm seeing that's kind of
sometimes,
flat
man, I just
is
wish
Google
I'd take
Network,
trades.
and
Like
that's
this
failing
one,
on kind of
this
like
is a
4
good
years
example.
straight now, if we were to hit expectations, where it's kind of flattish as a segment.
Cost.
YouTube ads growing, Google search growing, Google ads growing. You just keep going down the list.
General Motors, $81 freaking dollars.
But you know what I thought when we were talking, I was looking at
the worst company out there. General Motors. Okay.
Things on February 4th, if the market still views them as favorably, because we have had, much like last quarter, but maybe even more decisively this time, some very strong earnings reactions on numbers that were seemingly strong in both guidance and in the quarterly report.
We're saying negative prices.
Yes.
Yeah, and we talked about that with Sam at the top of the show. But another thing, too, that really stands out to me about Alphabet as a company, and it was illustrated by kind of the spat they had with Disney over sort of broadcasting rights and things with YouTube TV. Like, that's a massive enterprise, YouTube TV, but it's like a rounding error for Alphabet. And when you have that kind of reach and that many different businesses that are all doing well, like, you just have so much leverage. And what would have been essential for a company like Disney or essential for a Comcast, or just like,
I gotta get my license.
we're not doing that. I thought that was fascinating.
It's another shrug. I feel like we've just seen so many shrugs. We're able to shrug out so many things, but they are so big and such a behemoth that for them, like you said, it's a rounding error. It's oh well.
Yeah, and it's a good place to be, that's for sure, and it's been a good place for investors as well. Thanks to Marley Kate. Make sure you check out Market on Close later with Sam and Marley. Before we go to break, though, an example of trade in Alphabet. Short put vertical is a neutral to bullish strategy. It is a $2.50 wide spread going out to the January 30th cycle. So just next week, shorter term trade, trying to stay ahead of those earnings. 325, 322.5 for a 60-cent credit. With that, you have $190 in there, so about a 3-to-1 risk reward. You can make $60 with a break even of $324.40. So a little bit of cushion. Let's call it 2.5% to that break even. Really just looking for this stock to maintain its performance through the end of next week. We're going to take a short break. When we get back, more news. We're going to talk the rally in Moderna with Diane King Hall, as well as we'll be joined for more discussion on content. We're going to talk Netflix and the latest with this WBD deal.
Randy, you got your present? Randy, are you there? I got my orange envelope with my tax information on it. All I need now is a check from you. don't know why they addressed it to me. It was supposed to be sent to you. There's no patriotism in this country anymore.
Oh, she's got your smile, Carl. Yeah, the #1 brokers here welcome you to Little Independent.
Actually, we invest with Schwab. We have everything we need all in one place.
I can set up for college fund.
I've been learning about
Trading strategies, Schwab helps you generate all this Schwab and everything you need is making me cranky.
Somebody needed help.
I don't even want to look at it. Soon I'll have to stop this.
With Schwab.
Stay connected to
Well,
what moves
please
forward.
come
Download
in
the Schwab Network
if
app and
anything
stream live
is
coverage
wrong.
wherever you are.
Remember you wanted, oh God.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Oh.
Welcome back to Educator Investing, Time for Developing Stories. We're joined by Diane King Hall, the host of Morning Movers, to discuss the face of mRNA that is
Woo!
And, you know, I keep looking at the year-to-date performance of the index components, and there's a commonality between most of them. They're like memory chip stocks, and then there's just this one, Moderna, that just keeps popping up almost 80% so far this year.
I know, I couldn't believe that. I saw the strong move higher today. It's up 6% right now, but then I was like, okay, let me zoom out. So far this year, I know we're just a few weeks in, but it's a huge move and it's more reminiscent of the COVID times. So it's making quite the comeback so far this year. And honestly, it started to see some momentum last year for Moderna. When I say last year, I mean like within the past 6 months, essentially, is where you saw a big surge. And honestly, really within the past month or so, where you've seen this big move higher. A lot of this has to do with momentum around the cancer vaccine that they've been working with Merck on. So they have these phase 2B trials around it. It's a 5-year trial. So it the trial showed some success there, significant success, because it showed that it reduced the risk of melanoma, relapse, or death. Obviously, that's key because this is a long-term proof point here, Alex. This is 5 years we're talking now, and a month long of study. So it's durable data that we're looking at here for this. And so it strengthens the case where Moderna is trying to expand beyond the vaccines that they were known for, the COVID vaccine, the flu vaccine. So investors are looking for what's the next pipeline for Moderna? Where's the strength going to come from? Where's the next growth engine going to be? And it looks like there's some solid data here. So the good thing about this is the second phase of the trial. There are phase 3, or it is phase 3 that's happening. The expectation is we'll see results in phase 3 this year. It's unclear exactly when this year we'll see that, but there is strength here, durability in this one right now. A huge move to the upside off the back of this. And this is again with Merck, and it's also combined with Keytruda.
Yeah, really incredible stuff. Now, depending on when you got involved with Moderna, the picture may look a little bit different. Still something like 90% or so off its all-time high, 72% over the last 3 years. So it's slowly but surely trying to climb back up that mountain. But Diane King Hall, always a pleasure, and thanks for the update on Moderna. One of the best performers so far early in 2026, up about 80%, and then the second best performer trailing only Sandisk. We say goodbye to Diane, though we welcome our next guest. That's Seth Schachtner, the Managing Director for Strat Americas. And we're talking, I think, one of the biggest stories early in 2026 when it comes to kind of, stock-by-stock stories. And it's this Netflix, Paramount, Warner Brothers Discovery drama. It's almost like they could make a Netflix show on this, Seth. But talk to me about where things stand now and how you see them.
Good to be honest. Yeah, look, this is something that I think a lot of us felt is going to be rolling on for months, if not years, and I think it's been pretty consistent with that. I mean, look, the latest is that the Warner Brothers Discovery Board continues to reject all of the Paramount offers, and Netflix went back and put an all-cash bid on the table, basically. And, right now, just from the outside looking at it, it really still appears to me that Netflix and Warner kind of want each other, want to dance with each other, and they still assume that's actually how the whole thing is going to fall out ultimately. But that's, I think, Paramount and Mr. Ellison still being incredibly aggressive about trying to get the Warner enterprise, and will probably continue to pitch higher bids. How high they go, I don't know. But it's looking more and more likely like that to me. And I think there's a bunch of interesting questions on both sides around regulatory approval, which to me is still kind of a wild card for both right now. But I tend to think it looks clearly like Netflix and Warner Bros. Want each other, and that's how I assume it's going to wind up ending up.
I have questions on the regulatory stuff, but before we get there and your thoughts on that, let's put ourselves in the shoes of the Ellison family and the team at Paramount. It's almost as if they're acting as if this is existential. Like if Netflix gets a hold of this IP, their offering is so strong that it's not anti-competitive maybe in the sense of regulatory, but like they're just going to be so dominant, like how do you compete with that? Does that seem like a fair assessment?
Yep.
Yeah, I think the real question, kind of analog to what you're saying, is, look, this town has been shaken up by everything from streaming to labor-strike to AI now, and I think, our studio system here is really smartly looking at how it reinvents for the future, and how you set up a film studio so that it's going to still be around and relevant in the next century. And, from that perspective, I think if you're an old school studio or one that's tied to old school assets like Paramount, CBS's, with all those assets like Comedy Central and MTV, they probably saw a combination as aspirational and the next step to reinvent. And so I think that's why they're continuing to go after it. I will say to you that a lot of us in town here, reacted with absolute fear when the Netflix offer came out. And I think I'll just speak for myself, the more I've thought about it, I actually think that the Netflix Warner bid is closer to that reinvention than just combining two old school studios, basically. But yeah, if you're losing out on this, and I think from what has been publicly revealed, Zaslav and his team have kind of kept Ellison's people in the dark on a lot of different pieces of it. You're going to feel miffed, and you're going to get a little desperate, for sure.
Yeah, and that's where I kind of tend to think what you're saying, and where I tend to agree with is, if this becomes a job loss discussion, I think it's harder to make the argument that Paramount isn't more about synergy than Netflix, which seems to just be buying IP and resources and the people behind these studios. I'm not sure you can make that argument for Paramount. But let's talk the regulatory, the pushback. I think I tend to resonate with your notes, but I want to hear it from you, which is that the kind of old school arguments don't necessarily apply.
Yeah, I've been listening to folks like Senator Warren and folks who are antitrust experts on it, respect all the points of view. But what I see on the landscape now, you have YouTube, you have user-generated content, you have younger stars like Mr. Beast that are more important to future generations than Brad Pitt are. And I think all of these enterprises, including Netflix, I saw it this week with their results, they're much broader entertainment companies, right? Netflix is in podcasts, is in video, they're in the NFL now. They're going to get a film studio, it looks like to me. So personally, I think the definitions at which regulators are looking at, they need to look forward as opposed to looking back 50 years. And so I think some of the regulatory stuff about any competition is kind of off, in either scenario, basically. I think the real things, there are parties at risk here, for sure, in this town and nationally. If you're a writer, a producer, a director, you might lose another place to sell your work, basically. And that to me is a real consideration, more than just the job losses of combining studios. And then, this is obvious, but if you're a movie theater operator, this is a scary scenario, particularly from the perspective of Netflix getting it, no matter what Netflix says to me.
Hey, Seth, I got to go, but real quick, just real quick answer if you can. Is there any other company that Netflix would even consider buying at this kind of a scale? Is this one of one?
No, there's probably others. I could see other studios. I mean, who knows? Maybe Paramount. I don't know Paramount's the right thing, but I think I would look out to things like music. You know, maybe there are verticals that they would see an opportunity in that they're not in right now. So hard to give you a really quick answer without putting a little more thought into that one. There are probably others.
We'll have to have you back, and maybe we can explore that if this goes through, where Netflix may go next as they embark upon a new journey and a different type of investment going forward here. Seth Schackner, really appreciate Managing Director for Stratton Americas. We're going to take a short break. When we get back under 30 time, we'll be joined by Jeff Pierce, and we'll talk one of the best named companies for recent years, USA Rare Earth.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Morning Movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network,
available anytime, anywhere, on any device for free. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Time for Under 30. We're now joined by Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. And Jeff, we're talking USA Rare Earth, and of course it's a company that's tied to that rare earth mining, which maybe isn't so accurately named. It's not that the materials themselves are rare, it's the process to get them is difficult and maybe not the best for the environment, so it's rare. What do you make of this news? Analysts are weighing in. Apparently they're conducting some studies to ramp forward one of these projects in Texas.
Yeah, well, I think investors are seeing, an easier path to what they're trying to do, right? We're seeing that the shares are higher today. It's mainly to do with these partnerships for the Round Top Rare Earth project in Texas. The company selected Fluor and WSP Global. They're going to focus on the engineering, the procurement, the construction management. These firms are considered leaders in this space in mining and large-scale infrastructure, and they have experience with these big deals, these multi-year, multi-billion-dollar projects. The reason we're seeing a reaction today is it adds credibility to what this company is trying to do. It may de-risk some of the execution worry that's out there, and it could certainly accelerate the development timelines. This is, the next milestone will be for them to confirm the drilling and get that plan for the first half of 2026, target commercial production by late 2028. And this is on top of some of the other projects they already have going on, a feasibility study in Colorado, a high-capacity rare earth production facility in France, which includes tax credits and financial support from the French government. So they're seeing some steam in the project space here.
Yeah, this reminds me kind of what recently happened with Oklo in the nuclear space, which is, you get that deal with Meta that kind of legitimizes the operation a little bit. Even if it's still far away, we're moving closer, and it seems like some of the, particularly this Round Top news, seems to be that next step towards real scalability in this space. But we're looking out ahead. But I guess the good thing is we know this is a huge priority for the Trump administration and stuff coming out of Washington.
Well, that's a big part of it, right? You and I talked about MP materials back in July when they announced that public-private partnership with the DoD, and that deal is really a big push in the direction to be less reliant on China. That China has a big role in the rare earth material space. About 70% of the earth oxides, they control about 90% of the refining capacity, and so on. When you think about the importance of the EV, aerospace, defense systems, semiconductors, it's important that these companies are able to control prices. China has the ability to control prices right now. They also have the ability to restrict those exports. That's why we're seeing this push from these companies, and we're seeing investors jump in on it.
Good stuff. Jeff Pierce, it is always a pleasure, my friend, Senior Manager Derivatives Trading for Charles Schwab & Co. So we say goodbye to Jeff, taking a quick look at the markets. Nice day still, holding in there with the S&P 500 up about 50 points. Getting back, let's say, 3 or 4 since we started the show. NASDAQ 100 is still up about 0.8%. The Russell's out in front, though, 1.1%, 29-point rally, and a new all-time high. Whenever you can use those words, all-time high, you know it's a good day. But that's going to do it for us here on Next Gen Investing. Always appreciate it. The watch was up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available
My
in
specialty.
seconds. That means you can stop waiting and start investing in stocks. Bob.
Quiet. For it's my turn now. From Washboardjim. We're talking about which one should I trade. SPX. Okay. Everybody's sitting here quiet, patiently waiting. We don't want to get a spy. Okay. Well, we're at support. On 1 minute for sure. There. Pull back right there. That previous resistance. Could be a little bit high. Okay. 69.30s or 69.35s. Tweezer bottom, 69.30s. Look at there. I don't know how he does it, but his name's Washboardjim, and I was sitting here watching him, and all of a sudden he says, "Knife!" And he was in there taking shit, going number 2, and I said, "Jim, do you have enough chance to wash your hands before you touch your keyboards?" I said, "Yeah, I'm in this trade right now, though, Haas. $3 and $2.70. And now the time is near. That was a tough decision between the 30s and the 35s. Oh, that's what I needed to tell. Message. Yeah. They're expecting snowstorm coming this way. Just wanted to keep in touch. Randy, I called it off the 200 EMA. Thank you very much. We're at, oh my God, we're at 380. You sit here and you wait. You take a nap. You go make a sandwich. We're at $4. I'm up $130 a contract. Jim, have you ever thought about selling? Yes. Yes, I have. You're at $3.80 right now. I need to get some. Always clean, this Jim. Hello. I usually get it down here. I was just calling up the Springfield paper company and see if they had some. And I pick up a couple bags and just put it on the invoice. Yep. Yep. Yes, ma'am. They've been, I guess Tuesday and Thursday, they're going in earlier now. They opened up the building at 7. It was usually 8:30, but they're just for a period, for a small period, for tax purposes. Say anything? I can barely hear you. Yeah. Oh yeah. Yep. Oh. So you got the snow people coming out too, right? Oh. Yeah. Well, let me. Yeah, it's in such a bad spot, that building, because of that hill. And when people drive down it, it's kind of hard to. You got to definitely have that ice melt on there. Have you ever been there?
Yeah, I've been there.
Yeah. Yeah.
Can you hear me better now?
Yeah, I can hear you a lot better now.
Okay, sorry, I had the stupid headphones on.
Yep.
Okay, so yeah, if you want to get ice melt and lay it down tomorrow.
Yep. Well, let me call these people up, and then I'll see if they got it, and I'll search around here.
Okay, and just I would get several bags. That way, we'll just store it on site. You can put it in the maintenance room or whatever.
Yep. They should get about 2 or 3. Yep.
So maybe get like 6 or 8.
Oh God. Okay.
Well, this is a big storm, and I just want to have it there.
Yeah, I got you. We'll see if they have it.
If they don't, just get what you can, and in the meantime, I'll call the snow removal people and see if and when their plan is. But do you have any other concerns or things that you need addressed down there before the storm?
Not off the top. There's probably something, but not off the. I went down there yesterday for the sprinkler inspector. And.
Okay, good.
And
yeah,
there.
And I meant to tell you this, but we're having it. That was a different company than who's been doing it.
Yeah.
The last company hit us with like a $12,000 estimate to do some head replacements and to drain the whole system and redo all of the.
Oh my gosh.
Yeah, we can't afford that obviously. So ownership required us to do a second opinion.
Yep.
And we're trying to see if we even need like the antifreeze in those pipes, or if we could go with the cheaper option, which would, save us about $6,000.
Yeah.
So that's what that was about. How long were they there?
I was there for about a half hour.
Okay.
He just walked around and looked at them all. There was this one that had a little bit of oil seeping out of it up in the attic.
Yeah, and that's one of the ones that has to be replaced, and they're saying they're going to have to drain the whole system, and which probably does have to happen. We're accepting that, but we're just trying to determine if
actually do need the antifreeze stuff.
Yeah. He didn't seem too concerned about it. When I pointed it out, I said it's been there forever.
Yeah. Well, and that's kind of why I asked the question to this other company that's been doing it. I'm like, I see the main largest ticket item here is putting back all new antifreeze. Do we need that? And he's like, oh yeah, definitely you do. And I'm like, okay.
Huh.
And then I consulted with the contractor that did some of the TI stuff for us back when we bought the building. And he said he didn't think that we needed it because the building's pretty well insulated. You know, that's more for like areas where there's pipes that have high risk of freezing.
Yep.
So we'll see what comes to that. Hopefully we don't get hit with this huge have to do repair scenario.
Yeah.
But thank you for being in, I appreciate it.
Oh, yeah.
And then what we're also looking at doing, while I have you on the phone, we might be switching out all those thermostats. And you don't need to tell the employees this, but so that we can monitor them remotely.
Okay.
Save everybody time and
Well, that's interesting. Yeah.
well, I mean,
Well, that's a little missing.
so far behind technologically, it's like we gotta bring it up to.
It's hard to believe it ain't that old of a building. It's not that old of a building.
Well, technologically speaking, though, our systems are all old.
Huh.
All of our, you know, everything is like the water heater. That we just replaced that. These systems, they're 13 years old.
Oh, I see.
That are air handlers. So there's a lot of, you know, things that could come up just because of time and
Yeah.
everything's so inefficient.
Yeah. You're doing a good job.
Well, you're doing a good job. I appreciate you very much.
Yeah.
I'm just the middleman, basically. You're the one that's there on site for us, and we appreciate you.
Okay.
I can do it without you.
Well, thank you very much.
All right, let me know about the ice melt and if there's anything I can do for my end.
Yes, ma'am.
Okay, thanks.
Bye. Oh, God. We're breaking out. Yeah, this is Jim with Always Clean. Tell me that we have some ice melt still. We do good. Well, I don't know if I can put 6 bags in my car, but I'd like to pick up 3. And maybe, yeah. Yeah. Okay, and I'll be down there in a little bit. 3 bags. Okay. But what, do you know anything about the storm?
Where do you live?
Springfield.
I've seen anywhere from 3 to 18 inches.
Oh, God.
All the different websites that I've seen.
Nobody knows nothing then. Okay, well, thank you very much. Bye-bye. I've gotta go on a trip. Yes, I do. Before lunch hour. Before it gets busy. Well, if it gets too nasty tonight, I will not go out. God. I hate the snow. I hate this. I hate it. Ice. I don't know if anybody in here's had an ice storm or been in some severe ice storms. I'm glad they have $11 a bag.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome to Schwab Network, where real-time market coverage means expert strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time. Speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. Welcome back to the Watch List. We welcome in Scott Ladner, Chief Investment Officer at Robinson, as markets are, 2 days in a row of gains and rallying. In fact, we're right around session highs right now. Some of your thoughts, big picture, Scott, on this action and volatility that we've been seeing?
Yeah, I think actually it's weird. People associate volatility this week with green stuff and everything having to do with that with Trump. I actually think it was a lot more to do with the rise in interest rates we saw, and it's starting in Japan and then making their way over the U.S. I think that really sort of spooked folks a little bit, like on Tuesday, and then we saw that sort of reverse yesterday. I think it was a little bit of a red herring on the Greenland stuff this week. But regardless, it's happy we're back where we are again.
Well, it was also the talk of those tariffs on Europe. 10% on February 1st, that it was going to go to 25%. So I think people just started to wonder about that uncertainty. As soon as the president said that he won't implement those, the market got a nice boost on
Well, it
that.
tells you how ignorant the market is.
How do you feel about AI, which has been tech and AI really led this market?
It has the last couple of years, and because the last couple of years we've actually been mostly about the building of the AI capability inside the system, essentially. I don't think that's going to be the case in 2026 or in 2027. I think
This guy kind of funny guy.
We just got to build this thing.
Someone you see on Andy Griffith.
Use it throughout the economy. We've got to figure out how to use this thing and this technology. So I think that's actually a change we started to see at the end of last year, and we're going to continue to see it throughout this year. And that's actually, I think, one of the reasons we're getting a little bit of a broadening trade going on in the market this year.
I mean, you did see there were a lot of questions about the AI bubble.
We got a double bottom up to 63.
They were talking about CapEx
270.
something to 55 billion. And that sort of meaningfully changed people's thoughts on tech last week. People started to feel better about tech. They really thought the CapEx spending for AI, which is part of GDP, continues. You don't necessarily think it's slower?
Oh, I don't think it's necessarily slower. I mean, we can continue a pace like this. I just think this is going to be a case where it's not the only thing going on. Like last year, the last 2 years, we've had kind of one stool, like one leg of the stool. When we think about what's really kind of supported the market and the economy, it's been CapEx related.
We're now at 470. I'm up $200.
Really helped. It's about half the GDP growth last year. This year, there's a lot more legs to the stool for the economy and the market. We have fiscal spending from the government, from the tax stuff. We've got the Fed cuts that have happened over the last 12 to 18 months, actually finally making their way into the economy. Now that we've had sort of a gestation period, and then you still got the AI productivity things that are happening, and as people figure out how to use it. So there's just a lot more sort of tailwinds of this economy right now than there were the last couple of years, and it's really this AI story only.
And I know you're looking at all the geopolitical risks, but some of the things that you do like when we talk about sectors and or geographies, let's talk about that a little bit. Equal weight market versus more than cap weighted market, right? Equal weight actually hit highs before the regular S&P.
Yeah, and look, we think that's actually going to be a theme with some staying power this year because, as I said earlier, we do see this year as sort of like a year where we're going to diffuse AI through the economy and more different players can actually access it and use it to help drive productivity gains. But that also means that we're going to have this sort of nominal GDP boost. So if you think about what you want to be exposed to, if you have sort of coming off of a bottom, you typically want to be exposed to cyclical sectors or things that are very economy dependent. You also want to be exposed to those things if you're going from 4% nominal GDP growth to 8% nominal GDP growth, which we think we're going to get this year. You want the same types of exposures. So we think that sort of broader exposure to things like financials, things like home builders, materials, stuff that's cyclical is going to be
interesting that you have financials, because we were talking much about financials since they reported. And, I saw a lot of green arrows this morning for the financials. You do like that group, and as the Fed, I guess, eases, you like financials, materials, home builders?
We do, and I'm probably in that order, actually, financials, materials, home builders. The financials, though, are one, they have an additional thing going on that, Trump, we actually thought coming in that deregulation was going to be a big theme for Trump in the first year of his administration, the second time around. It really wasn't. Right? Like he cared much more about the big beautiful bill and about tariffs, but those sort of took priority for year one. You come to year two, though, like those things are sort of passed, and so now we think he actually can focus on some of the deregulation policies that he wanted to run, that we know that he likes. That's going to be particularly helpful for the smaller financials, mid-sized financials, not quite as much for the big boys, but definitely the smaller mid-caps. They can really benefit from that kind of policy move.
And when we talk about infrastructure, what kind of infrastructure?
So anything having to do with power delivery, so getting electricity into the place where we need to get it, and kind of writ large is going to be the big thing. Now, bridges, roads, all that kind of stuff will end up being helpful, I think, as well, because we need to replace some of that stuff. But it's really more about sort of the power generation, power delivery side of the infrastructure where we think got a lot of legs.
How invested are you when you think about asset allocation? I mean, is it a lot of equities in your portfolio? U.S. equities?
We are weight equities overall, and we're about market weight or sort of benchmark weight on the U.S. side of things. Look, we don't think bonds are going to have a bad year. I mean, they were up 7% last year on the investment grade side. We think, like 4 or 5% is probably what we're going to get out of bonds this year. So we don't think it'll be bad. I just think you're going to do far better on the equity side of the ledger than the bond side of the ledger this year.
Understood. Scott, anything else I left out when we think about the Mag 7, for example? Are you a fan?
So a fan, yes, not a raving fan. So I actually think Mag 7 is going to underperform this year. But this is not like a March 2000 ball. These stocks aren't going to go down for them to underperform. They just kind of go sideways for a little bit, and the rest of the market can outperform them. We think this can be more like that kind of performance than it is a sort of like a catastrophic, Nasdaq bubble popping sort of performance.
Scott Ladner, great to see you. Thank you so much for being with us, Chief Investment Officer at Horizon. Thank you, Scott. Coming up, we're going to take a look at geopolitics from Venezuela to Iran, Greenland, all of this and what it means for commodities, including oil and gold and critical minerals. U.S. investors want to know the Dow's at 454 points and the S&P's at 6930. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action from Fed policy to global growth.
$5.40.
And geopolitical risk. Smart, fast, and always live.
I'm still in 69.30.
Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles.
Well, I'm in the 69.30s till the storm breaks free here in Missouri. I gotta go pick up some ice melt so people won't fall on their ass. I'm in the 69.30s off the 200 EMA. I took about a 20-minute nap We're at a head and shoulders above the 9 EMA. Whoa. $5 at... Oh, dang, Nicole. Who's that guy in here that said there ain't no pretty women in this room?
Benoit,
Look at that.
Mackenzie Investments. Thank you so much for being with us. Some of your thoughts here on the big picture. I mean, we care so much about
Oh, there he is.
politics and how it affects our investors here at home. Some of the names in the news, countries in the news, Venezuela, Iran, Greenland, just to name a few. Some of your thoughts on how that's affecting our markets here.
I'm a legend.
Well, here at McKinsey, we've done this for a long time. Natural resources is right at the center of the Canadian economy. A third of our TSX, in fact, is natural resources. So oil is certainly a big part of geopolitics, intertwined with many minerals, even critical minerals. So, you know, it's tough to decide where to go.
For the double top.
There's a necessary transition in that we're using less
Hey,
and less,
ladies.
and the fastest growth.
Ladies, would you please stop throwing your bras up on the stage? I can't concentrate. I did have something funny happen to me once. I can't remember. Oh yeah, well, I went to this disco club. Back then there's like 15 girls to every one guy, or maybe even more than that, 20 girls to every guy. And I just sit there and I seen this girl sit her across the room, and every time I looked over at her, she'd be looking back at me, and we'd always sitting by herself at our table. So before I knew it, I turned around and that girl was standing there, ready and able. And I stood up and I said, "Baby, you wanna dance? Make a little romance on the floor." Then I ended up dating her for about 6 months.
Not helping here. I think there's a bit of a disruption in global trade. So maybe there has to be an offset to this, and oil is coming into play here to bring it downward.
Did you think it was interesting yesterday when the president talked about nat gas production being at all-time highs, and that we're very much going to be in a world of nuclear energy as well? We saw some of the uranium stocks on the rise yesterday. Tell me a little bit more about these stories.
Artificial intelligence is a race to the moon, as I've said many times, and people are trying their best to put their hand on power, not power in 10 or 15 or 20 years from now, but power tomorrow, or perhaps at worst in 2 years from now. So there's a long lineup of companies trying to secure that power. Natural gas is made in America, made in Canada, so it's in friendly hands, as we say, and it is very, very cheap. It's very cheap to the alternatives, and it's executable. That's the most important part. Because a lot of those large companies, like 7, they want good execution, and I don't think they're too fussed about the price. Maybe in 10 years it will be, but today it's more about executing. We have a lot of it, and it's available, and it's probably friendlier than coal and other alternatives when it comes to other power sources.
Look, we saw Freeport Macro with higher quarterly profit, even though they had some lower production of copper, gold. We've seen the rallies. Freeport Macro stock is here at new highs. For example, it's up 50% 1 year. Your thoughts on copper?
Well, we've been at McKinsey pretty bullish on the whole metal space, including gold, including copper, and many other minor metals. I think that the world is looking to secure sovereignty when it comes to energy supply. As I said, it's a race to the moon, and power is key to executing and getting there first. So along with copper, there is silver that goes into solar panels and so on. And I think the whole array of base metals and critical minerals and defense metals, we could go there as well, talking about geopolitics, are needed to execute on energy sovereignty. China, 25 years ahead of us, they started on that in 2000, and they are now controlling 80% of many renewable technologies. It's secured. A lot of the supply that goes into renewable technology. Copper smelting is already happening in China. Copper mining happens pretty much everywhere in the world, but it's still need to transform it and continues. And that's where China is really controlling the outcomes there. Hopefully, many countries in the West can do the same, and it can result in investments in the sector.
Coming. I mean, even today we're at about 4,900 now on gold. How high does gold go?
Well, you have to tell me where those geopolitics
go.
It's very tough to predict. I think, as our Prime Minister was mentioning, we're having a rupture in global trade. It's going to be very difficult to go back to where we were. I think people are having questions or they're feeling insecure. They probably only at S&P 500, looking at where it is today, and have lots of it. Just talking about the international investors here. So where do they go next? They're not buying treasuries, thinking of inflation, thinking of trade ruptures, and gold is serving a purpose here, endly, being very neutral in this world.
And what about rare earth or any other minerals or things like that? A final thought, Benoit?
Well, I think everybody's going to be doubling, sounds like, their expenses on national defense. They're trying to secure their sovereignty when it comes to energy, and many of those minor metals are going into renewable technologies. They're going into AI, they're going into energy distribution. So if you're thinking of rare earths and defense and some special magnets for
stay very bullish, we gotta hold this.
There's a long list of rare earths and many other minor metals that fit that criteria. And again, China has been the largest processors for some time now. The rare earths are dispersed, but they're not processed here in the Western. And that's the issue. Not to say that this would be efficient to bring back some of that processing, but if you're thinking of energy sovereignty and security and national defense, let's go on to even steel, building tanks. You don't want to be more dependent on your neighbors.
Thank you, McKinsey Investments. Great to see you. Really appreciate it. Thank you. Coming up, those small caps. Look at that. Record close yesterday for the Russell again today. Is it a new popular ETF you should be a part of? More coming up.
Made a mistake.
Could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
already ready insights, follow me on X at Sam_Butters and connect with me on LinkedIn or Instagram for more.
Her name is Sam. Don't ask me why.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market
Ice melt.
with up-to-the-minute news and insights.
3 bags of ice
Trade
melt.
with Schwab.
Welcome back to the Watch List. I'm Nicole Petalese. We're live on the floor of the New York Stock Exchange. So glad you're with us. This rally continues on Wall Street. The Nasdaq and Dow are now positive for the week. Brett Meyer, head of capital formation at Tao, is with us. And want to talk about market action. I know the small caps are on your mind and a whole bunch of things. But what's your big picture thought here?
Yeah, thanks Nicole for having me on. Yeah, look, it's been a long time coming for small cap to potentially be back in the spotlight, but no question that so far in 2026 we've seen that. I think as we sit here today, the Russell 2000 value is up almost 10% year to date, which is a pretty substantial kind of outperformance. And look, in many regards, it kind of dovetails into your last two interviews. A lot of names in the materials and cyclical sectors are really starting to work. I think investors are starting to pick up on the fact that the current administration is very keen to make sure the economy runs pretty hot, and quite frankly, that is a benefit to a lot of real economy businesses. Many of which Toll & Company we invest in, cyclical businesses, industrials, materials, and energy. And so we're excited to see what's been transpiring so far just in the past three weeks already.
You're absolutely right. The incredible performance with small caps has really wowed Wall Street. And those folks waiting on small caps over the last decade, they're probably feeling pretty great right now. Let's talk about how you're handling risk too. Are you doing barbell approach? I mean, how do you sort of hedge your risk?
Yeah, it's a good question. I mean, look, I think the primary thing that we do is really stick to fundamental valuation work and really make sure that the businesses that we're buying represent a really substantial discount to their intrinsic value. Toll & Company has practiced a low price to sales or enterprise value to sales investing philosophy for nearly 45 years. And that has served our clients very well, and it enables us to buy durable businesses when they're really cheap and then benefit as the economy starts to take back off and the earnings of those businesses come up with it. We tend to be pretty equally weighted in the portfolio that we have. We own between 40 and 45 names, but we don't take any outsized bets on any individual stocks.
Wow, we're back down again.
Positions go in at between 2 and 2.5% of our portfolio.
Don't know. We got 139.
What you've been seeing, what's working with certain ETFs?
Can we get back to the orb?
I'd love to see them.
Yeah, sure. Well, so basically what we've seen is that since the NASDAQ
we got a double bottom, triple bottom.
end of October, there's
that
been
probably
a real
do it right
shift
there.
in sort of market sentiment and flows. And small
Brandy.
ETFs, I have sort of more just broader picture information from a group called Strategas, which we get a lot of information from.
Don't trust them.
Small cap ETFs, broadly speaking, have brought in $9 billion since the end of October, and that's right near the top. To be honest with you, the one space that's gotten even more, or notably more inflows is emerging markets equities. That has been very notable. But here in the U.S., it's really been small cap and cyclical.
Shut up. One of them, 2 bits, and a freebie. And the SPX 6930s are now at $2.15. 205, 210. He's going to make a business decision here. See, I shop around, fuck around and find out. You have any clue who I am? 69.30s. Come on. I don't want to chase. And I had two opportunities. There it is. There it is. There it is, right there. Calm down. Calm down. Okay. Crowd's going wild here at the Sports Arena. $2.10. 205. Randy. $2. Okay, he's in it to win it. In it to win it. Off a triple bottom. He's trying his best. He's got the 69.30s at $2. He has 3 of them. And he's down $60. Now he's down 90. Okay. The crowd's going wild here at Sports Arena. Just go ahead and savor it right there. Just go ahead and hold support. Let's not have no problems. We're having problems. See, right there, always when I buy it support, a fat candle comes in. Okay. Not always, but I mean, always. Not always, but when it does happen, it's always a big candle. Oh, uh-oh. Washboardjim jumped in just a few cents early. Well, his butt itched and he had to hurry up and rub it against the chair, and he accidentally pushed the enter key. Let's go. Not that way, the other way. Nicole, I love you. No matter what he said. I'm glad you got my pennant that I sent you. You like it? Did you open it up? Yeah, you liked it, didn't you? It matches mine. That's why I got it for her. No problem here. No, it's going down. Okay, see, it's already at 125. He's going to come down and hit the orb. See, I should have waited like I wanted to. Instead, I took the triple bottom and so I got to make a decision. I got 3 of them. I got 600 in it. So I have to buy 9. He can easily drop down 6'9", 1'3", 8'3", 8'3", 8'3", 8'3", 8'3", 8'3", 8'3", 8'3". Again, that's 69, 13.83, 83, 83, 83, 83, 83, 83, 83, 83. That's $6,913. $6,913 83 cents. Woo! He's on a roll. I'd say in the 21 years of trading, I've never got so down to the thousandths of my pinpointing my support levels and resistance levels. See, here's I should have added at 130. At least I could have got 130. Could have got 130 twice, I know of. And added on to that. You're in at 130? Well, you, Randy? Randy knows I could have. I know I could have too. We gotta break the 9. Okay, this is the last person I traded with. Used to hear this sound right here about every 2 weeks. I'd get a message. Jim, are you clipping your nails again? That's very unprofessional. Here we are back to 115. Usually 3 clips, I can get a thumb done. Angel, if you're listening, could you tell the room the last time you clipped your nails? We're waiting. Last week, we're at $1.15. Okay, now we have a snake, possible breakout, but not quite. So let's draw the snake in. I'm nervous, Jim. Should I stay in? Watch the development of this here pattern that escapes from the snake. And if we break the 9, what do we need? Yes, we need a 1 body candle above the 9. You see that right there? See, Jimmy was smart this time. Just I ain't gonna let this get away from me this time. Do we have a breakout, please? So, before we started kind of moving up here, I jumped into these here at 120. Average 140. Kind of risky. Oh, I was in the middle. Okay, we got a triple bottom. Now we come back and we retouch the previous resistance, which is right here. Now we need to hold that, move up, and break out. I won't have it any other way. Maybe not. Maybe we've got a double bottom, triple bottom. So many different business decisions. Is that necessary? 69. So now we're at 69.6,919 and 31 cents. Oh no, God, darn it. Well, we're going to the orb. No doubt in my mind now. What to do. Three black crows. This could be a reversal pattern. With a tweezer bottom. Oh, I don't like that color. We'll put that up there. It's not. Let's go. Much better. Much better. Well, he's done. Down $600. There's the orb. Now I'd be jumping in this trade if I was not in it yet. It is kind of late. It's only 4 minutes to power hour, so you're kind of at a risky spot. We could drop more. 69.09. 69.10 would be your next bet. $3.50 dip. If this orb does not hold. Well, if it's Tuesday and today's Wednesday, right? Oh, today's Thursday. Okay, I'm real confused. Oh, okay, no, I'm not. This ain't looking too good right now. We keep dropping. Even if I'd got in at the orb, I'd been wrong. Not looking good. Might stop out of this one. Take it.
Moderna rally
Take
that
the hit.
we've been seeing up year to
Don't
date,
do
almost
nothing real soon.
80% for Moderna. Now, they did release some positive 5-year data from a cancer vaccine trial. The company's vaccine to treat melanoma alongside immunotherapy is shown to reduce the risk of relapse or death for patients that were in this vaccine trial. Moderna was a pandemic winner, but has struggled since then to find a new growth avenue, slumping about 29% last year. But today, it is one of the top performers on the S&P 500, up more than 6% right now. Another top performer today, Meta. After getting a lift from Jefferies. Jefferies putting out a new note on Meta, reiterating its buy rating and its status as a top pick, saying that they believe it has an attractive risk-reward potential after the stock's recent pullback since its most recent earnings. Alphabet also higher on the day today after Raymond James upgraded it to strong buy from outperform with a new price target of $400. The firm says that Google is entering a phase where its AI stack is quote-unquote shifting to high gear. Lots to talk about today, but before we get to that, let's take a look at how the markets are faring. We are still holding on to green across the board. The S&P up 0.5% at 69.10. The Nasdaq trading more than 6 tenths higher, 25,493. On the Dow, 326 points higher, 49,403.
I need a big run.
Up 0.8% at 27,2034 right now. As we flip the board here and take a look at the 10-year, we're at 426, mostly unchanged as of this morning. The dollar slightly lower at 98.18. Gold now up above 4,900 for the first time ever, 49.2150. That is 1.75% higher. Crude oil trading lower, down more than 2%, 59.32 a barrel. And Bitcoin just can't seem to reclaim that 90,000 level all day, 89,880 right now. Sam, there was a lot to choose from on this day of continuing rally. What stuck out to you?
Well, I very much think it was this rally of Russell 2000 and its outperformance hitting another record earlier today. The index for small caps has actually outperformed the S&P 500 for around 13 days now, which is the longest streak since 2008. So these companies, as we know, are more sort of economic and rate sensitive compared to the others. And as Lieutenant Saunders was telling me today, while the start of this small cap rally was very much predicated on the Fed lowering rates, now that the Fed seems to be on hold, this is more of a growth story and one of economic resilience as to why we're seeing this outperformance. And we've got evidence of that today, Marley. I mean, Q3 GDP coming in at 4.4, that was better than the market had expected, and it's the fastest pace in 2 years. So the labour market is also showing signs of stability. We've got the jobless claims coming in at 200k, which continues to point to this low hire, low fire environment. And then we've got the Fed's preferred gauge of inflation, which is the PCE, which released with the October and the November numbers showing a 0.2% increase monthly. It rose 2.8% from a year earlier. That was matching forecasts. And of course, we did see off the back of that the most sensitive two rates, the 2-year yield, which has been seen as a proxy for what the Fed might do next, actually ticking up a couple of basis points to the highest level that we've seen so far this year. So a lot of data, obviously a lot of earnings, but we continue to see that rotation and those small caps outperforming. But Marley, let's think back to you and Alex in Chicago now with some of today's top movers.
Thanks so much, Sam. Yes, lots of top movers today. Let's start with the one I get into that with. It's such a significant move, I actually double-checked it. I'm talking about Moderna, of course, 6.5% higher today. Just in the last week of trading, up more than 30%, Alex. Walk us through why we're seeing such an incredible rally in the stock.
Yeah, so it's the third best performer today, but it's the second best performer so far year to date. We talked a lot about Sandisk. It's the best performer year to date, but Moderna is certainly making a run, up 80% so far in 2026. 6.6% of that is today, as you mentioned. And the news is some new data shows that a personalized cancer treatment developed by Moderna and Merck helped to prevent recurrence of high-risk skin cancer after 5 years. So patients with severe melanoma who got this injection alongside Merck's cancer drug Keytruda were less likely to die and have their cancer return than those who only received Keytruda. So interestingly, we actually see Merck just a little bit lower as a result as well, because in a way, kind of in a backhanded way, kind of poured a little bit of cold water on the Keytruda therapy. But the new treatment uses messenger RNA technology to create a personalized therapy by analyzing the genetic sequence of each of the patient's tumors to train the immune system to spot and destroy the disease. So exciting, and obviously the data itself does suggest over the 5 years that it can be helpful, especially when paired with Keytruda. So positive, optimistic type reaction. All that to be said, stock's still like almost 90% off its all-time high, down like 70-some% in the last 3 years. So slowly attempting to climb back up the mountain. Analysts are pretty mixed on it, about 3 and 4 in the hold camp, and then pretty split between the balance at 25% or so between sells and buys, with the average 12-month price target at 37. So it goes to show the stock moved a lot recently, and analysts haven't quite caught up.
Yeah, I think we'll probably get some revisions there, but like you mentioned, they've been under pressure. They were a big COVID winner, but since then have sort of struggled to find their footing. But I will celebrate any win that gets us one step closer to curing cancer or helping people live longer with cancer. So Moderna having a good day, 6.5% higher still. On the flip of this, we've got GE Aerospace. They arguably had a good report. They beat on the top and the bottom line. I did have a conversation about their earnings on Trading 360, and one of our guests implied that this might just be some profit taking, but also some sentiment here that maybe they were slightly underwhelmed by some of the numbers. Walk us through the report and what some of your takeaways were.
Sam and I spent a long time talking about this on Next Gen, and one thing that you've focused on as well is we're off to a really good start in this earnings season, 82% beat rate, but the price reaction on a one-day average is negative. Well, in many ways, GE Aerospace is symbolic of that exact kind of macro environment. There's a lot to like about this report. Beats on the top and bottom line. Really important segments like commercial engines and services revenue beat. Commercial defense and propulsion technologies revenue beat. Cash flow, 50% growth year over year, beat by a wide margin. Estimates for the year, really strong. The midpoint estimate from Bloomberg was $7.10. Well, that's the low end of the range they provided for adjusted EPS. The adjusted cash flow metric, very similar, 8 to 8.4 billion. Well, the estimate was for about 8 billion. So the low end of their range is pretty in line with the midpoint. Now, where you could be a little bit nitpicky is on their adjusted operating profit. They see 9.85 billion and 10.25 billion. And the estimate was for 10.14 billion. So maybe that's a little bit light. But I think at this point, we're really clutching at some straws here. I think that there's a chance, and look, I'm not going to say you should buy or not buy, or that I know or don't know. There's a chance that this is a stock that in a couple weeks we look at it and say, that was an interesting opportunity, because the numbers say things are going better, and they're already going really, really well.
Yeah, Paul Powers from FISNO was also on 360 talking about this today, and he kind of echoed a similar sentiment. He doesn't see a short or even really a long-term problem in any of their numbers. He said he thought it was some profit-taking, some people maybe with some valuation concerns. He did not believe they were warranted. He absolutely felt this was a potential dip-buying opportunity here.
One thing I was going to say, I totally understand the valuation concerns, but that valuation concern existed before we got the numbers, and it was still better than expected. So, hey, that's a reasonable argument, but those same people would have been making that argument throughout this entire run-up.
Absolutely, and a good point you bring up there, too. Let's bring up another one we talked about today, Alphabet, just having such a strong performance, in the last several months, through 25, continuing its run, got an upgrade from Raymond James. They were bullish anyway, now they're just more bullish.
Yeah, we talked about this on Next Gen. Upgrade to strong buy from Outperform. Price target hiked pretty significantly from 315 to 400. And it comes from Raymond James doing some new bottom-up analysis, and they really like what they found within the cloud platform as well as the search verticals. And because of that, they have material revision to their 2026, 2027 estimates. And they say now that their 2027 revenue would be at the high end of the street, and that supports the upgrade. Like many, they love what they see in the case of the AI stack and the momentum behind it, and they think that's going to just continue to fuel upward revisions in terms of guidance from the company, but as well as analyst opinions on this. So, long story short, A lot of high quality momentum behind the AI acceleration at Alphabet. Fundamentals support it. Their analysis supports that. They made an adjustment. They're getting even more bullish. For the name that I've argued for the last couple of months is, I think, taken the mantle and is now leading the charge for the Magnificent Seven.
And if you give back some of the gains that we saw earlier in the day, only up about 0.6% right now, but still another good day for Alphabet. But let's stay talking about Mag 7, talk about the best performer in the Mag 7 today, and that's Meta. Of course, they're up about 5.5%. Jefferies gave them a bullish note as well.
Yeah, this is interesting because if you were to look at the S&P 500 performance, yeah, we use back off the highs, only up about 37 points now. But Meta is still the biggest contributor, and it's contributing about 8.5 points to that market performance today. So, doing some math, I mean, you're talking about a significant chunk here just from Meta, probably close to 40% of today's rally just from that one name. Jefferies laid out 5 reasons to buy what they called the pullback in Meta. Now, it isn't much of a pullback anymore, maybe a little bit, but helps that it's up 5%. They point to attractive risk reward, especially when compared to Alphabet. So we're just talking about how Alphabet's been kind of the runner of this group. Well, all the two companies, Meta and Alphabet, actually have a lot kind of in common, particularly when it comes to ads and the roles that they play. So they see an attractive risk reward in the discount relative to Alphabet. And they see what they say is moderate downside to estimates and stronger upside potential. So again, you're now saying, hey, if we're going to say, what are the chances that they revise things lower versus the chances that they revise things higher, they see that there's a higher likelihood that they would see upside potential. They say that their AI hires are set to deliver in 2026 and continued momentum from Meta's core flywheel powered by AI combined with accelerating activation of major incremental revenue engines, including WhatsApp threads and Llama. All that combined, those 5 reasons, they say buy $910 price target. That is way up there.
Yeah, $910 price target is certainly there at $645.93. Even with this move to the upside, we're seeing this 5+% move today. All of the Mag 7 in the green as well today. Alec, thanks for being with us to break down the story. That's Alec Coffey, co-host of Next Gen Investing, and our senior equities contributor here on the network. Let's send it back to Sam in New York.
Thanks so much for that, Molly. Well, coming up, we will dive into the outlook for the economy and how to position your portfolio for the 2026 market on close. We'll be right back.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Here we go.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market and Close. I'm Sam Barton from the floor of the New York Stock Exchange. Alongside Marley Hayden in our Chicago headquarters, let's just check in with where these markets are at, because obviously we've seen a nice rebound. We're extending the gains we saw yesterday. That nice lift helped by some of the rollbacks.
Because Trump ain't going to blow the world up.
President Trump on Greenland, and of course these tariffs with the so-called taco trade. So here we are today. We continue to see these gains in the market. The S&P 500 managing to hold on to this 6,900 level right now. Obviously, a lot of the story and the focus has been on the Russell 2000 as we see this broadening out, this rotation down. Caps, the small caps have been outperforming. We've seen this run for almost 14 days now, and a lot of this has been predicated obviously on the Fed cutting rates, but now that they're on hold, a lot of it's been down to the growth story. And as I mentioned earlier today, we did get more evidence of that. We've got 4.4% on the Q3 GDP. The economy is growing better than expected right now, and also the jobless claims are holding up okay as well. Low hire, low fire, things aren't falling off a cliff, and so very much this has been the story for these markets today. One of sort of a cooling or easing rhetoric, and of course the macro data holding up as well. Of course, the earnings continue to trickle through too. Some interesting reactions, individual stock stories. The US dollar right now is at 98. Crude oil has been taking a bit of a breather. Obviously, we've seen more of that appetite for risk rather than safe havens, but interestingly, gold still catching a bid today as well, climbing over that 4,900 mark. Bitcoin, as Marley mentioned, it just can't manage to break past that 90,000 level. Once again, we are stuck just south of that, and we are continuing to take a leg lower today. The 10-year yield, interestingly, sticky today. It's up just fractionally. We're at 426 right now on the benchmark. But if you look at the more rate-sensitive 2-year, that's up a couple of basis points there, and of course that's a proxy for what the Fed might do next. So that's been a very interesting story as to where perhaps the rate-cutting expectations are in the market. Technology holding up today. Communication services is bright spot 1.3% higher. Discretionary 1% up. Staples just fractionally down, which is of course normal in an environment like this where we see sort of more risk on. That was the story yesterday for the staples. If we flip the board and take a look at some of the other sectors, we are very much seeing a bit of a mixed picture, because we do have utilities lower, real estate down, and industrials lower as well, though industrials have been catching a bid lately. Materials continue to outperform here. This has been something that a lot of investors have been doubling down on as well. Financials holding up as well. We'll continue to get some earnings. We'll get Capital One as well this afternoon. Energy holding up, and so is healthcare today, just fractionally. So there's a quick snapshot of the market. We've got about 42 minutes to go now, but I'll send things back over to Marley in Chicago for now.
Thanks so much, Sam, for that market update. Joining us now in our Chicago headquarters, Philip Strel, the Chief Investment Officer, America's at Morningstar Wealth. Philip, wonderful to have you with us. I'd love to just kick things off before we dive into some of the notes that you sent over with your thoughts on the market action that we've seen so far in 2026. We have these continued conversations about how headline-driven we've been, yet we're continuing this rally. Most of the headlines are getting a short reaction, and then it sort of seems as if we've forgotten that.
Right, it's been a remarkably headline-driven market. We had geopolitics, we had flare-up in trade tariffs, and it's been remarkable that the market's really been able to hold on. We've had kind of a pro-risk rally and very much a rotation into some of the underperforming areas. If you think about small caps being up 10+%. So it's been pro-risk, kind of dominated by a positive outlook on policy, both on the monetary side as well as on the fiscal side. And we think that there's room to be optimistic.
How sustainable is this, though, that we're looking through all of this continued noise? And what kind of headline might it take for us to actually force a repricing in the markets?
It's a great question. I think the one area of weakness is on the labor market side. I think if you look at some of the jobs reports we've seen more recently, I think we do see some negative momentum there. And so any kind of downside on the labor market front, I think, could weigh on sentiment. And then, of course, we have the earnings season as well. And so we've got big tech earnings next week. And so any sort of negative news and maybe a pullback on the CapEx front could weigh on market sentiment as well.
And so let's talk about the labor market quickly. They're losing momentum here. We've seen the revisions. We've seen some of the job quality revisions as well. Is this something that you think investors should be seriously concerned about right now? When do we turn from a slowdown to something that needs to perhaps have more attention? And what are you noticing under the hood that you're keeping a close eye?
Yeah, the labor market one, in the negative front, as I mentioned, I think is one area we're watching. And I think there's kind of the cross currents of kind of the stimulus we're seeing on the fiscal side as well as on the monetary policy side. And I think what we're watching is whether that stimulus in terms of potential future rate cuts as well as the impact of some of the pro-growth initiatives as well as the tax cuts, whether that can stem some of the negative momentum. And so we're keeping a close eye on that, and certainly the Fed will as well as they determine how many times they will cut in 2026.
And so the January cut's pretty much priced out at this point. March still, I think, in play at 15% right now, gets slightly higher for the next meeting. What is your expectation in terms of Fed action through 2026? And what data points need to show up to actually move the Fed in the first half of the year?
I think labor markets, and as well as the continued sort of easing on the inflation front. I think we have revised our inflation expectations down a bit. We think that actually the less has been passed on to consumers, and companies have actually eaten more of the impact. And so a change there, I think, could have an impact on the path. But of course, labor markets will be key as well in terms of whether we'll see a continued sort of downside there. Our expectation at this point will be 2 cuts, one in the first half of the year, probably in the latter half of the first half, and then the second one in the second half of 2026.
And how much does the new Fed chair play into that outlook? And what is your anticipated action once we get one? I spoke to a guest earlier on my other show on Trading 360 who said that he felt the very first action of whoever that Fed chair was going to be a cut at the next meeting. What's your thought on that?
Yeah, I'd say, obviously, given Trump's focus on rate cuts, I wouldn't be surprised if that would be action. Of course, we have had some news in terms of, kind of reshuffling the board a little bit in terms of who's the lead candidate there. And so we'll have to see in terms of who's going to be nominated, but I think that's a fair assumption that potentially the first cut we'll see in 2026 will be that new chair.
And you also mentioned earnings season, which we're just sort of now coming into the swing of things. I was talking to Alex Coffey before you sat down about how we are seeing this really incredible beat rate. It's about 80%. We're seeing growth of about 18%, but we're seeing an overall one-day negative reaction. What is your outlook for the entirety of earnings season as we kick things off and good numbers are not being met with positive market action?
Yeah, we've seen some of that with the bank earnings last week as well. So you've had very strong fundamentals actually on the banking side as well. And I think it's just a testament to the fact that the areas that have done well, a lot of these expectations are priced into the markets. People see it as an opportunity to take profits. We have a constructive outlook on Q1 earnings. But I think one of the areas of focus, I think next week, AI, in our perspective, a lot of focus will be on the commitments to CapEx and whether that will continue. And obviously, that's a big part of the market and could weigh on the market if we see a negative outcome there.
Another conversation we've been having a lot are a lot of these international conversations, not just obviously Japanese bonds, one of the big ones, but international markets as well and expectations for international markets for 26. Do you still see attractive opportunity overseas?
We do, yeah. And one of the areas we look at, and so I'd say looking at 2025, what's worked well internationally, you had risky and kind of more cyclical plays doing well. So you had the European banks, for example, early in Q1 in 2025 doing well on the back of the spending and the stimulus conversations. And then you had the AI trade going global with a lot of the international AI plays, the chip companies in Korea, in Taiwan doing very well. Our view would be that we might see a broadening and perhaps more of a focus on quality stocks. So we actually think that quality stocks internationally look quite attractive at this point.
All right, so you mentioned AI abroad and also AI at home. AI clearly still a major theme for 26, likely 27 as well. But we are sort of in this transition point where we're shifting from infrastructure and conceptualization to actual productivity and needing to see it in the numbers. Are we going to see second-order winners in this AI trade? And do you think that that's an opportunity for 26 and moving away from some of these names that we constantly bring up in the AI conversation?
Yeah, exactly. So our view would be that we'll move away from kind of the AI one-way trade. So yeah, especially the infrastructure plays, the NVIDIAs of the world, the ones that are really kind of built the infrastructure, do well over the past 2.5 years. Obviously, a lot of spending has happened there. We've seen in the fourth quarter already some questions being asked about whether there's going to be a return on invested capital on some of these investments. And our view would be that there's going to be more of an impact on using AI to generate productivity in their businesses, to retain clients, and we like companies that have the ability to kind of apply that more broadly, and companies that are more vertically integrated, and companies that are more diversified than just the one-way hardware stocks that we've done over the past 2.5 years.
Well, Philip, we appreciate you being with us to talk all things 2026 outlook, and both domestically and abroad. That's Philip Strail. He's the Morningstar Wealth strategist. Thank you so much again for being with us. I do want to send it back over to Sam in New York for a look at what we have coming up next in the show.
Well, Molly, we'll check in on the state of the labour market and look ahead to next week's Fed meeting. Why will be on Chairman Powell's press conference. Mark Bloomberg will be right back.
Doo-doo. Nope, pull back to the low support. And then they're done. Then they're done. Yes, they are. 688.48. Low support 687, 76, 76, 76. 76. Oh gosh. 32 minutes left.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Kane in our Chicago headquarters alongside Sam Bottis in New York. Shares of Datadog on the rise today after Stifel upgraded shares to buy from hold, but did cut their price target to $160 from $205. The firm said recent channel checks indicate the company will post another larger than typical quarterly beat for the fourth quarter, and noted that its valuation, quote, appears relatively attractive for one of the few names we cover with accelerating core growth. Let's take a look at some of the tech names on the move today that aren't the usual that we talk about, not the big tech names. Arista looking much higher here, up more than 8%. There's Datadog up about 5.5% right now. And I mentioned that new price target is $160, despite it being lowered, still materially higher, $30 higher than where we're currently trading, even with this upside move. Autodesk trading 5% higher, $270 right now, and Intuit also higher on the day. So a big win here in the smaller tech names that we don't usually talk about. I do want to send it back to Sam in New York, though, for a conversation with our next guest.
Thanks so much for that, Molly. Well, joining me now, very pleased to say, is Joe Grisfellas, who's the Chief Economist at RSM. Joe, thanks so much for joining us. So, low hire, low fire environment. We got further evidence of that today with the jobless claims at 200K on the headline. What does that tell you?
Well, it tells me that the basic trend that we've seen in the labor market over the past 6 months remains intact. I just don't really see anything that's going to cause a big increase in hiring on a monthly basis. So what does that mean? It means you should expect hiring more or less around 50,000 jobs a month, which is what we need to keep the labor market stable. Most of that's going to be located in private education and healthcare services. So it's essentially a status quo set of data that we observed over the past couple of weeks, and we saw again this morning in the initial jobless claims.
More knife.
Yeah, and another piece of information that we got out this morning was the Q3 GDP reading, 4.4% on the headlines, which is the best in 2 years and better than economists had been anticipating. So I know that this, of course, is down to the July, August, September period, but if we are seeing more of an acceleration of growth, how are you thinking about that sans or X jobs?
I might have.
All right, so what we've seen, I think, is
I know I gotta get up and go.
Between growth, which is fairly strong. Most of what you're seeing there is a count of movements from quarter-to-quarter basis on imports and exports. The real underlying pace for the third quarter was 2.9%. That's still very strong, well above the long-term 1.8% trend. So what I expect to see is that growth is actually going to remain right on path in the first half, where I'm expecting 3% growth, but I'm only expecting 50,000 jobs per month. Now, from a financial and economic standpoint, if you're an investor, there's absolutely no problem with that. It largely tells me that, yeah, inflation is going to be around 3%, but it's not really going to get out of control. But to the public, that's a very different thing to explain, because when you go out like that and you speak to financial and non-financial audiences, it's like Venus and Mars these days. I can't convey to you enough the separate and distinct conversations we're having in financial markets and the one the public's having about the economy, which is about they can't get jobs, they can't move up, get better wages, and they have an affordability crisis.
Yeah, speaking of someone who's going to have to front a very big financial market next week is Chairman Powell. What does this all mean now for the Fed?
All right, so if you take a look at market pricing on federal funds probabilities or the overnight index swaps, the market is priced out any chance of a rate cut before we get a new chairman. So when we meet on January 29th, the FOMC is not going to hike rates. I don't think they're going to hike rates in the first half of the year. Now, that meeting, though, is going to end up being a real prime-time event, not because of what the Fed says, not because of what the Fed does, but because of the press conference, where I expect very aggressive questioning of Jerome Powell around this idea of central bank independence and his standoff with the White House.
Yeah, it's time to get the popcorn out for sure, as you say, a bit of primetime viewing next week.
Popcorn.
So, depending on what they say, what's the outcome then? I mean, how are you thinking about the threat of the Fed's independence? What does it mean for markets? What does it mean for the economy?
I'm quite concerned that we may end up getting some personnel in the Federal Reserve that just intends to cut rates regardless of what's going on in the economy. When I run my preferred models, I've got 4 different models.
Let me tell you something, you idiot. These interest rates are too high right now. They need to be cut. No matter what the market, you can't tell what the market, none of you have been able to predict the market.
In the political authority, they've got very different ideas about what they think the rate should be less than 10 months ahead of another election.
We need to sell homes.
Yeah, look, there's a few out there that do have that view around the fact that maybe the Fed has gone too far and rate cuts aren't appropriate at this stage, particularly because you've got the fiscal policy as that side of the equation with obviously the tax policies too. But I'm just wondering, obviously, we've covered what the Fed might do next. What are your models telling you about the efficiency gains from AI versus the job displacement right now?
Well, that's truly one of the bright spots is the efficiency gains. I do think that we've stepped up in overall productivity. I think that we're on a 2.5% to 3% trend, but because of the unique properties around artificial intelligence. When I talk to our clients, when I talk to CEOs, the common denominator is they just slowed the pace of hiring, especially entry-level individuals, because they're trying to figure out just what they've obtained with the 5-year series of investments in very sophisticated technology. You know what's really interesting is we're talking about AI, but the productivity trend we got is from machine learning era technology, which is the forerunner of what we're seeing with AI. I think we will have a productivity boom at one point. I think that living standards will be lifted, but the job market's going to look a little different. This is a transformational and disruptive technology. It's important that we begin to have these discussions about how we're going to integrate this into our lives, what it means for labor, and how what it really means is we've all gotten on the hamster wheel, meaning it's a lifetime of learning. You can't stop picking up new skill sets. I got to tell you, every day I'm spending more and more time with AI, making sure I know how to use it and making sure I understand it, because it's going to disrupt my industry, my job as well.
Yeah, and then you had Jensen Park from NVIDIA talking about the 6-figure salaries for those building out the factories. You need the plants, you need the electricians, you need obviously all the guys who are going to build this stuff as well. So fascinating chat. Really appreciate your insights today, Joe. Thanks so much for joining us. Joe Brasilis, who's the Chief Economist over at RSM. Marley, I'll send things back over to you.
So much, Sam. Coming up next, we've got Options Corner.
And stretch.
Here in our Chicago studio to take a look at the options activity on Intel ahead of its earnings after the close. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact the markets. Watch live on the Schwab Network at schwabnetwork.com.
Trading Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Intel will be in focus after the bell today. The company reporting earnings. Expectations are for adjusted EPS of 8 cents on revenue of $13.37 billion. The company has topped revenue estimates in 5 straight quarters. Shares hit a 4-year high today and are up 45% so far this year. That's, of course, the focus of Options Corner today. Joining us now, Rick Ducat, our lead market technician here on Schwab Network, to take a closer look at Intel. 4-year highs on the day of earnings. Rick, as we look at the technical setup here for Intel, what is it like as we go into the closing of these numbers?
So in this case, I'm taking a long-term look, 20-year monthly chart here, as you said, kind of crossing above some important boundaries here, 4-year highs, kind of representing this area. But what stood out to me even more was two other things. First is that you could draw a trend line starting here, connecting here. We've broken through that pretty resoundingly at this point. The other notable thing is that we've crossed above these old highs near 51.28. So we've broken the trend. We're making new relative highs. Those are some important parts of potential trend rollover, switching from a downtrend to an uptrend. So this is happening on a very long-term chart as well. So it's even more significant than on a shorter-term chart. But you can see Intel strongly outperforming not only its own sector here, the technology sector, but its SMH semiconductor ETF as well. So really some nice performance here. Interestingly, though, Intel is not even the best one of the bunch. It's the storage names here like Micron that are really taking off even further here. But Intel's still quite strong here. The strongest of the strong kind of is this little group that we've been looking at here recently.
Strong.
He's turnaround efforts from the CEO to kind of change the company, kind of reprioritize new products and reduce bureaucratic bloat, and also just see what's been happening with the U.S. government, if there are any plans for additional stake in this company or other semiconductor companies going forward, given the critical national security outlook for it.
And an interesting setup as we come in, Intel top of mind for everybody. You point out it's not even the strongest performer in the space, but a very important signal on demand and the AI trade coming after the close. So as we look on a more near-term chart and the more near-term setup as we're heading into this earnings report, what's it indicating to you?
Remember, too, that Intel was the laggard for quite a while, too, so now it's kind of perhaps the late bloomer that's getting the surge of growth, kind of just catching up to its peers at this point on a longer-term basis. Nevertheless, quite a strong move, even when we look at it on a more granular basis here. We've broken out to the upside from this upward sloping channel type shape between our two blue lines here. You could then draw an extremely steep, extremely narrow upward sloping channel in white here, which we are still trading above. We've broken out to the upside. We're still pretty close to those highs from yesterday, despite being down somewhat since the open. Really, the earnings could significantly rewrite this story depending on what we see. Our 5-day EMA in blue, our weekly exponential moving average, comes in near 51. So a very short-term boundary to consider. A longer-term one would be the 21 EMA, the monthly EMA, near about 45. RSI, our measure of momentum, still quite strong additionally here, suggesting that bullish momentum is not really slowing. RSI, in addition to being overbought, continues to make new relative highs even with yesterday's surge to the upside. So that is more what you would want to see if you were bullish in this name. Interesting, extremely high level of conviction heading into earnings, not typically what you would see. Finally, volume profile shows that our notable volume area that's closest to current price activity comes in here near about 48. Beyond that, though, further to the downside, these levels here and here near about 40 and 38 roughly. Very heavy trading recently to very many volume spikes in the past couple of weeks.
And as we look at the options activity in Intel ahead of its earnings today, Rick, are we seeing an increase in the action and is it leaning a certain way?
So the sizzle today, 1.44, so 1.44 times the 5-day moving average of options volume here. January 23rd, our weekly expiration that would capture earnings, looking for about 8.7% plus or minus move. So pretty large move for just this limited amount of time that we have still. About 870,000 options traded hands today, 53% or so were calls. The most active date in terms of open interest is actually June 18th, but we're focusing more on the nearer term months here. March and February are the next two in order of the open interest activity here. One notable trade, January 15th, 2027, calls, one trader sold about 4,500 of them for about a $3.4 million credit received here. So a pretty notable trade that stood out.
Rick, we appreciate you being with us for Options Corner. As always, that's Rick Ducat, our lead market technician here on the network. I do want to send it over to Sam, though, to hear about what we have coming up next in the show.
Well, Ali will check in on China after headlines from Alibaba this week about nuclear energy, that deal, and reports about potentially spinning off its AI chip unit to Market on Post. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Her name is Jenny Horn.
How's it going?
First day, so sometimes you know.
First day.
Try again. You could have done better.
Could have done a lot better on your first day. You always got to be
Same
impressed
goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible. It's where you go your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. That's Sam Bartis live from the floor of the New York Stock Exchange. Joining me now, very pleased to say, is Henry Green, Senior Investment Strategist over at Crane Shares. Thanks so much, Henry, for joining me. It's so nice to see you. Look, we've had a couple of headlines this week regarding individual names, household names that US investors like, Alibaba, Pinduoduo, but I do want to just strip it back because for a while there, the story for Chinese equities was we're waiting for the stimulus, we're waiting for the stimulus. Now, arguably, we're still waiting for the stimulus, but exports have been holding up enough to allow the Chinese authorities to say, okay, we can hold off for now, and then we've seen DeepSeek, we've seen Alibaba gaining 90% over the last 12 months, we've seen the Shanghai Stock Exchange hitting 10-year highs. What's going on right now?
Thank you for having me, Sam. Yes, I think that we're seeing in 2026 a continuation of the pretty strong bull market that we saw in 2025, continuing into the new year, which is great to see. I think there's still a lot of enthusiasm for these companies in China's internet sector, specifically those represented in our KWEB China Internet ETF, KWEB is the ticker. And we're continuing to be very constructive on these names. Alibaba's recent announcement that they would spin off, Baidu's recent announcement that they're going to spin off its Kunlun chip unit by 2027 really reinvigorated enthusiasm for the space. And Alibaba is rumored will be spinning off its own chip unit as well. And this is a new development for China Internet, and it really crystallizes that AI story within these China Internet names. And that is even more positive for investors.
Is, and it is a trend, as you point out. We've seen from the likes of Baidu, these reports around Alibaba doing the same with T-Head. I'm just wondering, for so long, and it still is the case very much now, the fact that these Chinese stocks are inexpensive relative to their US peers. Now that the bullish AI story has somewhat shifted to Asia, with obviously the Chinese trying to get ahead with its own AI ambitions. We've seen these rallies on the Shanghai Stock Exchange at 400, 700% on IPO debuts. What does this mean for valuations for these companies in that part of the world?
I think it's an interesting question. I think that these companies continue to be undervalued compared to their U.S. counterparts. And their management is looking at, well, how can we unlock shareholder value and cause investors to value us at more of a sum of the parts valuation, whether that would look better, or maybe just completely with separate entities. So in the case of a spinoff.
Oh,
so
dang,
really
Spy hit my support.
We did see when Alibaba split itself into 8 different business groups, investors mostly cheered that move. So I think that management...
Jimmy was at 688, 48,
the valuation
48, 48, 48, 48. And I said, just watch us dip on down to 687, 76, 76, 76, 76.
Have an IPO for their
and I called it triple bottom, remember?
As later this year or
say yes or no.
And that saw some really positive momentum for Baidu, and Baidu needed
it,
right? Alibaba
Tibbets,
has been doing
and a
quite
freebie.
well. They'd seen a significant rise in their own valuation, and Baidu just is not seeing the same kind of growth. And so they really needed some positivity there, and they need to really show investors.
There's a Discord room on Discord to talk stocks, and this guy talks dog talk.
And so
and he plays guitar.
More interest this year.
It's
a lot more interest in Baidu. Specifically, we actually have a 2x levered ETF KBDU. That's seen a lot of investors.
Denmark residents are boycotting American products.
So that's been a really positive move for the company.
Good.
Now, again, it's just a rumor.
You might live
Alibaba
longer.
spinoff is just a rumor. Still, I have a contact at the company who tells me
who needs Coca-Cola.
Comment on it yet, but it does. It is in line with what we're seeing happening in this space overall, which is not only them getting involved with AI, but getting involved in the actual hardware that's required for AI.
Hear that, folks?
Really exciting, and is different, I think.
Denmark residents are boycotting American products. Netflix, Coca-Cola could lose revenue from Trump's battle
some
of
of that shareholder value, as you
what,
say.
Greenland?
We spend a lot of time talking about Chinese
Trump's
tech
battle
companies, your Alibabas, your Baidus of the
Greenland.
world. I'm just
I got it
wondering,
right.
moving away from that, how are you and the folks over at CraneShares thinking right now about some of the EV companies? I mean, the BYDs, which have leapfrogged Tesla, the XPengs, which are sort of going full Tesla, as it's been described over here, with what it's doing in robotics, and contemporary Amperex, for instance, CATL, which is also, another popular one with foreign investors that's not always talked about, but is supplying the batteries to the Teslas of the world. How are you thinking about some of those companies right now?
Sure, Sam. So some of those companies, obviously there are a lot of them in China. I think that's number one. China has more EV companies than the United States, and probably more than Europe. So it's a highly competitive field. And we've seen this play out in very low margins for a lot of these businesses. So that's a challenge that they've been having to deal with. At the same time, of course, BYD continues to outpace Tesla in its global deliveries, and we've seen increased adoption.
We have less than 6 minutes left until the market closes. I hope everybody's had a fabulous day. I've had one red trade today.
Outside of the Americas, and so that's been really exciting for these players. They're seeing, again, I think it's a lot of top line growth there. Now they need to see who are going to be the key winners in this race, and who is going to be able to turn that top line growth into real profitability. Not to say that that these companies aren't profitable, but the profit growth has not followed with the revenue growth. And part of that is just because there's so much competition. There's also a lot of capacity. These companies, especially BYD, are just churning out vehicles very cheaply, and that's great. But it's created this situation where there's so much capacity, and it's really just led to there being less and less margins to be had. At the same time, it's angered trade partners like the United States and the European Union, who are accusing China of having its industrial firms, such as its electric vehicle makers, dumping products on their markets, right? And so we're seeing this change a little bit with policy as well. The so-called anti-involution policies that you've probably heard of China instituting, right, we're seeing those as being positive for this industry. We've seen more action taken in the solar panel industry. We'd like to see more happen with electric vehicles, but we think that those kind of policies can reduce trade anxiety from the EU specifically, and as well as help profit margins.
Yeah, and look, some of those companies in the solar business, Henry, had to go bust just for them to be able to shake some of those out of the tree. So that's been really interesting as well. Really appreciate your insights. Thanks so much for joining us today. Henry Green there from Crane Shares. Marley, I'll send things back over to you.
Thanks so much to Sam and Henry for that. We are nearing the end of our market session today. We'll bring in Kevin Green to break down the levels that he's watching on the S&P 500. We'll also have earnings from Intel and Capital One after the bell. That's next on Market on Close.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So mind your duty. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Invest Day, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock. And that could certainly be short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Back here at Market on Close, I'm Sam Barnes on the floor of the New York Stock Exchange alongside Molly Hayden in our Chicago headquarters. We've just got a few minutes left in today's session, so let's welcome in KG, Senior Markets Correspondent, to help close out the day. So the S&P 500 KG managing to hold on to level 6,900 there. The Dow's lost a little bit of altitude throughout the day. Don't know if that's got to do with the PCE or something technical at play here. Just talk us through your thoughts.
Yeah, we were seeing a little bit of weakness, but obviously a follow-through day from yesterday when we did recover from some of these losses from earlier this week regarding tariffs as well as Greenland. And I think today, if you're kind of looking at the constituency leading the market, this is actually very positive for the bulls, at least for now. You have consumer discretionary technology as well as
good earnings
kind of leading the way. Even the financial stocks, given the headlines that we've had this morning, are actually up on the session, up about 0.6%. So that's actually a really good construction of movement for the S&P 500. It looks like we are trying to close maybe right at the 20-day moving average. I think that's going to be key for us, at least for us to close above that average for this week. And if we're kind of looking at the close here, I'm looking at 69.10 as your potential penny risk area for this market. To the upside, 69.30 is really where we've seen a lot of the action over the last 2 hours, 2.5 hours or so. 6900, as you kind of talked about, Sam, has been able to hold. The 69.10 could be a little bit of a penny risk area. So I think overall it's a decent day. You'd like to see close above that 20-day. I think that would be my only criticism when it comes to this market. But at the end of the day, we have seen volatility crush, and that could be conducive for markets to buy.
That's fast. 5 minutes went by fast. Okay, well, Jimmy's going to get out of here. I got to go get ice melt before the big storm. So, we'll catch you later. I hate ice storms. I really do. I hate snow. I hate ice. If I had my choice, I'd be living on the beach every single day. And I will have my choice soon. So, catch you later.